is kept private and that this doesn't happen again. Again, he was put in a fairly flattering light in this article in that he had an effective tax rate of over 28%, which you compared to Bezos, Soros, and others was what's much lower. So his point is, I'm standing up for the Americans so this doesn't happen again. As to how it plays out in court and then how you prove this leak, how you find out the source. I mean, again, justice is trying to do this themselves, or at least they say they are. And we haven't gotten any updates. We don't know how far they've gotten, but they haven't said that there have been any charges or that justice has found anything about the leaks. It could have been a contractor. It could have been somebody that had a computer that was left on that somebody accessed.
Have we heard anything from the IRS about changing processes? And to the extent, for example, it seems crazy to me that somehow anybody could walk out of the building. I don't know about anybody, but somebody could walk out of the building, not just with 1 or 2 tax returns, but with hundreds, for example.
Yeah, and there are very strict rules about the people who can do that and the access that is allowed and the tracking system that makes sure that they know who had those tax returns and when they left. Janet Yellen has said publicly many times they take this very seriously. They're looking into any potential breaches to make sure they don't happen again. But again, we don't have the details of what those breaches might have been and what she's doing.
And they've never come out with a statement or anything saying, look, this is a problem and we're fixing it by doing X, Y, and Z. They're not even, we're not there yet.
Well, they have acknowledged a lack of funding and a lack of protections in the entire data and technology system, which they say they need funding to fix. So they recognize there's a problem, but they haven't identified this specific source of the leak.
Okay. Robert Frank, fascinating story this morning. Appreciate it.
So to come this morning, what the charts are saying about where this market could be headed. We have technician Katie Stockton joining us. A lot of that market move may be in response to what Fed Chair Jay Powell says this afternoon after the Fed decision. Let's take a look at the futures at this hour ahead of all of that. Things have been really flat. Right now, the Dow down by about 8 points, the NASDAQ off by 11, the S&P down by less than 4 points. Squawk Box will be right back.
little as 3 weeks.
Our next guest says the S&P 500 is at risk of a near-term downdraft. For more on what the charts are showing, let's bring in Katie Stockton, founder and managing partner at Fairlead Strategies, as well as a CNBC contributor. How'd you like that move yesterday? Did that look like an exhaustion to you when we were up about 900 points? We didn't hold. Is that like if we see that when the market's headed the other way and it goes down and people call it a capitulation and a good buying opportunity? Was yesterday a good selling opportunity?
Yeah, so the title of our morning note yesterday was Sell the News. It felt very extended to us. There was a gap higher at the open, and a gap higher following a relief rally tends to be exhaustive in nature. So we're looking at yesterday as a knee-jerk reaction. We also think there's probably similar action likely at some point today. We really have no edge, very short term, of course. But we suspect that this relief rally has essentially matured. Yesterday, we did receive a sell signal from one of our short-term counter trend gauges. That's specifically the DeMark indicators. We haven't seen a sell signal of that nature since December of 21. It's not a long-term signal. It just happens to be the first one that we've seen. And it suggests that we'll see at least a several-week retracement here. So we think risk is heightened. There might be some positive seasonal influences that help the market avoid that downdraft until perhaps January, but we do think that there's risk here.
You know, you've got Jay Powell. God knows what he's going to say. Are you ever surprised or shocked or bemused when you say something technically and then Powell could play right into your hands today if he was particularly hawkish? And it would almost be like the charts know how the fundamentals are going to play out before they even happen. And that happens all the time. I guess you just write it off to, I don't know, the intelligence of crowds or something.
Well, I mean, every decision is baked into prices, right? So it comes down to a buy or sell. So the market is currently reflecting all known information.
Yeah.
Market sentiment is obviously manifested in it. And we track the volatility behind the market as a way to gauge sentiment as well. And as you know, volatility had been contracting according to the VIX for several weeks. Unfortunately, that shows that perhaps there's a little bit of complacency out there. And I think we felt that yesterday morning. And we saw the VIX recently clear its 20-day moving average, really a very similar setup to what we had after the summertime relief rally. So that analog is still kind of holding there. And not to mention that 200-day moving average being essentially in line for the S&P 500, which also has resistance around 4,100 based on another one of our models. So it does face some real challenges here. We've seen some incremental improvement in momentum, but that momentum would deteriorate very quickly if we got some kind of retracement as indicated by that counter trend signal.
Should we be watching the 10-year or the 2-year?
Both.
I'm watching the 10-year coming into today, and it has seen a pretty significant correction alongside the dollar, in fact, and 3.5 is our support level. We have secondary support also around 3.25. So I think within that zone, we'll see this corrective phase mature. The momentum still is to the downside behind Treasury yields, and yet the long-term trend is higher. We suspect that that higher trend will lose some momentum, maybe become a bit more gradual, but we want to defer to it. The longer term gauges still do point higher behind yields. So we're assuming that this corrective phase, which is now intermediate term oversold based on our measures, will soon mature this month even and give way to another up move.
Bitcoin has had its own dynamic with all the news, obviously, with FTX and I don't know, the whole arena. Does that look ripe for profit taking to you as well? And what was the last one you said? 13.5 is the next possible stopping point if we are still in.
Here's what I found.
Right. Yeah. I don't know about profit.
That was not Katie Stockton. That was
Katie Stockton. That was Siri.
That was, oh my God. Go. What are you searching? Alternate EVs to buy right now? Go ahead, Katie.
Yeah, I mean, listen, I don't think there's any profit taking going on. I think it's just outright selling is more likely for Bitcoin folks that have been stuck in this bear market cycle. And I would say it's eerily coiled up considering how bad the news has gotten. It feels like we have this kind of drip of bad news out there and that there is additional downside risk.
Thanks, Katie. All right, put
Of
teeth.
course.
What'd you find?
No, the iPad had frozen, so I was trying to get it restarted, and usually the volume's off, and then it went on, and I guess I was pressing the button.
What did Siri say?
looking oneself in the mirror on that.
Jeremy, we want it's a longer conversation. We hope to continue to have it with you, and we look forward to talking to you again very, very soon. Meantime, make sure you join us tomorrow. Squawk on the Street begins right now.
Good morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer and David Faber, live at Post 9 of the New York Stock Exchange. And now we wait, future steady, as we count down to the Fed decision and press conference this afternoon. Plenty to watch in the meantime as Delta raises guidance and we track the continued collapse of FTX. Our roadmap begins with decision day for the Fed. Many investors hoping for the beginning of some slower rate hikes.
Plus, Tesla shares extend what have been significant losses recently. Goldman Sachs cut its price target on the stock as investors continue to express concerns about Elon Musk's focus on Twitter. And it's another day on Capitol Hill. We'll have more hearings on FTX after its new CEO told lawyers yesterday that the company engaged in old-fashioned embezzlement under Sam Bankman-Fried.
As we said, futures are muted this morning as investors await the Fed's latest interest rate hike decision in its effort to crush inflation. Federal Reserve Chairman Jay Powell will speak at 2:30 Eastern, giving further clues about the road ahead for 2023. Jim, one topic of discussion today is duration of how long they hold.
Well, look, I think you can do that. I think that one of the things that's going to happen is tomorrow we're going to come in and we're going to say, what now? And it's like, well, nothing. We're okay. I mean, maybe he says something that is harsher about wages. I think you do that. But this is it between now and the holidays. And David, you know, if there's nothing to trade off of other than the attire of Sam Bankman-Fried. I mean, we don't have any. You know, this is the last day that we have something of any significance.
Yeah, news will be harder to come by.
That's it.
In these next couple of weeks.
Well, are you saying never short a dull market?
I'm going to say that unless we've got someone who comes on air and says they know something that we didn't know, you might be doing okay here. I mean, we don't have any. If nothing's said, this market has a benign feel to it, especially because like we are starting to see even the enterprise software, which I regard as the Achilles heel. Some say Achilles, that's wrong. The Achilles heel of this market has been the enterprise software, which all the guys love. I mean, I was reading Sequoia the other night. Hey, interesting bio, Sam Bankman-Fried there. Yeah, I can send you the link.
Right. But so you weren't discouraged by the failure to punch through 41.
No, I hated that because apparently, oh, by the way, there's people who say that they would have the number ahead of time. The CPI is not the issue. The PPI is not the issue. It's what's keeping the CPI up.
Yeah,
Which
but
is what I'm talking.
Really interrupting somebody while they're talking on our show. Let me think about that for a second. Okay. We were up 3% yesterday and we ended up barely.
Well,
what kind of price? The price action yesterday doesn't say something to you that perhaps is.
Yeah, there's really stupid people who pay up. They look at the S&P. They don't realize that 2/3 of the S&P is actually not positive based on that number. But they don't care because it's the S&P. They think that they're, powerhouses, masters of the universe.
Was it just algorithmic trading?
No, it's really
on?
stupid people too.
So listen, really stupid
listen
people.
To me. Have you in your life not met really? You were a Jeopardy host.
Yes.
Were there not, other than Matt from New Haven, were there not people who you marvel at how stupid they were? They may be the futures traders. I mean, David probably saw 100 people who were stupid as plywood.
Jim, we were moving up nicely for the first hour and a half. You're just saying that was a result of stupid people?
Well, because you try to look at the stocks in the S&P that were up, and you don't have a story for them being up.
Okay.
I mean, healthcare was weaker yesterday other than Moderna.
Let me take a look. I mentioned it in part because does it give us a roadmap at all for today's trading with the Fed?
Well, some clown may jump again because there's just people who want to do it. I think that you know what? Okay, so let's run the tape back, Bullwinkle. The 2:00 statement last time. It's really, he's going to be a dove. I mean, what is that? They got the bird completely wrong.
Yep.
Ornithologist. I mean, he was like a red-tailed hawk, the ones that could see mice from like miles away. He wasn't just a hawk. But, people read the 2:00. And they made a judgment.
And then the press conference happened and things reversed entirely.
Right.
Yeah.
I mean, sometimes when you're with your kids and their judgment's poor, and you have to correct their judgment. Okay. Well, that's like the people too. They're children.
It's a good piece of advice as we wait today.
Well, I just think we put too much weight on people who make moves, who don't know what they're doing. I mean, the S&P 500, which is made up, by the way, of 500 stocks. The S&P 500 has a lot of stocks in it that do poorly if there's a pullback in inflation. All the enterprise software companies, they need inflation. I mean, some of them were rescued yesterday because the unstoppable MongoDB, which is back today by a Datadog upgrade.
Yes.
So it's just time to recommend stuff that we all hate. But I'm just, you know what I'm saying? That the S&P, it should not, it's too hard to buy a future based on a CPI number. When many of the companies don't do well in a lower CPI environment.
Right.
They need price increases.
That said, Jim, for the longer term, the chorus that I continue to hear from asset allocators, and particularly the hedge fund guys that
Oh, shucks. Wage pressure. Look, I don't think he's going to say anything soft today. That doesn't help him.
Right.
But I just think that we have to be, wages are everything. So ask every CEO that comes on, can you still not find people? And when you have a guy who has, I mean, look, it's not like when you work at Taco Bell. It's like it's not Google. But wait till Google, someone said today Google doesn't have to rationalize. And they're not going to rationalize their table employment. That's a great setup for a 10% move in Google tomorrow. When Google does it, these places have too many people.
PTR has already been playing. We got to get 20% more efficient.
I know. Yeah. I know. Hey, by the way, if you fire everyone at Twitter, is it better? If everyone goes, stop paying rent, stop doing everything.
Well, I mean, we'll know the answer.
Well, but think about it. If nobody works there, to continues to work
on the building,
but if nobody works there and continues to work, isn't Musk right?
Well, the Musk, and we're going to talk about Tesla in a moment, but the Musk experiment at Twitter is being watched closely because, Jim, there is an argument that if he's successful in terms of cutting that many people, what does it say for every other software company? And by the way, Twitter has more needs that are outside of the typical software company, so to speak, because of trust and safety, because of so many other things. But if he's successful in that, does that say that your friend, Mr. Benioff, should be cutting half his staff at CRM?
I don't think half, but I think that there's probably too many people. I mean, Twitter is maybe a one-off thing, and that the people he's firing, many of them. Oh, by the way, some of the people he's firing, people he brought in. I go as far to say that he's demonstrating some erratic behavior.
Well, it's one reason for this chorus of investors in Tesla this morning expressing some frustration with Musk's role at Twitter growing louder. Gary Black, managing partner of the Future Fund, owns roughly $50 million worth of Tesla, tweets Monday, there is no Tesla CEO today. He followed up with, I have the utmost respect for Elon Musk as a manager, leader, and visionary. Just wish he'd hire someone to fix Twitter and focus on Tesla as CEO. Musk trying to address those concerns, tweeting Tesla will be great long-term, but doesn't control macroeconomic tides. Later adding, I will make sure Tesla shareholders benefit from Twitter long-term. Tesla stock down, actually the drawdown, Jim, almost 61%. That's going to be the biggest in history.
I know, and Gary Black is a very serious manager, and he was always a very serious analyst. So, I mean, he's not a guy, David, he's not what I would call a Yahoo.
No, not at all.
He's really
not at all.
So
And his concerns are obviously echoed by many others. Listen, I mean, you can make an argument that both the Tesla and SpaceX, there's a product roadmap that they're on, and that whether Elon is in the building or not is not going to impact the plan that they have. At the same time, we've talked a great deal about the distraction this is introducing. But guys, I also wonder about whether he's ostracizing certain potential Tesla customers with his continued tweets and statements coming, why would you try to ostracize any of your potential customers?
About Twitter. I mean, there are people who wanted to put ads with Twitter who are now like thinking, geez, I don't know. I mean, maybe this is not a good idea. Look, I was speaking with someone late last night who just said, why aren't you more focused on the crumbling aspects of this man? And I said, because I've had too much faith in him, but maybe it's too late to be as faithful.
Well, today Morgan Stanley says the brakes are screeching on EV demand, and Jonas revises down his long-term EV penetration forecast for fiscal year 30. At the same time, Jim, he does make Tesla a top pick for next year because, in his words, they're the only company able to sell EVs at ICE-like margins.
Well, look, can we just get Farley on the phone, please? Because Farley would tell you that's totally untrue. Now, Adam Jonas has erratic, no, thematic. But the idea that you can say this and Farley can call right now and tell you this is completely untrue is bothersome to me.
Right. Ford just added a third shift as of yesterday on their F-150.
Motor Trend car.
Truck of the year.
I mean, but when you speak to, over and over again, Jim has said, we're making a lot of money per everything we make. Now, why is that ignored by Mr. I had a sell on Ford the whole time, Jonas? Now, it did go up to 23, and he reiterated sell at every step, and he went hold. But I just think that it's unfair.
It also goes to the larger argument that there is more competition. That competition is building every day, and that's going to make the world a bit of a different place for Tesla.
The number of cars and trucks that Farley's talking about building. I mean, 500,000. Mary Barr.
All right. That said, I mean, we got Goldman Sachs, which is lowering its estimates in terms of how many vehicle deliveries Tesla will have. 420,000 in the fourth quarter. 440,000 had been the prior
estimate. They lowered one of your old favorites.
And 1.85 million units in 2023 from 1.95.
Right. I know that's more, but you see
Hey, everybody.
Yeah, they were at 305. They go to 235. Right. Is it a new PE-based target? I wasn't clear.
No, but one of David's absolute favorites just gets savaged in that report. Quantum Skate, 8 to 5. You put him on the map and then you took him off the map.
We had an interview with him 2.5 years ago. I think you
and you took
was back when we were 40 feet away from each other in the headquarters in Englewood.
We were trying to give each other COVID. They wouldn't let us.
But I do one interview with the guy, and he's my guy forever.
Oh, you should die.
That's it.
You should die. Yeah. And I got to tell you, that 8 to 5. I remember I was on a fireside chat with Jonas, and I think he really had a fire behind him. And he had Jagdeep Singh
from Quantum.
And it was one of those where you just said, I think this is going to be huge and terrible. Jonas does that kind of stuff. I mean, what do you think Taylor Swift does? Jonas Swift. You tweeted that. Was
Which
her
one?
birthday yesterday?
What?
Lincoln, what's her name? Swift.
Taylor Swift, the singer?
Lincoln Swift. I'm talking about people who have no enemies.
Taylor Swift
Taylor
do
Swift
no
has
wrong.
no enemy. She has no enemy. No natural enemy. She's like, I don't know.
She's like the deer.
Yep.
Now
No, you
need the wolves. Well, yeah, during hunting season.
A birthday girl yesterday.
But can you she is, it means she would be a strong buy by every single firm. Every
And
firm
your
ever
point
sold.
is, I'm sorry, I lost the track here.
I had no track.
There's no
did right.
track. There is
Just
no
wanted to
track.
make sure. Every so often, I like to make sure everybody understands that he has
There
no
is
idea
no-
where he is either.
When we return, Senate banking this time preparing to dig into the collapse of FTX on Capitol Hill. We'll get into that, obviously, after a lot of news yesterday. Futures in a range this morning as we await the presser and the statement later this afternoon. Don't go away.
Range. Oh God, that's good. Hey everybody. Hey everybody. Good morning. My name is Sandra. You all already know, but just for the replay. My name is Sandra and welcome to my channel From Lack to Legacy. If this is your first time here, welcome. If you have been here before, welcome back. On this channel, we're all things money, mindset, investment, abundance, sisterhood, brotherhood, love, sharing, learning. And that's about the truth. So if you're in the house, welcome, 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 y'all. Of course, you know what I have. I got peppermint tea, and McCormick makes, like y'all want to know, McCormick makes this tea. I'm telling y'all anyway. It's I don't know. It's an antiviral tea or something. I don't know, but it's got eucalyptus in it and something else. But I tell you, it makes the most yummy in the morning. So usually, I'm up really early. But Marilyn and I were up this morning together, y'all, about 3 o'clock. I was testing this setup because yesterday I couldn't get it straight. And I was trying to make sure that I had everything set up. So at least I know I have another insomniac sister in the house. So Marilyn and I were chatting this morning. I don't know what time it was. It was ungodly. So if I'm a little groggy this morning, that's what it is, because I did go back to sleep. Yep. We just had a little girl chat. So yeah, I just woke up a few minutes ago. I can't even pretend. So I got to go prep these orders because I want to be ready just in case something jumps off. But just for the record, you all, I need to be paper trading. I'm paper trading with you guys. We all should be on paper trading. Yes.
Yesterday, FTX's new CEO John Ray testified before.
So the announcement's going to happen today, I think at 2:30 Eastern. So maybe the morning will be quiet. Who knows? I don't know. But let me go prep these orders real quick. So you all, I'm going to move this screen down because I'm getting ready to go into my account and prep these orders. So you'll just see me.
To keep transactions off balance sheets. This is really old-fashioned embezzlement. This is just taking money from customers and using it for your own purpose. Not sophisticated at all. Sophisticated perhaps in the way they were able to sort of hide it from people, frankly, right in front of their eyes.
Meantime, Bankman-Fried denied bail as a flight risk, Jim, and remanded to jail until February.
No, this is their approach to this. I think we all have to admit with some real seriousness. That gentleman was just fantastic. I thought he was great because when you say that it's just embezzlement, it's right in front. What that says is, look out. There could be others that are like that.
Yeah. I agree with you. Listening to Mr. Ray yesterday, it was surprising actually how compelling it was. And I think I'm not alone in thinking these well-known venture capital firms or firms that made investments in FTX, significant equity investments, what were they doing in terms of, there was no, you have an investment committee, nobody asked for any form of credibility in terms of, all right, can we see some numbers, pieces of paper? Can we, where was the due diligence for a firm that was using QuickBooks and Slack as its form of accounting for financial?
I understand that. I found that at my 18 table bar, QuickBooks was often inadequate because it didn't, you got to get the correct numbers. So I get that it might not have been good for a $34 billion outfit. But I have to tell you, David, if you go back and read the Sequoia piece, and I happen to like Sequoia.
Yes. One of the investors.
It does make you sound like it's no longer on this. I'll send you the link if you'd like. But I wanted to invest with him after I read it. I mean, because it's just, he was the brightest star on the horizon.
It just makes you wonder what level, if any, due diligence, given what Mr. Ray was saying about the internal controls of the company, what was being asked by these VC? Nothing. I think nothing.
You were lucky to get in, David.
Fair.
It was
fear of missing it. You were lucky. It was, and it just makes you wonder how much just a 0% interest rates, cheap money, beta and momentum was all this was about for that 2 years, 3 years.
That's all it was. It's just all part and parcel of the roaring 20s. But when I read Sequoia, I said, geez, I'd like to, maybe I can still give money to this guy. Maybe it's not too late. That's how great it sounded.
Did they have an investment committee meeting and say, all right, what do the financials look like? Do we have any audited financials?
He worked at Jane Street, David. It was the best there was. There was nothing. It's like getting the guy from Oxford who was top of his class, Jane Street. You don't ask questions. You just give it to him.
Just give him the money.
No, this is what happened. I'm not, people are like think I'm joking around. No,
it's great. Give him the money.
Talk about the lack of controls all day long.
Yeah. See that guy's shorts? Give him the money. He's got to be a genius.
QuickBooks.
Look at those shorts.
QuickBooks is better than by hand. I found that.
We'll get the opening bell here in about 8 minutes. Take a look at futures here. 10-year 351, and the dollar still hovering close to a 6-month low. Don't go away.
Well, coming up, we're going to have Jim's Mad Dash, of course. We'll count you down to an opening bell that is about 5.5 minutes away. We're back in 2.
But Maryland, Maryland, I've been thinking about this all day since yesterday. Maryland was, I think, the only one that was watching the money tick away yesterday, Maryland. Yesterday, you guys, right before the market, we got about 3 minutes before the opening bell. Good morning, everybody. Good morning, Miss Vice. Good morning, Chloe. I think I said good morning to everybody. Good morning, Tara. Hey, sis. Good morning, Elle. Just scrolling back to see who is here. Hey, everybody. It's like taking roll. Good morning, Kathy. Kathy's my internet idol. I used to follow Kathy, watch Kathy's videos. You all go check out Kathy. Kathy has a YouTube page too, and it's Wellside Retreats. Kathy does beautiful retreats. Kathy was the first person that I heard really just kind of advocate for journaling. And so I'm starting to journal. See, I got cool friends. But yesterday, you guys, I was talking to Tracy, and you all know Tracy Collins from Exodus Summit too. She has Healthy Black Girl podcast. So I was doing she and I were doing an interview, a Zoom call, and the money was just ticking away. I was like, Tracy, I gotta go. Money is over here ticking away, girl. She was like, no. We'll leave it in. I said, girl, edit that out. Money is ticking away. Maryland, I think Maryland saw it. I was like, but luckily, y'all, those 3 little puts did what they did. They did what they came to do. And all was well, but you don't take your eye off the money. So anyway, we're all set up for today. What was I supposed to do? We got 2 minutes. They're about to start.
All right,
so
let's get a mad dash. And then, of course, we'll have an opening bell a little more than 2 minutes from now. Caterpillar's a name you enjoy talking about.
Very much so.
go,
By the way,
y'all.
Allison Transmissions will
Anybody
ring the
paper
bell. That's
train
one that's
today?
going to be mentioned in a second when I talk to you. I mentioned you earlier that I'm not as bearish 2023. And one of the reasons is because, and this is a nice piece named Morgan Stanley, 2023 outlook, don't discount industrial resiliency. And I'm looking at Caterpillar. I'm looking at that chart. This is when Jim Umpleby came in and decided he's going to change the strategy. He's going to return money to shareholders, not unlike what the oil companies have done. And look at this. This is a company that you short at your own peril. This is a company that typically in a recession, you just put it out there every 2 points, you sell 100,000 shares. No, not this time. And I think this piece, which raises price target, but much too negative. I mean, 174 goes to 190. I mean, it's 235. This is the industrial renaissance that we've been waiting, aided by the fact that President Biden has put through money that anybody can get some, like a plug power. Even. There's no.
Well, the infrastructure bill would seem to be helpful.
Right.
And then.
Right. And then the IRA.
The IRA as well.
Which we're just going to reduce the debt substantially. Oh, sorry. It's really a climate control bill. But I think the Caterpillar is so undervalued here. And this piece confirms
no
that
clue
the
what
analysts
today
are going to have
holds,
to
so
play catch up with one of
I'm
the
just gonna
great
send him out of my
industrials of
business
the
today.
world. And don't forget, by the way, all this money, this infrastructure money, ain't going to Komatsu. It's not.
No.
You're not going to see Komatsu on the back of those earth movers.
Made in America.
Made in America. And so I think Caterpillar's principal beneficiary, and people are ignoring it, and they're ignoring right in this plain as the nose in your face, whatever you said, the investment comment. I think this is it. And I think Uncle B's going to be a hero. A hero.
Let's get to the opening bell here this morning in the CNBC Real-Time Exchange. At the big board, it is Allison Transmission celebrating its 10th listing anniversary. And at the NASDAQ, Precision Optics, maker of advanced optical instruments. So, Jim, we can go plenty of places this morning.
Allison's a good example. I mean, Allison Transmission, they have a giant plant in Mexico near me 24/7. I mean, these guys have more business, and no one talks about them because they all want to talk about Datadog and Viva, and they want to talk about media, this stuff. Everybody wants to talk about enterprise software. Real companies. 2023 is going to be the year of real companies that make things, not enterprise software, not companies that analyze data and then analyze it again, then send it to Snowflake for more analysis.
Jim's referring to this Oppenheimer upgrade of Datadog. They go to outperform, target 105. You don't like the call?
No, I just don't like the group. The group is just, it's so tired out. Unless you're making the big pivot, unless you're doing the pivot. I mean, Mongo did do the pivot, but unless you're doing the pivot, which says, you know what? And this was started by, this really was started by Palo Alto, by Nikesh Arora. He said, you know what? We're going to give people growth, but we're also going to make money. And if you are not in that camp, MongoDB is, then I can't like you because you're just going to fall apart on me. And by the way, fintech, David, fintech, kiss of death, fintech.
I like CNBC,
fintech,
but I am not a
buy
fan
now,
of
pay later
Cramer.
also.
Yeah, buy now, pay later. There's an idea. Remember, like Jamie Dimon, who I love. Remember Jamie Dimon talking about how they have buy now, pay later. See, they've had that for since JP Morgan. Now, Affirm is a company that uses Upstart. I know
Upstart.
It's
Son, I have a good name
I'm
for it.
watching
Klarna.
today, you all.
You're
I
gonna
don't
love
know.
it.
Because the truth is,
Stripe.
I'll be back to paper trading.
How about Square? People like Square.
So
Now, why?
but today
Why?
was like, who could pass up today?
Why like Square? I mean,
Look at that big old green
I think they also
candle.
put
You know
up
that's
pieces and
crazy.
say, this stock is not liked right now, but we'll come back later when it's liked. I mean, how about that?
How about that? I got to get to an evolving story in the market in terms of at least the
Argentina
price loss.
Lord.
No, Charter Communications, and an impact on our parent company, Comcast.
I knew you were going to go there.
Comcast, man, we're just starting to get a little momentum.
There's been a couple bullish
And then-
calls this week.
I know,
What
but
a buzzkill.
Carl, as you know, Charter held an analyst meeting. It's first with its
Anybody
new
training
CEO,
today?
Chris Winfrey. He's only been in the job as the president and CEO for a couple of weeks, taking over,
I
of
bet
course,
you've already met him for
for
lunch.
Tom Rutledge. I have not yet met Mr. Winfrey.
Sorry,
Tom
paper
Rutledge, after
trading
that
for
story,
it.
career
Yep, calls
stepping
and
down.
puts. That's the best way.
He had an analyst
Watch
meeting
what
yesterday
happens.
at Charter. Take a look at the stock. You see what it's doing at Comcast.
Take
because
good
it
notes,
does seem to simply
Tara.
be related to that. But Charter's getting crushed. Why? Well, they're going to spend a lot more in CapEx than had been anticipated. Got kind of mixed
I don't know. I'm going to see what's
reactions
happening
from
on
the
the
analyst
one.
community. Let me share Goldman Sachs,
My obsession.
because they may give you a sense at least as to why there's such a negative reaction.
Wow.
Charter's CapEx over the next few years, 2023 to 2025, may nonetheless, they say, be higher than investors had expected, driven by increased investment in footprint expansion. I'm reading here from something we had prepared, but unfortunately doesn't seem to be appearing.
What do you mean?
Meaning that I had this written out so that our viewers could follow along with us,
All right.
but they're not. Okay.
No, but because this is really
He went on to say, thank you. Okay. I'm at the bottom here. Charter having only CapEx guidance for 22 and 23.
Hey,
Investors may remain
Tracy.
uncertain
Good morning.
as to how
Good
much
morning.
CapEx to model
I had a
for
great time yesterday
2024
talking
and
to my
25, and
sister.
therefore lack clarity on the medium-term
You know
outlook
how
for
it is when
buybacks,
you reconnect with
free
a
cash
friend
flow a share,
and
per
it's like
share.
no time has passed at
Listen,
all.
yesterday,
And you all just pick
CEO,
up. And you could talk
Winfrey
about
basically
anything
said,
all day and nothing at
we're
all.
going to change and
That's
pivot our
what it was like
strategy to a certain
yesterday.
extent
It's like
from
talking to a
home
friend.
video broadband, selling that to connectivity, broadband, and
Welcome,
wireless.
Tracy.
Charter has
We're just
become a
watching all
major
this big
player in
money. You all
wireless.
see these big old green
But that's
candles.
going to cost more money. It's going to require higher capital investment.
But those wicks,
So they invest
Wix
incrementally in
always,
3
you
areas:
know,
network evolution,
that's
network
not what you want to
expansion,
see.
and go-to-market
You want
customer
to see big old
experience
strong
systems.
body candles.
And it's more than people
So
had
we'll see.
anticipated. So you're getting a
But didn't
very
that thing get to
mixed reviews
oversold
from the
real
analysts,
quick?
Jim, but
Take us,
negative
take
reviews
us down.
from
And
investors
how many
who had
theme
not.
parks does Charter have? I
Oh,
haven't been there.
Lord.
Charter has no theme parks.
Harry Potter.
They are purely a connectivity.
Anybody
company.
in this
Stock had
morning?
been
Lord
creeping
knows I
up
wouldn't
lately,
go
along with
in.
our own parent company, Comcast, which actually had been doing quite well. Carl had mentioned a
No,
couple
no,
of
ma'am.
positive
No,
comments,
ma'am,
but
Pam.
it's getting carried down today. The only news I see is Charter, so I don't believe it's Comcast specific.
That Comcast has so much more going for it, but that wireless, the wireless.
But everybody
coming
else
back
is
to
looking
the
pretty
wireless,
good.
and it's hard to get around.
You all can only see part
So that
of
ramp-
the
that
watch
ramped,
list, but Microsoft is up, Meta's up, Amazon, Google, Apple, Broadview. I believe that's the, oh, it's Broadcom. That's the 10th holding. PepsiCo. Everybody is up except for NVIDIA, Costco, and Tesla. Did anybody catch how Tesla hit the ground yesterday? I'm going to peek at Tesla just for kicks.
One of the key arguments for
Yeah.
Comcast has been that
I don't know.
because it is
Tesla's been having a
unlevered, at least
rough
versus
go of
many
it.
peers, that there is an opportunity to buy back more stock.
But if
Mr.
Tesla
Roberts,
sneezes,
Brian Roberts doesn't pursue some sort of
QQQ has to wipe her nose.
And what would Lena
Because
Khan
Tesla's
allow
one of the
potential
biggest
deal ahead of the
holdings
FTC?
in
I find
QQQ.
that,
But would you all
and
look at
she
this
might
crazy
project,
mess? Oh my
you know, a
lambs.
merger with Dole Pineapple. I mean, there,
369.
honestly, I mean, you know, Comcast gets together with Kansas City Southern, blocked by her, and they go to. I'm being facetious, but let me just say that
Crazy.
everybody's in a box.
I know, and I don't
who has
have time
capital
for it. I
that
don't
wants to
have the,
buy.
you know,
And the box is that they're
no.
going to shoot down.
I don't have the nerves for the crazy. Anytime I see wicks like those, you all, it just tells me just sit down. That's not my play. That's not my play.
You never know.
Well, yeah, because you have 19 in 2020.
And I have had my share jumping in at the bell. Oh, the stories I could tell. So I don't jump in at the bell. I don't care what's going on. It could be fire engine red bleeding all over the page. I don't want any. I'll wait.
Only thinking 24 months
I mean,
ahead.
you know, I have this investment meeting tomorrow and with Jeff Marks, and we often think we like to think of ourselves as
If
6 to
this
12
keeps
months.
going on,
The
I
really
won't
big
get
thinkers
in, but
are
I'm
thinking
happy
out
for the people who got
years.
in.
Masa.
I'm gonna check
That's
my
going real well
Discord
for
group.
him.
Does anybody know
Yeah, that's
a good
short-term
Discord
wealth.
group?
Masa.
I'm just
Short-term we'll all be
asking.
dead, long-term
If
we're
you
fine.
know one, could
We
you
all
drop
gotta
it in the
have-
chat?
Why
Because
do I
there's
think
so
some of the
many.
Redstone saying the most
But
unbelievable
I would be
ever?
interested
Jim's
in a
Works
really
book.
strong
Well, it's
Discord
not
group.
available to anybody other than you, so I have
Talks
not
about-
read Jim
He talks
Stewart's
about his
book
poor
yet.
behavior and his question.
Did you, Marilyn? I'm telling you all. Look, YouTube is university. It's like junior college.
I really like you, and I will
I'm
be
out
there.
there. You just gotta find it. It's a lot to sift through, so I try to sift through. You know, because I got a lot of time on my hands. Me and Marilyn. Marilyn is my 3 a.m. chat buddy. So, you know, when I'm up, I can watch some things. But let me tell you all what I watched yesterday that was useless. I watched, okay, it wasn't useless, but I watched TD Ameritrade's video that I showed y'all yesterday about the Analyze tab. I know no more. I know how to get to it. That was like above my pay grade. Like, okay, I'm gonna have to come at this another angle because there's definitely some room for analyzing your trade, you know, before you execute. So I have my trades loaded up for today. I got 3 calls, 3 puts. But who knows? I think I'm gonna wait for the grand finale. I'm gonna wait till Jerome Powell sing the sizzle song because there will definitely, I think, be a response behind that. So
I'm thrilled to say, while 22 was a crazy year,
while this looks
that we hit our
crazy
first
to
year
me,
targets. Our profitability
and if
targets
anybody
back, so we had
doesn't
a
know
plan
what
on
they're
that.
looking at,
Our
that is
cash
a
flow
whole heap
targets,
of cash
we
right
will be the
there.
most profitable airline in the
Anybody who
industry,
had
$2.6 billion of
calls
profit this year,
is so
and
happy.
we're going to be doubling
Where are
next
we?
year our EPS that we earned
289,
this year into next year, which is already
56.
in
It
accordance with
shot
plan.
up
So we have a very healthy outlook.
more than $1 in 3, 6, 9, 12 minutes. That's a lot of momentum, and that's a lot of upside. But too volatile for me. Too volatile for me.
Well, I mean, I've never really been a big fan of the airlines, in part because of like what happened in the pandemic. But I am a big fan of Bastian. He's the man.
No, I don't trust QQQ like that.
Well, you've been talking a lot about.
But I will go over here to
companies
Market Watch
where headwinds, in this case, oil prices,
and
turn
look at
into
Market
tailwinds, at least
Watch.
from a
Let's go
margin
to all
perspective.
public
This is a great
companies.
example of why I'm bullish on 2023. Here you have a terrific executive.
Let's go to
Everything's
the
going his way.
indices.
No,
I
it
always
was a
like to look
downgrade
at the
of Barrett,
indices
when
since
people question
I'm
travel.
trading
But I
QQQ,
just think that you had
and
that
QQQ
plane order
follows
yesterday
the
from United.
NASDAQ.
100
So I always
planes.
like to,
You have
just
Bastian
peek and
saying
see.
good things. There is a
Just another
consumer
piece of
who is
information.
not, now, I don't know if the
So you
consumer
can
has a
find
chance
that
to
under the
walk
Market
through
Watch
before a
tab.
that's up, but I don't think
And
so.
then if you go to
I'm saying there's health.
visualize,
There's
you
health
can
in an industry
watch,
that does
you
matter.
can get
There's
the heat
health
map.
on the rails.
And you
The
can do it
rails are
by
doing
your
well.
watch
Not a
list,
lot of health yet in
all
FedEx
public
and UPS.
companies.
That could be related
And
to
then this is personal stuff.
How the
So these
holidays
are
are
from my
going. Well,
watch
how are the
list.
holidays going? We haven't
So
really.
I usually look
You
at the
don't really
indices
hear a
again
lot
because
about
I trade
it's very been
QQQ and
robust.
QQQ
Yeah,
follows
no,
the
it's
NASDAQ. So let's get back
all
over
right.
and
Does
see.
that
See,
point
this is
to
why
the
I
strength
don't
or
go in
lack
for
thereof of
those.
the consumer right now?
Generally, and I've
People
seen
are
this
concerned
enough
about it.
times
Every
that
time you turn
it's just
TV
not worth it.
there's
A
some
big old
decision
red
about hunker down,
candle will
there's a
come
recession.
in,
I mean, most of the people
and
I
then
talk
you
to
can't get in
believe
and
they
out
should hunker down.
fast
There's a
enough.
recession.
So
They're saving
I
more.
just
They're
generally
spending
stay out
less.
of morning
They're
and
not
shop
taking the vacations you thought they'd be taking.
because it
They're
just makes
doing
sense.
things that are more conservative.
I know
That's
somebody
why
has
I
heard me
always
say
that's
this.
why
I've
I
said this
love
before.
Brian
I
and
heard
my
somebody say
interview with
this,
Sarah,
that the
because
morning
Brian was just
can
saying,
be
okay,
like
it is
hard
business
penny
as usual.
times. Why
But
wait,
other
why
people, I
jump
think, have
for
frightened
pennies
us
when we can wait
and
for the
frightened
easy
us to the point
dollars later in the day?
where we're not
Because
taking the
something's going to
vacations
happen.
we thought we
So
were going to take.
we'll be here to
And we're
see it.
not spending. And it's another way. It's an
And if you
Etsy
can't
Christmas,
stay for the
Hanukkah,
whole
Etsy.
Remember, Chuck Robbins,
live,
I think, was one of the
catch us
earliest
in
to
the
say
replay.
we're in danger
We're
of
here.
talking
We
ourselves
live on in
into
I think
YouTube
Chuck
land
is
for
every
perpetuity,
week
I'm
Chuck
sure.
was out to dinner with Chuck.
So
And I
I
didn't
like
order
it.
the
People
appetizer.
pop in and out. If you got a meeting, feel
Is that what you
free.
do for the
We will
coming
be here
recession? You
holding it
cut back
down. You
on
can
that?
always run the chat back. That chat from yesterday
And these wines.
was
If
jam
there's just
packed with all
1858
kind of
by the
gems.
son of Camus
Oh,
for $30.
somebody needs to type up that
You wouldn't be
chat
able to tell the difference. And that's what I'm
because
doing. I'm not buying the 60
C-Bard
bottle. I'm buying the
gave
30.
me information,
There's
and
nothing
y'all,
that
I'm
pushes
still
down the
working
difference.
on
Will you send me the name of that? I'd like to.
putting, closing that closing order, that OCO. I'm still working on it.
Total Wine.
I don't know. It's my
$1.5 billion
brain.
company. But I'm not kidding. I think that when you hear, I don't want to pick too much on Jamie Dimon.
I'm gonna peek over at Ford
But,
because my
you
girl
hear
Tara
people
trades
immediately
Ford.
pick up on it.
Ford.
And you were on this last week. I mean, it's not just Jamie. It's David
Ford
Solomon,
is an
Jeff
easy
Bezos,
way.
Jeff Bezos.
Listen,
Yeah.
how many did David Solomon lay off today? Today's not a,
Jesus,
today's
man.
the day of the seventh day rest.
Right.
No,
But I
David, these
like
people
this. It's
scare
like
you.
textbook. If you're looking
And
at candlesticks
Again, we
and
come
looking
back
at
to it. They're
volume
seeing data
and
sets
looking
that
at
they're
your
not just out.
MACD,
You
this is
really
so
think that they're
clean.
doing it
You know,
purposefully
this
to
little
scare
stair-step
people?
pattern, so
What I'm saying
clean.
is they think that
You
the
know,
money's run
real
out
big
on the
candle, strong
pandemic.
green, all in the same
There's
direction.
finally a
Then you
notion
look
that
down
credit
at
card
your
debit
volume,
that's going up,
tall, green,
that they're
bright,
looking
you
at
know,
mortgages and
all that
realizing
is
that people
so,
can't
you know,
really-
but
I
you
know
want to
there's an
see
upgrade to a bunch of houses going
7
up,
of
but
these in a
people
row.
can't afford the new homes.
And you can
And they're saying,
see,
listen,
I mean, the only
it's not
thing
as
here, your
halcyon
RSI is
crime, Jim.
oversold.
Like I'll say, I see
And you
good
can
things.
tell
And
it hits
they
that
almost always
70
try to talk me out of
mark,
saying good
and my
things.
thing
You're
lights
right
up
about
red.
Barclays.
So just a little
Lennard's overweight.
oversold,
They go to
very
116
typical,
from
you know.
85.
She's
They
flown above
upgrade
all
Multi
of the
to overweight.
SMAs,
Go to 58
my
from
9 and
45.
Well, they got a
13,
gun
the
to their head
50,
on
and the
that Lennar,
200.
right?
Yep,
I mean, so
that's so
Lennar
textbook.
is-
High yesterday.
And then you look down at the
They were
MACD,
close.
that growing.
It does have one of the
I
best
think this is
charts
called a
in the world. I
histogram.
always refer to charts with data. You just know interest
Somebody
rates,
can
right?
fact check that
But I do
too.
think
I
that
hope
Lennar,
everybody's
that
fact
is
checking
why
anything
would
that falls out of my mouth. Let me say this
unless
again.
you really felt great
I
conviction,
am
a
new
smart
to
biller,
trading.
the executive chairman who
I
starts
started
the
trading
conference will engage with you
4
in
short
the
months
industry,
ago,
because just David,
but
he's going to say
what I
about
saw was an
the
opportunity
other
here.
things.
And so what I'm basically
You
doing is
mentioned
standing
this
at the
call
door
a couple
hollering,
times, so I
sisters,
have
come
read-
on, come
I
on,
have
come on,
read
come on. going. You got to see this because it's a viable way to make money. It's a viable way to invest or to earn income to, you know, invest in long hauls, ladies. We're going to be smart with this money. I bought enough purses and shoes. I don't need purses and shoes anymore. I need financial security. That's what I need, so that we can live these fabulous lives that Stephanie Perry, Rashida Dow, and Adelia Aborche introduced us to. That's what I'm here for. I'm here for the party. And this kind of crazy in the morning is good for studying, if you ask me. But I think someone told this to me, and somebody, anything that comes out of my mouth, I said all that to say, this is a learning community. There are people in here who have been trading for decades, and there are people who have never even loaded Thinkorswim up on their computer, and all are welcome. And we all contribute and we all learn from one another. So if you hear me say something and you can clarify or add on to it, please do so. Don't let me be out here on the internet, in the YouTube streets, you know,
Nobody can see him.
putting out misinformation. So help me out. But when I look at this, those first 3 candles, I look at the volume. That's so it's like textbook. That's what you would expect to see. And the MACD is exactly what you would expect to see. And this morning chop is exactly what you expect to see. And that's why I don't go in. I used
Dow's
to.
up 70 as we await the
I
Fed.
used
Let's
to,
get
man. You
Bob
couldn't have kept me
Messiah
out
this
if I saw
morning.
those big old candles come in.
Flattish open as we await what the Fed has to say, but we do
Didn't go
see
so
some
well.
groups moving here. Energy's rallying
But
again
this
today. Remember, oil
pattern
was
that's coming in, you
$70
know, it's the
a
same
week ago.
thing.
We're at 77 almost on oil,
Except
so
for that
energy
one
stocks are
doji.
moving up again. Industrial's getting a
So
boost.
it's time
The
to
airlines
watch.
are up, the
It's time to
railroads,
watch and
transports
chat.
are up.
Good
You guys
morning,
have been
Frank.
covering,
Good
what was going on there
morning.
with Delta, kind of going against what
Welcome,
Jeff Blue was saying yesterday.
everybody.
Here's metals and mining. This was a
I
huge
think
trade a couple of
almost
weeks ago.
everybody in the
China
chat is
play
family in
is
the
kind of
chat.
played
I
out
promise
here.
you.
That was a
That's
big,
what it
big
feels
mover,
like.
and it's
You all,
essentially stopped
this
going
feels
up
like
now.
a Zoom call, but
Semiconductors
not.
broke out
It's
intraday
like a family Zoom
yesterday,
call.
and they're
Hey,
on an
everybody.
uptrend right now, although they
Frank,
had
you
some
trading
moves to the
anything this
downside. There's
morning?
ARC Innovation, which has essentially been flattish for the last month or so. So not a lot of big, strong trends
I'm
here.
queued up for
One thing very
QQQ.
interesting on the S&P
Of
500,
course.
we keep going
3
right
calls,
up
3
against
puts.
4,100
I'm
and
expecting
failing.
one
The reason that's
trade.
important is
That's
if
my
you break
hope.
over 4,100, that's a
One
year
trade
chart.
for the
You
day.
break the downtrend,
Hopefully
essentially,
timed
that we
well.
have been in all throughout
You
the
know,
year.
a
Lower
good
lows, lower
exit.
highs, and that would be
We'll
big. We
see.
can't do it.
Or
When
I'm
can we do it?
prepared
Well,
to
because
just sit, to be honest
David
with
was
you all,
talking about
because
this is really
yesterday was
wealthy
nothing short
about
of a
2023,
miracle.
particularly the strategists.
But
The
while I was
strategists are the
chatting it up with my
top-down
good sis
people who analyze the
Tracy,
stock market in terms
money
of
was
the
actually ticking away
macroeconomists
over
and
here,
analysts, which are
percolating and
bottoms-up
cooking,
guys.
no
They do
joke.
individual companies.
And
They're
Maryland,
very
I
bullish.
think
They're
Maryland
up
saw it.
5% is their estimate
So
for 2023
luckily,
for
I
the
want to
S&P
say,
500.
I have to go
But they're
back
always
and
usually more
look.
optimistic
I
than
think
the
I got
strategists.
out
The
pretty
strategists now
low.
expect a mild earnings recession.
Certainly
Looking
got
back
out
at
with
the
a profit,
strategists, I'm talking about the
but
20 or so
I'm
that
telling
really
you,
matter.
that's why you
Expecting
have
earnings to be
stops.
down about
So did everybody
6.5%
see
as a
that?
group
Let my life be a
for
cautionary tale.
2023.
That's
And
what
this
I'm here
has been coming
for.
down for several weeks now.
Yeah,
Not only is
Frank,
that coming down, but if you look
we
at the
do a lot
price
of sitting
targets,
and
I
watching
looked at the
too.
17
It's
top
part, you
strategists.
know
The
what, this
average
thing
price
has
target
morphed
for the
into
end of
really more
2023 right
teaching,
now
more
is
talking, more
4,000. Hey,
sharing.
guess what, folks?
Like
We're at
the
4,000.
chat in here
Essentially,
is
most of the strategists are
awesome. If you
anticipating
have a
no
question,
gains
drop it
next
in the
year. So think
chat.
about this.
It's
The
a good
earnings
chance
decline
somebody
about
here has
6%.
an answer,
No
or they
big
know where to
gains at all
point you
in
in the
pricing.
direction to find
That's
the
what you call an
answer.
earnings recession.
And
Now,
so we just want to welcome
6%
everybody to our little
decline is a
learning community,
mild
because that's
earnings
all it is.
recession. In a
If I could, I'd
serious
have y'all all
earnings
in my
recession, you could be down
kitchen.
20% or more.
I told you
But
all, I
essentially
think
what
that's
I'm
what I'm
telling
gonna
you
do.
is
I think I'm gonna
strategists on
do
the
a
street
kids
are
series called
expecting
In
next
Grandma's
year to be
Kitchen,
flat to down
and just
with
do
earnings
financial
slightly to the
literacy for
downside.
kids,
And I think that's
because that's what
probably
we
pretty much
need. I
what the
mean, you know, it's good that we,
consensus
you know,
is right now. So
we're
the
here
risk
now.
here
This is
definitely
good.
is to the upside.
But
If we get anything less
if
than
we started
a
with
mild
kids,
recession,
y'all,
if we get a soft landing, the
we
market's
wouldn't
definitely
have to
going to be
be,
higher. We'll keep an
you
eye
know,
on
sometimes
that.
I feel
Finally,
like,
we've been talking about
I don't
getting
know,
into
many
it
of
with
us are
big
first
agendas
time
all year.
college
He's got a big one
graduates
coming
and,
up today.
you know,
No, it's
maybe
not on
second
FTX.
generation.
He's going to
And
finally
you feel the
close
burden. I don't know if
proposals
you
on
feel like I
payments for
do,
order
to
flow.
build
So
generational wealth, to set the
essentially, remember,
example,
he's been
to
very
you
unhappy
know,
about payment for
blaze
order
the
flow.
trail.
This is the process
And
whereby
that can
brokers
be
like
weighty.
Schwab and E-Trade,
And so
Robinhood, they
why
buy
not
orders
teach
for
our
electronic market
children
makers who pay for
so
access
that
to
we
that order
can
flow.
share
Again,
some of that
Swift's very unhappy with that.
responsibility
He
and
says
teach them
payment
as
for order
well.
flow
So
may not be given
I think I'm gonna
investors
work
the best
on
prices.
that, you know,
He's
just a children's
proposing
series
potentially
on financial
auction
literacy.
process
That's kind
out
of
there
in my little
that might have to be
wheelhouse, and
done
I would be totally
ahead of payment
comfortable,
for order flow that he says
you
might
know,
be a lot
in this
fairer.
format
This is very
too. So we'll
controversial.
see.
He's got other proposals
We'll
that are
see what the
being
future holds.
floated. What's interesting and rather
But
ironic
QQQ is
here, guys,
QQQing.
is that the companies
And
that were at
that's
most at
what
the
we're looking
center
at.
of
So let me
all of
pull
this
tore it up. But generally they follow. If y'all ever notice, there's a parallel between that movement. Yeah, look at QQQ. I wouldn't go in there with all those wicks for anything. Ford looked way better and cleaner than this. When I see those wicks, I'm good. That's a lot.
Is underwater at this point, I should say.
And so most people, I think, have at least a base, but this is a great candle. It's strong, you know, it doesn't have wicks. And by wicks, everybody knows, if you don't, green candles show buyers. And when you see a big candle like this, that's not us retail sellers. These are institutions. Only institutions can drop this kinds of, this kind of money. That's millions and millions and millions and millions of dollars there. So some big time, hedge fund, somebody somewhere has invested a lot of money. This is probably a very attractive price for them to buy. I don't know. I don't know what hedge fund those people, they're rubber hedge funds. I don't know what they're thinking, but this is what that candle represents. And because the wicks are short, we know that this candle opens at the bottom. So it opened around 288.05, 288.10, somewhere around there. And it closed around 288.86. But this wick at the top shows at some point in that 3-minute interval, it got as high as 288.88. And the wick on the bottom shows that sometime in that 3-minute span, it got as low as $288.05. So that's how you read a green candle. A green candle, again, shows buyers. And of course, or it's an overwhelming, because buyers and sellers are always in the market at the same time. But it shows that there is an overwhelming presence of buyers. Buyers are in control of the market. They outweigh any sellers and during that 3-minute interval. And I have my chart set to 3 minutes because, that's how I roll. Most people, and you should too, it's just good practice to pull out. And by pull out, I mean look at larger time frames. You should be looking across all time frames anyway. Everybody knows this, but I feel like I need to say it, just because I'm not sure who's here, if somebody's new. And if you're new, I want you to be able to follow along. So here's the 5-minute time frame, and you'll see that there are fewer candles because they're grouped in larger intervals. But still, it looks pretty crazy. And why is this crazy? Because what this candle represents is it opened at 289.42. And these are rough estimates, y'all, because, these are like almost 60-year-old eyeballs. So I do my best. I do my best. But the candle opened, this long one, this second one here is the one that I'm talking about. Let me blow it up a little. I don't like the way that looks. Okay. So it opened about 289.41, right under the bottom of that, the body of it. And by body, I'm referring to this space right in here. This is the body of the candle. And these things that extend out are called wicks. And so this candle is giving us tons of information. Again, I can tell that it opened by running this little line right up near the bottom. And right where it touches the bottom, I can look over to, I'm not sure if it's your left or your right, but right over here on the side, you'll see this white or grayish price moving up and down. It correlates to this line, the price line. So this candle opened around 289.42. And if I go up to the top of that candle, I can see that it closed around 289.52. So it didn't actually gain or lose very much. It didn't actually gain very much. It gained 10 cents. But these wicks say that at some time in that 5-minute span, the price got as high as 289.80 and as low as 288.97. Now that's a big, up and down. That's a big disparity. And what that is called is volatility. It represents volatility. So that's the buyers and the sellers, and they're fighting, they're duking it out. And the buyers barely came out on top. And you can see that because of, the wicks. And then it's followed by a red candle. No wonder. Now the sellers are in charge, and that's what red candles represent. And you read them the opposite way. Red candles, they open at the top and they close at the bottom. And that makes sense because they represent a decline in price. So let's say this red candle opened up at 289, around 289.56. And it closed at 289.30 and some change. But at one time, the price got as low as 289.18. The price disparity between the high and the low isn't nearly as volatile as what we saw in this candle. And that's why when you see these candles with these long wicks, Nobody, that's volatility. Nobody wants to get into that. We want strong trends that are clear and easy to follow if that's what you're looking for. Now, if you're looking to place a long term, like a day trade, you might be okay with this kind of volatility in the morning, but I don't know. That's what my 4-weekend, my 4-month in mind says. But to be honest with you, what I see is all these candles are above all of our SMAs. And if you're new, mine are color coded this way. The gray and the blue are my 9 and 13. And the purple is, I want to say it's right here. I think this is my 50-day, and the green is my 200-day. They may be reversed, but they're simple moving averages, and they simply record and display the price average over the course of 9 days, 13 days, 200 days, and 50 days. And so this is a good thing. If you have calls or if you're expecting it to be a positive day, this looks good because all these candles are above all of those moving averages. So that's what my eyeballs see. I don't know. You all might see something different. Anybody see something different? You know what to do. Chime in. The RSI down here is relative strength indicator. And the relative strength indicator is nearing over, I always get these mixed up. I want to say this is oversold. Somebody correct me. One is oversold, I think. And you'll know because the value that you're looking for is 70. Once it reaches 70, mine will turn red. And it's so close to 70, you can see the value over here. And then overbought is at the bottom. Mine will turn,
Someone called it a super
I think it turns
microcomputer
blue or
at
something. They're
SMC.
color coded.
I did not know
So
it
you'll
was
know
such
when
a
you're
very
in
expensive stock.
oversold
Take a
or
look at that.
overbought territory.
And tomorrow's our
And
investor club meeting.
that could be a good thing and a bad
You
thing.
never know what we're going to recommend. But we have
It could be good if you are nearing the end of a trade,
It makes money. It does
especially a
things.
call, because,
That's what
that
we're
means you
looking
got
for.
all this growth. That's some pretty decent growth
see
too,
you tonight,
y'all.
Jim.
5, 10,
Obviously a
15,
busy
20,
day at
25,
Mad
30.
Money,
That's 30
6
minutes
p.m.
of that
Eastern
price
time.
going up.
When we come back, Evercore
So
Senior
it's at
Chairman Ron Drolman is with us
289,
as Squawk on the Street continues in a
89.
moment.
So it's gone up at least $1, about $1.50. Could have been money for somebody braver than me. I'm gonna sit this one out. Let's see. I don't know. On the 15-minute, it looks pretty good. I don't know. Where are all the seasoned and veteran traders? I don't know about that, y'all. I think I'm awake. But that time in sales is green, 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 green. If you don't know what the time in sales is this running list of numbers over here. But actually what it is price and orders. And you can see how many orders are like in the hopper. I've heard two things about price and sales. It's good to see because you can kind of see if it's like really green, green, green. That's some more information. Or if it's really red, 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 if these numbers are running really red, that's information too. But I heard a veteran trader say that this time in sales data is already in those candles, that it runs behind. So, is it really useful if that information is running behind? I don't know. It might help you with sentiment, maybe. I don't know. Because I'm a new trader. But it makes sense to have it up. So you can also access this on the side. You'll see that TS that stands for time and sales. So if you hit that, you can bring that up. Another piece of information some traders use is level 2. And level 2 has something to do with how orders are filled and who's filling them, like which, I just pass on what I think I know, y'all. I throw stuff out so you all can do the research for yourselves. But level 2 is just more information about options, contracts that may be waiting to be filled, if I'm not mistaken. But check it out for yourself. But this is how you access it. Level 2. I don't like it because it clutters up my screen. I don't like a lot of stuff. As a matter of fact, yeah, I don't like this being. I just like it clean. Y'all notice I don't put a lot of. I took my fibs off, my fib lines. I don't put a lot of stuff on my charts, and I probably should put more. I know if anybody's looking at this, they're probably looking in horror, like, oh, where is your support and resistance? But I will say this: QQQ and I, QQQ is my boo. I know where she gets sensitive. But it is good practice to plot your support and resistance lines just because you sometimes need to look to the left to reference. Like, is this a price level that I should be paying attention at? At least that's how I do it. That's how I see it. So it is good form. It is not just good form, you all. It is mandatory, I think, for a beginning trader. You should have support and resistance. And we talked about this. Can support and resistance or can fibs sometimes serve as support and resistance in a pinch? I've heard so many conflicting things about Fibonacci's retracement, but it works for me. It works for me. I think it works too because so many people think it works. I'm telling you, so much of trading is psychology and mindset. And that's why I chose to take on mindset, you guys, because money, you cannot escape money and mindset, the money mindset connection. No way, I tried. You can't shop your way around it. You can't deny your way out of it either. You must be of sound mind to be financially sound. I'm just gonna say that. Because I promise y'all, when I get on here talking to y'all, I'm using myself as an example. That's why we're doing this in my kitchen. We could have done this anywhere. It could have been a really professional environment. We could have done anything. No, I am telling you all from my heart, from my kitchen. Let my life be a cautionary tale. And by that I mean having a lack of financial literacy and coming tardy to the party. But if it's never too late, it's not too late for me. It's never too late for anybody to become financially literate or more financially literate. But I will tell you this, that it really starts with your mindset. Yep. And I have to get my mind around these candles clowning because QQQ is clowning. 290.02 and everybody is up today, you all, except for Tesla. And so let me roll over here to this market watch because
among the witnesses will bring you any headlines from that. In the meantime, Sam Bankman-Fried is in a correctional facility in the Bahamas after his request for bail was denied yesterday. The judge there in the Bahamas citing heightened flight risk.
I don't know. I'm gonna let this play out. I think I'm gonna stick with the most sage advice I've received about in particular in regards to QQQ, which is let her settle down. It's 10 o'clock. He said somewhere between 10 o'clock and 11 o'clock.
Committee here in Washington, he faces 8
perhaps you can see a clear direction. And so I'm going to back up and see if I can see a clear direction. And I don't, so I'm gonna relax.
And conspiracy to
let me check the chat.
Hey y'all. Violations. The CFTC and SEC also filed their own parallel civil
I'm coming over here.
Yesterday. In a statement, his lawyer said Bankman-Fried is reviewing the charges with his legal team and considering all of his legal options. FTX's new CEO, John Ray, who of course led Enron through bankruptcy after its collapse, did appear before Congress yesterday and ripped into
Yay, Kathy. I'm so happy. Kathy actually has her paper money account. Yes. Yes. So Kathy, I because today is such a big news day, live trading. But my intention was to paper trade. First of all, as soon as Thursday and Friday are up, Thursday, we don't know what's going to happen. You can see it's going to the moon right now. So anybody who had calls this morning, kudos to you. It was looking too choppy for me.
Yeah, it's interesting, Carl.
We'll see.
The big thing people are watching now that FTX.
That's pretty high. I'm gonna drop some support and resistance on here only because I need to, and it's good practice, and you guys can watch me do it. But Kathy, I'm so happy that you're following along. If I see something, I'll trade. If not, I won't. And I'll be paper trading starting next week for sure.
Any of these centralized exchanges could be at risk, and we heard Sam Bankman-Fried before FTX went under say everything's fine. So
Kathy
people
said
are
that's great
really
for
worried
children.
about,
Yep.
you know, any CEO in this industry.
We definitely
and really
need
taking them at
to
their
start
word. So there's more
financial
skepticism
literacy
than ever. They put out
as
something
early
called
as
proof of reserves
possible, you know?
last week that some have been
I saw it.
pushed
It can
because
happen.
it's sort of
My
only
dear,
shows a
dear, dear
snapshot. So
teacher
the
friend,
bar is a lot higher
Ms.
for any of these
Batson, would
crypto
come in
platforms
and
to prove
teach
that they're safe
children
and it's the
about
right place for someone
banking
to store their
as early as
funds.
8 years old. So it
Record
can definitely
withdrawals
be
from every
done.
crypto exchange, not
So
just
that's
Binance,
something I
even
have,
Coinbase, which
like
is
on the
regulated
back
and
burner
publicly
cooking.
traded in the US.
Something
So
from Grandma's
investors
kitchen.
in
Something
general are
really
looking to
simple and
store
informal, you
their
guys.
money in a much
Kids don't want to be
safer
lectured.
way
They don't
because
want,
of
I
what's
know it.
happened
I know
at
what
FTX.
kids
So
want.
it's having a drag on the
They just they want you to hit it, quit it, give it to them, make it a little bit of fun, make it relevant, and keep going. Would y'all look at QQQ today?
Talk about this afternoon's Fed decision, a 50
Mm.
basis point hike.
I have to look away on days like that so that I don't feed my
And
FOMO.
has a lot more on what we might expect. Morning, Steve.
Good morning, Carl. Yeah, two main questions I think today surrounding the Fed meeting. It is
Marilyn
expected to
said that
hike by
will be a
50 basis
positive
points.
move for the
Does the
future
Fed
of our
embrace the
children.
market's
Yep, that's where
increasing
we
call
need to
for
start.
an earlier than
It
expected
can't
50 rate
hurt.
hikes? And does it embrace or push back against the loosening of financial conditions since the last Fed meeting? Look at what happened to the peak funds rate, along with sharp declines in the 10-year and the 2-year
I'm
after that
looking at
better
the
inflation
comments. I
report.
have
The expected
an
peak funds
options
rate fell from
expiring
4.99
Friday.
to
I have
now
a
it's
whole trading
4.82
day
this morning for the
on
May 23
Friday to sell
contract. And
this
there's
options
some
contract.
betting going on. The Fed could be done as soon as
Frank,
one more
I
quarter
just want to
point
blow
hike
this up so I
in
can
March.
read your
All of this is
question.
well and good if the Fed and Chair Jay Powell are
Frank
comfortable with this
says,
dovish drift in the outlook that's loosened
if I
financial
have an
conditions since the
options
last meeting. We
expiring
tallied
on
up how much
Friday,
loosening there's been. The 10-year down about 60 basis
16th, do I
points.
have the
Bonds
whole
at 30-year
trading day
mortgages
Friday
down
to sell
about
the options contract?
75
Yes,
basis
you
points
have to
since
the end of the
November meeting.
day,
The Dow up
Friday,
more
to
than
close
6%
out
and average
the
hourly earnings
contract.
meanwhile,
If
a
somebody
big concern
understands
of the
something
Federal Reserve
different,
chair up
drop it in the
0.6%.
chat.
Pretty
But
strong
if
showing in the last
you
week.
are
So
with
if the
TD
Fed did
Ameritrade, they'll
contend that
send you an
financial conditions are
email,
loosened and has a problem with
and
market
probably
levels, the
Fidelity
Fed chair
too.
today could
If you have
attempt to
your
redirect
email alert
attention
set
to
up,
the continued fight against
they will
inflation.
send you a
Another
reminder.
problem
You
for
all,
Powell
first
this
of
week here, the
all,
market sees the Fed hike in the
QQQ is
482, but
cutting
then
up,
easing by almost
so it's
50
noteworthy,
basis points
and
through the year.
because
That
it's
was
beautiful,
not
it's
so
so
much a
beautifully
problem when that
formed.
easing was kind of far
I
off
won't
in the
have
future, but as it gets closer, the
FOMO.
gap between a more meaningful Fed that says it will hike and hold in a market that expects
Else
rate
comment.
cuts
I'm
to
just
become
gonna roll
more
through the
meaningful.
chat because I want to make
Luke
sure
Kramer of
everybody, I
Flight's an
got
ICAP
to
Records
everybody's
company. He
comment.
said he thinks Powell's going to be
Chris
cautious,
saying does
but
share
not
mostly
strident. He wants
from
to
the
ensure
videos I've
markets
seen, but I
don't think
do
he
believe
thinks
he
the
does
job is done,
options too.
but doesn't want to introduce any
I've heard
volatility
Chris
because
Sain's
we're
name
nearing
come up
that
so many
that
times.
critical year-end funding
I'm
time
definitely,
amid what
I
everybody's
think
saying
I
is some
subscribed to his
liquidity
channel
strange
yesterday. I got to
effort
get over there
loosening
and
of
check
markets.
out
Guys?
some of his
Steve, just to
videos.
refresh for people
So,
and
okay,
focus sort of
folks,
on the day
let's
itself.
just peek over here because
I mean, it's not that
QQQ.
long ago we had
Oh,
the
I'm sorry.
statement
That
which
was
set
money.
things
This is
one
money.
way, and then we
And
had
I'm
the
so
press conference
sad
that set
that I did not get
the
in
opposite way.
because, in case you don't
Has
know
the
what you're
Fed
looking at,
thought
you're
through
looking at
in terms
money.
of communication anything
This is
from that
beautiful
event
money,
that would
and it has gone on
color
5,
how
10,
today
15,
goes?
20, 25, 30, 35.
I think so,
Oh,
David. And if I could amend
too
your
long
question
to
a little
talk
bit, there was
about.
also the
This
kind of curious
volume is
working
beautiful,
speech, I guess that
tall,
was a week
strong.
ago,
It's
in which
oversold
the
like
Fed
crazy.
chair pretty
So,
much said
you
what people
know,
thought he had said
I
either
don't
in the
know.
press conference or
I
himself,
wouldn't
but
get
the
in
market
there.
took that in a
It's
very
not an
dovish way,
ideal
and then
entry
it
for
kind of
me.
backtracked.
It's
So
like you
I
kind of
think the
miss the
Fed
boat. You
has a
want to get
problem
in on
with
something
saying
like that
that
down here because
it
you get all
thinks
that
are relatively
momentum.
hawkish, and then
But
this loosening of financial
man,
conditions.
it doesn't get
And I
any
think
more
to some
beautiful than
extent, David,
this.
they
Look
kind
at
of throw
this.
up their hands and say,
How
look,
these things
we're
are
going to see
wide
what we're
open
going to
like
say. The
that. You
market's going
guys
to
can't
react.
see them. Let me
They're
move
going to
this
hear what they
comment
want to hear, and there's not
so
much
that
they
you
can
can
do about
see.
it. You could imagine
Let me
today
hide the
Powell coming in
comment
saying, yeah, we've loosened it, but that doesn't mean we're going
so you guys can see the MACD.
lower. Also saying, repeating that the Fed is likely
And
to
well, you definitely
hopefully
can see
stay
the
at a
RSI is
restrictive rate for a while.
oversold. And it,
Market
of
may
course, it
rally
turns
on
red
that.
once
Who
it hits
knows?
that
Because the
70
market
mark.
has
So
been
it's
kind of
way beyond
hearing what it
70.
wants to hear.
It's like
You
it's
feel like
85 and growing. So you'll see the MACD. If you touch it here, you can see the value for it. And if it were overbought, it would be down here at 30. But this is beautiful. I'm telling you, when you see these things down here, look at this MACD. When you see these things open, like I would describe that to children like an alligator mouth. When it's open like that and it's pointing up to the sky, that's a good sign. That's a very good sign. That's a very strong trend. And it's a trend I wish I had gotten on because, you know, hey. Can't win them all though, folks. But that is a classic, you know, And somebody who would have probably been, I just don't do the morning. But all the signs were there because look, all this candle here, and certainly by this candle, but still started to get oversold. I don't know. I don't like this. Two things about something being oversold for me is that it can't stay up there forever, but it can stay up there a long time. Now let's just be clear. It can stay up there. It can stay up there long enough to make you a whole heap of money. So that's what's happening today. So that's what we're watching. But you see this dark green candle coming in, but I don't believe it because this thing is open so wide that, yeah, and these are open so wide. This is from what I have been taught. These these open, these SMAs open so wide like that and pointing up to the sky. That's all. These are all good signs. This is all saying like open, like your purse is open. Pour money into my pockets. Pour money. My pockets are open. My pockets are open. Pour money into my pockets. That's what that is. That's all it is. And look at it, keeps going. So I don't know. Would anybody jump in when it's oversold like that? That's the only reason I wouldn't. And then here comes this candle with such kind of low volume. I don't know. But, it's nothing to discuss because that was the move. And clearly it's still going to be the move. This thing is on fire. 290.68. So that's $2 up. That's a lot of darn money, y'all. So, okay.
They do sort of readjust.
I just started watching Chris Sain's channel last night.
Olivier Blanchard wrote a piece about that in the FT.
This is, I'm sorry, this is the salt and sugar. This is when I'm like, cool down so the rest of us can get in. Because, I wouldn't jump in at this time because I just feel like you have either got in on that move or you didn't get on the move, get in on the move. And that thing could go on for almost how long.
We're not going to be at 2. 3 is probably more realistic.
So what I'll do to soothe myself is put this on the daily and start plotting some support and resistance.
I'm not sure QE is consistent with 3
and
in inflation.
I'm just going to look at these candles, you guys.
That's right. And it's probably not consistent in history is any indicator
get this
as we were to go into a
tool.
recession, whatever that recession looks like either, from a valuation standpoint, which raises the question, Bob, what does an investor do here right now? Do you take some money off the table in light of the recent rally we've seen?
Low,
Do you
I
put money
always
to
like
work
to keep
in
track of the
certain,
low.
value-oriented opportunities, something else? What do you do right now?
Well, consistent with what we've been trying to say for most of the year, at least the second half, buy the dips, trim the rallies. We've had a rally. I'm not against doing some trimming, having a little more defensiveness in the portfolio, seeing what next year's earnings levels are going to bring. So I'd be a little on the cautious side here at in the 4,000s.
All right, finally, just to bring this full circle to the Fed. We don't talk about it enough probably, but that is quantitative tightening. Even if you see the Fed pause on its rate hikes at some point early next year, QT is likely to continue on, right? What kind of impact is that going to have on the market? Do we even know yet?
Thanks for bringing that up. You're absolutely right. We talk about the rate because we've done that through the years. This balance sheet is a conundrum. We've not been here before at this size. And it is a negative as they have to deal with it. Obviously, nobody's got a gun to their head that says they have to reduce the balance sheet so they can stop if there are onerous consequences. But you can't imagine a good news coming from the Fed unwinding its balance sheet.
Bob Dahl, thanks for kicking off the hour with us.
Thank you.
As we head to break, here's our roadmap for the rest of the hour.
Oh, Lord.
Stifling crypto misuse. The CEO of Stifel, I see what we're doing there. Speaking with lawmakers about regulating crypto markets.
Okay, so what I just did was plotted some really quick support and resistance. So let me get this off of here. And to do that, I just look at the price levels and I'm looking for where there might be a concentration of candlesticks or wicks. And I want to see how many touches I can get on the line. So that signals to me that something happens around that price because either the price is getting stuck there or something's happening. So anytime you see an anomaly like that, because, it should be flowing. But if you see a bunching up, that's noteworthy. And I might even drop one in here because it looks like, little something was happening in there. I don't like to do too many support and resistance lines, but they help us understand what price might do or how price might react. So let me get a cursor here. And because I got my eye on QQQ, she's coming down now, 290.59. So let me stay focused, 290.50. Let me just peek. I'm sorry, y'all gotta see. I want to see her because that's a real serious, like she coming down. Okay. Because this might be a move coming down. So that's what I'm gonna look. We'll talk about support and resistance. I'll come back. I'll circle back. Do not let me forget to circle back to if anybody needs that. If you don't need it, then I will skip it. But this is a nice little, build up. That's 3 minutes, 3 minutes. What I'd be curious to see is how they respond around these SMAs. Do they sit on them? Does it bounce along? This will be interesting to see. But man, when I tell you that was straight money right there, somebody made some money. And that was a great scalp because they're in and out. I mean, maybe a little longer than a scalp, but 9:30, less than an hour, 45 minutes in and out. And I'm talking about nice money. So this could be any number of things in my mind. Because it's so oversold, sometimes you'll see a little red candle. It'll try to dip down a little bit to get like a little relief. And then it'll chug right on and keep right on doing what she does. And so I'm looking at everything. I'm looking at how these cluster or don't cluster. I look at the order, how tangled up they are, how the candles are in relationship to those. This is what I look at. This is what my mind says. And remember, never take advice from somebody on the internet. Do not take financial advice from anybody on the internet. This is a learning community, but this is my way of seeing it. And I always say that, you guys, because nobody wants me in trouble. I don't know. I don't know what the FCC thinks, who knows. So to play it safe, I always drop that disclaimer that this is a learning community. But so what I'm looking at is I'm looking at price level. I'm to kind of I don't want to predict anything, but I'm looking at probability and likelihood. And those aren't guesses. They're built on things that I have studied and looked at QQQ for the last 90 days. So one thing I would be curious, as I've said this before, around the 50-cent mark, around the dollar mark, you will see QQQ kind of stall out. I don't know. It's just my observation. And here we are around the 50-cent mark, 290.47. So I look to see if she spends a little time there. Maybe she will, maybe she won't. Just an observation. Then I look at how these are open wide. That is a clear sign that, when they're pointing up to the sky like that, guys, it doesn't get any more. That's like a visual clue. It's an upward trend. It's moving up. And you can see, of course, the RSI is oversold at this time. And that's when I say these little red ones may come in for a little bit. It may be the signal of the beginning of a trend reversal, and maybe it's going to go down. Could be. Or it could be just the RSI getting a little relief. And you'll see that here. Look, it was oversold, all that red. And then you see how it dipped down just a little bit. Those little dark green candles came in and got a little bit of relief and did what? Chug right on back up to the top. So that could happen. If it's that kind of day, you'll know, because these things, they are so spread. And I got a feeling it's going to be that kind of day. So it could either be getting ready to consolidate. She could be taking a breath. I don't know. These next few candles will be plenty of information. What gives me hope that this might be a continuing pattern is look how widespread these are, man. That's a good sign. Because if it was really coming down like, they would be, I think, in my humble opinion, those things would be closer together. They at least have to come down some. So That's my thinking and my rationale for this might be a continuing trend. And I've seen this when they don't cross over and hasn't closed. I've seen a big green candle pop in here and those things shoot right back open. But right now they're slightly turned down. So those are the things you're noticing. At least and for me, all that is like second nature and in my wheelhouse to notice little things, pay attention to the relationship between volume and how a candle comes in and what it looks like, how that impacts the MACD. And if you don't know what the MACD, these are all things that help us understand the trend or the lack thereof or where we are in a trend. And so when you see these big bright bars down here and you see these open wide, of course, that signals and it just kind of verifies that we're in an upward trend. When you see these big green volume, that's lots of sellers. Sellers are clearly in control. You see this, that's what that correlates to. And that, so all these things are congruent. That makes sense. And when we start to see these bars turn darker and diminish, and we see these things turn down, and you see red candles come in, those things are all congruent as well. So yeah, it's just a bunch of observation. I think if you're a good observer, then you have patience, you can learn a ticker. So everybody knows, I don't know anybody who said anything different. Most people, when you're first learning, they tell you find a ticker, pick something you love. If you love Apple, trade Apple. If you love SPY, trade SPY. You like SPX, trade SPX. I like QQQ. I like QQQ because it's got some of my favorite stocks in there. So why pick one when I can have Apple, Microsoft, Google, Amazon, Tesla, all of those. So QQQ is an ETF that is made up of a conglomerate of companies. And so why pick one when you can have them all? That's my thinking. And so that's why I trade QQQ. And it's a down, we're in a down market and tech stocks were taking a beating. It just made sense to get on board. They were taking a beating, so I jumped on. But they have good days. It rallies like everything else. But you can see how now, if you check out the MACD, how these are coming closer together and closing. It's getting ready for the crossover. You can see your RSI is cooling off. It's coming down. You can even see the values coming down. It says 68. It's under 70. So it's no longer red. And then you can see these bars are considerably smaller than these, So all of that's information. And then even the way they fluctuate, this, if that stayed gray like that, that would be a doji. Those gray candles signal indecision, but all of this is like either a waning trade. You see how the candles aren't, this was really definitive. We knew what was going on here. And now you can just see it's cooling a little. Candle's not as thick, candle's not as strong, a lot of indecision here. So, okay. That's a signal. Those are all signals. So that's all I do all day. And there must be something in my brain that likes to watch for these little nuances. So if you are like a detective or, your brain is intrigued by, I don't know, nature and watching things change, you're probably good at this because it takes some watching, I think, initially. You have to be willing to learn the ticker, I think, to be successful. So that's why I say pick one. I'm telling y'all, Ford is perfect because Ford moves so slow. It's so clear. The correlation between a penny up or penny down and how your money is affected is so crystal clear for you to see and follow along. So trade Ford if you're just itching to get in. But we see these stair step things coming in. This is nice. I like to see this kind of candle. And I like to see this one open where that one closed. And then we got another one coming in. See, and then we're right here at this crossover. RSI is nice. This, I would wait for another red candle to come in personally and see to make sure that this gets out of the way of these because it can bounce off of these moving averages. And I use the simple moving averages. I asked, some people use exponential moving averages, and exponential moving averages are weighted differently. Simple moving averages, let's say you take the average price over the last 10 days, you add it up, you divide by 10, you got an average. An exponential moving average, in my understanding, is weighted, and I think might be a better indicator, but I don't use it because it puts more emphasis, or it's more weighted the closer the days are to the trading day. Those days are weighted more heavily, which makes sense. If you have a 200-day moving average, that the days in that 200 days that are closest to your trading day would be more likely to be relevant information than the price average 200 days ago. So I can see the logic for people using a exponential moving average as opposed to a simple moving average. But, potato, potato, tomato, tomato. We're definitely looking at a crossover, and we are definitely looking at a waning trend. But this little RSI kind of turned up a little bit. Did y'all see it? Did you see that little slight turn up? That's what I'm saying. Sometimes she'll come over here, get a little breath, and continue up. And so I don't know. Would anybody think this would be a place to get in? See, I don't know. I don't like to fool around. If I don't get in at the beginning of it, I just, I don't know. But this is a pattern that I recognize too. When she hops along the top of this thing. I'm sorry. I'm so used to just talking in my head. Not this thing. When she hops along these moving averages, these are the 9 and the 13. These are the most recent price averages for QQQ. And so when she hops along on top, y'all, that's a definite uptrend. This looks very much like something I've seen where she comes over, gets a little relief. Y'all study it yourself. Study for yourself. But if it were a downtrend, like if the price was declining, you would see that kind of scalloping. Of course, these were pointing down, and then it kind of scallops underneath. So I think people who are observers, if you like looking at things or you notice differences in things, if you have a keen eye, if you're patient, those attributes might serve you well in your trading career, because you do need to. I think you should get to know a ticker. I think it's a perfect way to study. You get to learn, her price sensitivity. And I know this isn't good, and so I will continue to plot those support and resistance because you just should do it. But I promise you, once you trade a ticker for so long, you just know them, because it's almost, I would never say predictable, but they're good indicators. They're good indicators where price stalls, So I don't think I'm that good that I don't need them. I'm just saying. I spent a lot of time with QQQ. Okay, so it looks like this trend is going to continue. Oh, and look down here. You guys, doesn't that look like a dolphin? I'm sorry. Doesn't that look like a little porpoise? Whatever. That thing will open right back up on you. Do not be fooled, because you would think that once it gets that close, a crossover is inevitable. And you see how down here on this MACD, and I'm going to call this thing a histogram until somebody tells me it's not. You see how these bars on this histogram are diminishing. Do not be fooled. I have seen that thing pop up a bright green candle and these things open. So I don't make any assumptions, because this looks like it's so ready for a crossover, but those things can go along not touching, with a tight range, like as if when there's consolidation, you'll see it in the candles when they're just trading sideways. And those things will never, it'll cross over, it will take forever. So don't assume and jump too soon, because you feel like, oh, according to the histogram, this trend is coming to an end and this looks like a crossover is inevitable. No, nothing's inevitable in trading. Nothing's inevitable. And I think trading has taught me to not extrapolate, ma'am, just the facts, ma'am. And I don't know, but this is true of me. I don't know. I'm telling y'all all my business. But listen, I could take a story. You could give me a nugget. I can make you a whole movie and a scene. And none of which could have happened or none of which could be true. So this helps me balance that part of my energy, because this is just the facts, ma'am. Read the chart, ma'am. You know, these candlesticks are where it's at. These indicators, that's all there is. These numbers, that's all there is. You will not do well if you are if you're leaning to that side of your personality. That's the kind that likes to go outside and, touch bunnies. No, this is money. And so this has been a godsend for me because it helps me balance out that. It gives me a chance to just be logical, just read what's in front of me. And everybody knows this move that we're seeing. If that red candle comes through and breaks through, this is a classic move that I was taught by Modern Black Girl. They do good work over there. They really do. Just a young company. And, I can't say enough, folks. Enough good things. If you are looking for classes, check them out. But you know what I said, before anybody pays for a class, you need to come over here and get anywhere, not just here, but anywhere, and front load so that you don't feel like you're drinking out of a water hose trying to figure out everything at once. Nope. Make sure you know how to work, think or swim. I would tell anybody that before you take a class, because it would be so much more meaningful that when somebody is telling you something, you can actually go and put it in practice, not hold on to it. And then 6 weeks later, when you figure out how to use the platform, then try. No, 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 no. Learn how to use the platform, folks, or any platform. I don't care what it is, but learn one that you're comfortable with and learn it, learn it, learn it. It's one thing out of the way. You can automate that part of your trading. You won't be worried about, oh my goodness, how do I get in and out? Because nothing's worse than when a play has turned against you and you can't get out because you're rooting around trying to figure it out. That is not good form. Don't do it to yourself, and it's stressful. So we want to give you tips here that help you, have every chance to be successful. Have a candle, have some soft music when you trade, whatever floats your boat, but do things to give yourself the best chance. So front load first, learn the vocabulary, learn simple candlestick patterns. That's something you could get on YouTube. I just want you all to see this move. Look at QQQ. This move that they taught me was the 9 to 13 to the 50. And this would probably be a good place. I'm just going to wait and see. Let me see. I need to see how these candles are coming in on the one, because that might be a good. See, look at that. All that red, all that. I peeked down on the one. Nobody trades on the one. I've never heard anybody even tell you to refer down on the one. I've never heard it in a class. I've never heard it in a video. But I like to look at it because if that's strong, because 3-minute candles are made up of 1-minute candles. So it gives me some indication of how solid these 3-minute candles are. So that's a pretty solid candle. This is clearly in a downtrend. We have achieved this crossover, and that's the beginning of the red. And look, y'all, this could very easily be, I don't know. I'm looking for a confirmation candle. I do not know. What do y'all think? A call on QQQ this morning would have been profitable. You think, L? L. Oh my God. L, we would be grinning from ear to ear. Yeah, we would be just beside ourselves. That was nothing but money. I just didn't know, you know, but here's a good thing. You can go back and analyze that. Look how long it stayed oversold. You could have got in there on that little pullback right here and rolled it up the rest of the way. But let me see what that RSI. But see, that's noteworthy. Look, maybe when the RSI cools off, jump in there. The sight of that first red candle. I don't know. Because the MACD was saying it's a go. It's a go, go, go. The green candles were there. I don't know. See, I don't like that. If this move had developed maybe in the middle of the day, I might have been on it. But let's not miss the one that's unfolding right in front of us. 3, 6, 9. I don't know. Got some way to get down there to the 50. Let's see, that's 289.02 with that's $1. I don't know, but see, do I want to jump in for a dollar move when we had a what? 88. That was a $2 move. I don't know. I might let this one pass, y'all. But who knows? This is what could possibly develop if these red candles continue to come in and go all the way down to this 50, and because you see the 50 and the 200, it's a good chance that's an awful, they've converged together. That could be a pretty strong support, and it's at 289 even. That's a pretty nice support there. I mean, so if you got in to a put from here to there, I don't know. These are the musings of a novice trader. Man, that's a t-shirt in a bag too. These are the musings of a novice trader. I'm just talking. We just talk here like friends. Hindsight is always 2020. Doesn't that look beautiful? But no, ma'am. I wouldn't have gotten in. No, it goes against my trading plan, which is wait, let it pick a trend, figure that out, ride that. So if she doesn't come down, if she gets tangled up and bounces back up over, and I go back and look at some other things, yeah, it's too late. It's too late. After the move has happened, folks, don't chase it, because there will be another one. There will be another move. It might not be today. So all these life lessons, come on, tell me that's not a life lesson. Can't have sour grapes. Don't get caught. Don't get stuck. This thing, you can exercise all kinds of character and virtue. I think anytime you're handling money, character and virtue. But you bring those skills together with your skills to observe, be patient. Man, trading is a whole, it's got to be Tai Chi for the mind. It's got to be. At least that's what it feels like for me. Trading is Tai Chi for the mind. Because it'll make you sit still. It'll make you slow down. It'll make you study. It'll make you breathe. It'll make you do all those things. Elle says, I add TTM squeeze indicator to charts. Light blue bar, momentum rising. Dark blue bar, momentum failing. Thank you. How do you get that? C-bar comes through the door dropping like, really? Yellow bar momentum, red bar momentum falling. Okay, C-bar, where do we get to T? Oh, is it on? Where is that indicator? You got to tell me more. Okay, so we're going to need to figure out a way for you to share your screen, C-bar, so that you can share and show us actually how it's done. And there is a way for you all to share your screen, isn't it? Let me see. I'm going to have to... C-bar, you're going to have to share your screen. I'll figure it. I'll be up all night. I'll figure it out, because we will be sharing a screen. So that you can, or maybe you can drop it in the community tab. That might be even better. If you don't, well, no, because you're here right now. You could just tell us and I could do it, and that wouldn't put you out. I'll figure it out. It's on TD under studies. Say no mas. I'm heading over there right now. Okay, cool. It's under studies. And is it squeeze? SQU? Oh, I see. TTM squeeze. Stop playing games. Double click. Okay, I'm just going to root around and see. Okay. Length. I'm going to leave it as is. Okay. Add studies, momentum studies. Yep. I think I have it up. Tell me. I hope you can see this, because I put it up. Will it show you? Anyway, I have it up, and it says thermal mode, input, and options. The length looks like 20 days. All these presets here. Should I do anything with these presets? Okay, the comment is blocking. Okay, let's do this. Hide. Okay. Do this. Hide. Let me get back over here. Okay. So let me do it again. I'm going to come back out. Okay. So when I hit studies, the study came up. It just didn't show it. So let me try it again. So I'm going up to studies and I'm going to put in squeeze. And the TTM squeeze comes up. I don't know. This thing has such a lag. Okay, let's see if it shows. It doesn't show. It won't show up. But I'm in there. And so I have it. I don't know why it won't show up on the screen. It won't show, oh, this window. I know why. Hold tight. Let me go over here. I need to bring this window in. Hold on. Let me share this screen. Let's see. Present, share screen. I know what to do. Let's see. Nope. That's not it either. Okay. Well, I don't know. But share screen, share screen. Of course, now when you know I can't share the screen. What I have to do is go out and close it and open it again. I've already done this. I did this morning. So that's what I figured out, you guys, that for me, I have to have the broadcast. I have to have StreamYard open first and then open the window. If I do it the other way around, it doesn't work. It won't open. Do you have room at the bottom to add? I'll check and see. But the thing is, I can do it and I can see it, but I can't share it with you. And so I want to share it with everybody. So Frank got it. I'm going to go ahead and add it because it seems like everybody can figure that out. So give me a second. I'm going to get over here and then you can just walk me through because I have it up. And it says TTM squeeze. And it populated down to the lower part of my screen. Do I need to adjust anything? I added it too, but not sure what to do with it. Yeah, I just need to know, do I need to make any adjustments like where the settings gear is? Because when I hit the settings gear, a window opens up and you can make changes. You know, you can change the color and do all kinds of stuff. Do I need to do anything down there? Do you have room at the bottom to add? Nope. Nope, don't think so. Just need to change. Don't think you need to change anything. Perfect. Okay, so I'm going to hit OK. Thank you very much. And it should populate on here. Ah, okay. Okay. So let me get you all back in. So, and I'm going to hide this time and sales because the truth is I don't even use time and sales. But this is beautiful. Oh, I love colors. So let me see how I can get this back into the chat so you guys can see it. Window. Okay. I think I'm going to have to, let's see. I'll figure it out. Y'all know I'll figure this out. Let's see. Because I have it on here. Oh, I just had a slight headache. How do I get this back on there? I'm still working on it, y'all. The screen share. It's so flaky. I wonder. I don't know. Could be because it's a Mac. Live Trading Wednesday. Okay, that's that tab. I could share that. Don't want to do that, but that's good to know. A Chrome tab. I think it would probably be easier if I was working from the web version because the web version would come up as a Chrome tab and it's easier to share a Chrome tab than it is to share a desktop view. That's what's tripping me up, is that desktop view doesn't always pop up as an option. And so in that case, I have to close something out and open something up again, and I have to decide which one. No, I need water. You already know. I've had tea. I haven't had any water, but I will get some. Thank you. I need some. Okay, it's on the bottom of the screen. C-Bar, thank you. I got it, C-Bar. Thank you. So what I'm going to work on now, you guys, is getting you all back on screen with me in this window. Let's see if that's it. It's so ticky. Okay. Give me about 5 minutes. I'm going to peek at QQQ. I'm going to get some water, and then I'm going to figure out, yeah, looks like she's going to consolidate for a little bit. So y'all give me a few minutes. I'm going to get some water and some, yeah, I need water. And then I'm going to figure out how to get the screen back the way it should be. Oh, yes, I need that. I need a new candle. I don't know about that. No. Okay. Let me do this. Okay. What are we doing? Okay.
Welcome back. New York City's rental market, well, it continues to climb. The average rent now $5,200 a month. This comes as office occupancy, though, is still right around 50% throughout the metropolitan area. Joining us now is Bill Rudin. He's co-chairman and CEO of Rudin Management. It is one of the largest real estate companies operating in our city. Bill, good to have you back.
Well, I'm happy to be here live and in person with you guys. I was here about 6 months ago, so thanks for having me.
You were. I want to start off with this juxtaposition of two things. It seems like there's an unquenchable desire of people to live in New York City. They want to pay more than they ever have, but they don't seem to want to live here for the convenience of actually being able to walk to the office. They don't go to the office. So I can't understand the two. How do you explain it?
Well, first of all, the trend of people coming back to the office, particularly since Labor Day, but even before that, is going up. Our buildings, the Class A buildings that we own, some of them are at 70, 80%, some of them 90%. Blackstone, BlackRock.
Yeah, of course, financial services.
Financial services.
I'm reloading Thinkorswim. Okay. What we doing, babies? Okay. We're back. Okay. All right. So now I don't know why it looks crazy like that, because it didn't look crazy like that. But I'm glad I got it on, and I'll make the adjustments. Let's see. Let's get this out the way. And that's what it looked like. Okay. Okay, I don't know. Let me get the news back going, and we back. Okay.
That weakness conversation about, do you think that's a type of business model
Y'all,
that
look how
actually starts to
pretty
go
that
away
was.
now in a more meaningful way?
Every business going through different cycles. I think
That's a
that
lot of money.
shared work environment is here to stay. I think it addresses some of the issues that we just talked before, where companies, may not want to make long-term commitments and have the ability to have flexible work environment. And they're doing what companies do when the economy slows down. They try to reimagine themselves. I personally think that WeWork and those type of companies are here to stay. Will they be as large as they were? Probably not. And it depends on the economy. If you ask the CEO of WeWork in Europe and other parts of the country, they're at 70, 80, 90% occupancy. In the United States, you start off the conversation about that.
Co-working
people being back to work.
spaces. That makes
That's
sense.
why you have to create the right environment and the culture of a company, the collaboration, the connectivity is so critical.
I think those are co-working
I think
spaces.
for companies to grow.
Okay.
This morning, Wells had a note. They say two things. One is that work from home hybrid is a mainstay now. But the other is that the prospect of layoffs could precipitate the shedding of space in 23. Does that make sense to you?
Well, yeah, particularly in the Class B
Makes
buildings,
sense to
that's
me.
where the issue is. And that's why the mayor and the governor's plan addresses that issue in terms of taking some inventory off the space. 30 years ago, there was 30% vacancy in Lower Manhattan, 30 million square feet. So Midtown, the Class B buildings.
Anybody
are
see anything on the
25%
chart
vacancy rate. So
that
yes,
I
that's why
didn't
we have to
see?
look forward and
I love
create
this.
new visions, new
But
opportunities.
Seabar, you're gonna have to
And I
help
think
me
the city and the
understand.
state
It's
are on
gonna
the right
take me
track.
some time to
Private sector
see.
will follow.
Okay,
There's
that's
plenty
the
of
beginning.
capital out there
Oh, it
for
looks like it
these
correlates with the
conversions.
beginning of the
Larry
move
Silverstein,
and the waning
we
of the
just made a
move.
deal with for a building around the block to
Oh,
convert to residential. He's trying to raise $1 billion. There'll be other
oh,
people coming
oh,
forward
shoot!
if this plan is passed in a
I
very
see it.
proactive.
Well, it's a good day to have you,
Oh,
Bill. And
Seabar, this
obviously,
is a
it would
good
be
one.
lovely to have more
Okay.
parks and more residences in Midtown. We'll be checking in with you though next year to see how things are
I
going.
need
I
to
will
see
be
it
happy
in
to
a
be back.
downward
Thanks for having me.
trend,
Happy
how it
holidays.
works.
Cheerleader Bill Rudin.
Hey,
I don't know.
Hey, man.
Y'all know I got
Gonna check
sketchy
out the
internet.
markets
This is
morning. Close the
Mexico.
session highs, Dow's up
This is
185. Stay with us.
Mexico. I have sketchy internet. Lord, please let that window be there. See, I hate that. Well, you know, I promise you, my whole life is about patience and not getting too frustrated. I don't know if the internet went out or what, but I'm happy to have this new indicator. I tell you that. Oh, I'm happy. I like an indicator. I'm sorry. I like the pretty colors on my chart. So let me figure out how to get us back all together where we can see the chart too, because whatever blanked out, I can't access the chart now. So let me see. I'm working on it. Seabar said TTM is great for directional trader. Yes, I need to know if the trend is up or down as I only buy spreads. Ah, okay. See, you only buy spreads. I've never bought a spread. I'm not even sure. I know how they work, but I don't know how they work. So that's a class and a half. Okay, I'm going off to figure out how to get everybody back in the chart. It just does what it wants to do. How else could I do that? I'll figure it out. Y'all talk amongst yourselves. I'm gonna look at QQQ consolidating. So nothing's going on here. QQQ is consolidating at 290.25, around that 290.20, somewhere between 290 and 290.50, somewhere between 290 and 290.50. So maybe we'll catch another move. Okay. So let me go and figure out how to get you guys back. Let me see, hide it. See if that works. I can't explain why that is an option. If you've done StreamYard, when you go to present, there's an option for you to share a screen, but if it's not there, you can't share it. And sometimes when I go there, the screen is there, and sometimes when I go there, the screen is not there. And I haven't figured out the key to that yet.
Welcome
but
back.
I'm on it. It has something to do. How come I can't minimize this?
The suit stems from ProPublica's secret IRS files. Those use tax returns from an anonymous source to expose the low
Let's
taxes
try this.
by billionaires.
No, let's try it this way.
The IRS willfully failed to establish adequate administrative, technical, and physical safeguards for the IRS's data, and then unlawfully disclosed those materials to ProPublica. The articles revealed that Griffin $1.7 billion a year
Nope.
in 2013 and 2018.
Okay, I guess I'm gonna have to close it and do it again.
28%. That made him the second highest tax.
I quit it. I did my one thing. I knew I did the one thing I know. The one tech, the one tech trick I know I did. It didn't work. What? Oh Lord, y'all! I only know one tech trick. It's to turn it off and turn it back on. Oh Lord, it's the one tech trick I know. What the heck? Okay, I'm gonna have to do something unthinkable. Y'all, I'm gonna dip out of here for a second and see if I come back in, if that will reset this thing. So I'm gonna see y'all in 2 shakes. I'm leaving the studio, whatever that means. Are you sure you want to leave the broadcast? I'm gonna leave. If I lose y'all already know my heart. I'm trying to figure this out. So I'm gonna leave and come back and see. If I leave the studio, does that end the broadcast? It doesn't. I'm leaving. I'm gonna try. Change you may not be saved. Okay, I don't want to save anything. No, I'm scared to do that. Cancel, stay. Okay, let me return. No. Okay. I know what to do. Hold tight. Oh, wait. Gotta have a backup computer, apparently. Okay, so I think we're okay here, but now I'm still going to go over here and try to add this Thinkorswim. So let's see what happens. I don't know what's going on with my other computer. It won't link up to the internet. So we'll see. We see. I'm gonna peek over here at QQQ though. A bunch of chop. Bunch of chop to chop. Okay. Uh-oh. Is anybody following QQQ? It looks like here comes the big red candle. 913 to the 50. Something similar to that. Chart. Let's do
Let's narrow it down a bit. Goldman Sachs outlining their top picks for 23 in a new note, ranking Uber number one, with Amazon and Meta rounding out the list. Joining us this morning, the analyst behind that call, Goldman Sachs Managing Director Eric Sheridan. Eric, good morning. Great to have you back.
Great to see you, Carl. Happy holidays.
Same to you. We've talked to you before about the size of your universe. You certainly have a lot of names to choose from. Just very simply, tell me about Uber, and is it actually at the very top of this list?
It is at the top of the list from a risk-reward standpoint among the coverage universe we have. And I think as we started to think about next year and what's going to work on the consumer internet space and broadening it out to some of the other names in interactive entertainment, enterprise computing that we cover, we're looking for elements where there's rising utility, management teams that are willing to protect profit margins irrespective of what happens to the macro environment, the ability for companies to possibly return increased levels of capital to shareholders, and importantly within that checklist, we think a rising margin structure, no matter what happens on the macro environment, was pretty key to us, because we think that's where you're going to get some support on the valuation levels as you look out, especially to the first half of 23, but we believe that extends all the way through 23, but probably more importantly over the next 6 months.
That's interesting, because Khosrowshahi has not been one of those CEOs that has been advocating or preaching the gospel of massive cost reduction, headcount reduction. How does that work? How do you get that margin upside without what some argue needs to be a culling of resources in the near term?
Well, I think the most interesting thing with Uber is Uber had its moment in time at the height of the pandemic in the first half of 2020.
Now I'm going to go back and add that indicator the same way you showed me before. Tell me I'm going to go here. Because I'm on a different computer.
That was sort of Dara's moment by fire, to be honest. And then again, in the middle part of this year, the messaging shifted. If you go back to the earnings call in May and pretty consistent execution to the upside on EBITDA since then, we think the company has done a very good job of rationalizing costs, narrowing investments, picking the spots in the globe they want to compete in, picking the product sets that they believe are the best position for them to drive returns to the long term.
Perfect. I just have to keep a backup computer because I'm telling you, my new computer locked up.
$5 billion plus adjusted EBITDA in 2024. That's a pretty healthy growth rate looking out over the next couple of years in terms of EBITDA when compared to the potential for revenue growth. And that's what excites us.
I don't know if the video on this one, I don't know if the quality is better or worse. Is this computer video quality any better or worse? Is the audio any better or worse? This is this is an all Mac.
Do you ever see Uber
getting
above $100 billion?
Okay, so I'll turn the TV down.
Will it ever sort of fulfill that disruption that VCs in the pipeline?
Is the audio, how's the audio? Mostly because of the TV. How's the audio now? I turned the TV down. But this one, I tell you, this is an all Mac. This is an all Mac. This is a big old Mac. Nobody got one this old and big. Hopefully the audio is okay on this one. I can hear you, but not the, okay. So I'll turn it up just a little bit. Because we definitely want to.
TMT more broadly would be that if you capture consumer utility, especially if it's tied to a subscription level, Amazon Prime is probably the best example of this. The rising incremental margins, the rising spend per customer tends to create a lot of platform value over time.
Now, can you hear the TD?
Let's talk about another one of your picks for the year ahead, and that's Amazon. This is a company that has been embarking on layoffs and perhaps more efficiencies. What's the bull case here?
Yeah, I think they were reactionary to the negativity that came out after that last set of results across all of large cap tech at the end of October. I don't think we're anywhere near done the rationalization of investments and headcount at names like Amazon. I think you're seeing a couple of cross currents at Amazon. AWS is clearly going to slow if enterprise demand slows over a short period of time. But long term,
I like my new indicator.
What your last speaker just said, the bull case for cloud computing of 20% plus top line growth and mid-20s or better EBIT margin long term is still well intact in the second half of 23 or 2024 and beyond. So we still think you own the leader in cloud computing within Amazon. The more important litmus test for Amazon over the next 6 to 9 months is, can they provide investors a confidence interval in returning to normalized e-commerce margins? This is an e-commerce business globally that's absorbed in excess of $25 billion of headwind in terms of costs from a mixture of COVID, supply chain challenges, wage inflation, energy inflation. Getting back to a normalized e-commerce margin would actually produce a GAAP earnings level that makes Amazon look quite attractive on GAAP earnings. I don't think we've ever spoken about Amazon being attractive on GAAP earnings as you get to 2024 and beyond. That's what gives us confidence in Amazon. There's a lot of self-help here on the margins that this company can do over the next 12 to 18 months.
Yeah, rarely. Okay, finally, Meta, the third of your top 3 picks here. How can you, Eric? Because isn't a bet on Meta essentially a bet that Zuckerberg blinks on all of this metaverse spending? I mean, as fine as the core business might be, doesn't that get papered over by 10 billion plus spending on the metaverse?
Well, I'll answer it this way. Compared to where we were a year ago, where there was a lot of hype cycle around the metaverse, we're in a very different spot right now. So
you know what I just figured out? I don't think pop-ups show up.
It's one
Let me
of
do
the
that
companies that
again.
continues to have easier comps as we move into the
So you all
front
didn't even, let me
half of
see
next
that.
year.
I'm gonna open up, no.
About 7 or 8
Pop-up,
different
did pop-up
statements on
window
the
show
earnings
up?
call in October that would point you to the core business getting better. We just were out 3 weeks ago coming out of Cyber 5 saying that Meta is surprising to the upside on advertising revenue in Q4. And a lot of the investments in the core business are meant to drive elements of user growth, engagement growth. But if you
Looking to
remember,
see if the studies windows, when you open it up, does it show up on the screen?
Away from and convinced investors that they didn't have an engagement problem on the last earnings call. Yeah. Now the cost side took over the narrative.
The studies don't show up.
We think the core business
because I'm in the studies menu now, and you can't see it.
Yeah.
That's crazy. Okay, so that makes sense. I don't know why that is. Maybe it shows up in a separate page, but it didn't show up. Okay. Man, that morning move looks so delicious.
AI and its relevance in 23. There's a lot of
I guess we're gonna see what happens this afternoon.
We'll talk more about that later in the show. And maybe it's the nerds talking about that, though, Eric, because on my Facebook feed, I see my friends putting their photos through this filter and making themselves look cool, and they're more interested in that than reading AI-generated essays. Is any of this going to disrupt the players that you're talking about and that you're looking at in 23?
Look, we look at all disruptive technologies and try to factor it into our thought process. I've played around with ChatGPT myself and am fascinated by the technology and been both intrigued.
I'm gonna look over at Ford, check it out, see what Ford doing. Just move around, see what everybody else doing.
From the OpenAI
I'm gonna put Ford on my watch list.
From a technology like that disrupting the scale of some of the players. And then also this conversation leaves out that many of the players we're talking about are already making those kind of investments themselves. I think it was CNBC reporting just yesterday that Jeff Dean from Alphabet was saying that they have a similar technology but they would be
Yeah,
held to a
because
different
you can't
standard
see
if they
me in
lost
the
in the public
window. The
domain
window
with
that
a lot
pops
more
up, it comes up
guardrails.
in a
So I think you're
different,
going to see
it's a
AI
different
as a
screen. You have
driver
to share it
of
a different way.
multiple
Oh,
levels of
see,
consumer utility and enterprise utility going forward.
I'm
It's going
learning
to be one
every
of the
day.
biggest secular themes in technology over the next 5 to 10 years. But I think to take sort of an early data product and say that that's the final answer, I think it's a little too soon for that.
It's going to be fun to talk about, though, in the coming years. I mean, it's already just so interesting, and we're so early. Eric, that was great.
Ford
Look forward
got
to a lot more
news.
soon. Thanks so much.
Tesla gives some friendly advice from former Ford CEO as stock sinks further. Oh,
Have a good time
Lord.
here. More on what to do with the name and what Twitter has to do with it. That's next. Tech Check is just getting started.
I thought it was the exact same thing. Ooh, look at poor Amazon. Oh, Lord. What was that? Google. Yeah. Y'all want to see a company that's doing well? Take a look at Pepsi. Pepsi is not feeling the pain. Where is it? Let's see. Oh, I hate this one. Let's look at the 3-year. Y'all look at Pepsi. Pepsi is steadily going up. Pepsi hit a high, 186.84. I'm not mad. And it looks even better over the 20-year. Man, Pepsi is doing all right. Let me keep my eye out on QQQ. See what she doing. On the weekly. In between 78 and 290. Well, that'll be about right. So these are some support and resistance lines I must have put on some time ago. But you can see they were placed right at 295. And sure enough, it looks like over the last 1, 2, 3, 4, 5 weeks, this is where QQQ has been playing, right in between this little range, 278 to 290. Yep. Right in between there. So let's look at it here. And daily. I like this new indicator. So nothing. That signifies a downtrend. Oh, it's yellow and red. Oh, I see. And it's on the bottom. I see. I really like this TTM. Oh my goodness. Game changer.
Let's get a gut check on Tesla. CEO Elon Musk tweeting last night that he will, quote, make sure Tesla shareholders benefit from Twitter long term. A little late on details, though, and in the short term, that has not been the case. The stock is down more than 60% from its all-time high last November, and it has continued to suffer as Musk has focused on the social media company. Shares have fallen more than 50% since he announced his intent to buy last April, nearly 30% since he became chief twit in October. That said, it is a cheap time to buy. Tesla's forward P ratio dropping to 29 times earning. That is its lowest ever, as you can see on that chart there. Guys, there are some that still like it. Jonas, notably over at Morgan Stanley, has a $330 price target. John, he says that he's excited about the Cybertruck and the Tesla Semi in 23.
Yeah.
If they can pull it off.
Yeah, but 29 times earnings isn't cheap. Like, relative to, everything's cheap relative to what it was last year, but 29 times earnings, not cheap. 20 times earnings, hard to argue that that's cheap and it's not there. Not saying it's going there, but this is why Elon Musk didn't want to buy Twitter
Hey,
after he wanted to buy
Tony.
Twitter. Carl.
Hey, welcome, welcome,
Indeed, it has made it more
welcome.
complicated. And by the way, Jonas
Well, we
does
missed the big morning
break down
move,
his
but it was
forecast
a
for
beauty.
EV penetration out
I
to
could just
fiscal
look
year
at it.
30.
So
As he
hopefully
says,
we'll
the
have
brakes
something in the
are screeching
afternoon. It
on
went
EV
on
demand.
for, what,
Meantime,
5,
Sam
10,
Bankman-Fried
15, 20,
denied
25,
bail
30,
in the
35,
Bahamas, as you may
44,
know by now.
about an
As new FTX
hour
CEO John Ray tells House
of
Financial Services,
straight
the
growth.
company he took
I
over
think
committed,
the
quote,
stock went up
old-fashioned
288
embezzlement.
to
What's
290,
next for
about
regulators?
$2, more than $2
Chairman of the
in an hour.
CFTC.
That was a
Wait a minute.
move. It was a move. It was abuse. But I don't usually like to jump in on that morning stuff. I probably could have gotten in around 10 and rode some of it, but it was so oversold at that time. I wasn't sure. But we wait. We wait. Let's see. Tony, you trading anything today? Don't try to wake up. $290.73. $290.74. 77. Two. 290. Oh, well, welcome. All of us are new. Feel right at home. I just saw your comment. You are right at home. You are with your people. We are all new. Everybody here. I don't know, except for C-Bar. C-Bar's been some, and then L2. L's been trading for a while. I am new to it. I placed my first options trade in October. And so I thought I found a lick. I was like, oh my goodness, because it's not complicated, but I mean, you do have to be careful. I mean, it is investing, it is money, and you do need to be knowledgeable, and you do need to have all those things. But when I tell you, you see this pattern that happened this morning, it looks very different from what's happening right now, this sideways thing. That's what we're looking for. We're looking for that up movement or that down movement, and we just need to get in and get out, get the money and go away. That's all this is. I promise you, that's trading. That's my take on trading. 3 minutes. Everything you need to know about trading. Find the pattern, jump in, jump out, go home. That's trading. And from the mind of a kindergarten teacher. That's how I would explain it. Look for the pattern.
So if I was to kind of
look for all the signs, all the signals, check your signals and check your pattern, jump in, jump out.
In 23, that's $30 billion
Rinse
of
and
additional
repeat.
revenue for our industry.
That's it.
Next year.
There's no math involved, folks. Not really. This computer does it all for you. So, but we did learn today, Tony, about a new indicator. C-Bar introduced us to the TTM squeeze, and I'm excited. Oh my goodness. I'm excited about it. I love color on the chart. And I like an early indicator too. So I'm watching for what happened this morning, how those blue bars came in at the bottom, to see if there's a
Bertha,
repeat.
thanks so much, Bertha Coombs. Big tech facing big problems thanks to a new EU
And
law
this looks
targeting
like it
names
might
like
be
Apple,
trying to
with billions in
build.
App Store profits at risk in
It
the
looks
process.
pretty good. That
Steve
second one
Kovac
is
joins us
stronger
with the
than that
latest
first one
and what's
was.
important to understand in light of the news this
So,
week, Steve.
Hey there, Carl. Yeah, let's break this all down because this is all because of the Digital Markets Act, or DMA. That's the law in the EU that
it's
passed this
about
spring, targeting the
noon.
power
I
of
say
big tech
anywhere from
companies.
12
Now, we've been
o'clock
expecting to hear
on.
about
You
how
know,
Apple was preparing for the
can pop
DMA
up in the
since the
afternoon.
law went
She
into
could pop
effect
up. She
just
could
a few
drop
weeks
off.
ago. In Apple's
She
case,
likes
part
to
of it
look.
is they're
Okay,
required
so
to
look at
allow
our
these
MACD
third-party app
saying
stores
get ready
and
for a
open up other
crossover.
parts of the phone to third parties.
And that
Now, this
RSI
Bloomberg
is
report
pretty
says Apple is working on
high.
a version of iOS
So, but we've
now
got some space, some
complies
wiggle
with the law for
room.
when it goes into
So let's
enforcement,
see what
but that's not
happens.
until 2024. But the interesting bit
Is
from
she
the
getting
report,
ready to do
only the
something? Is
EU
she
will
going to
have
do a
the
little
third-party app
dance?
stores. The rest of the
I
world
don't
will
know.
not. So Apple says they're doing all this in the name of fighting for privacy and security, and that's all good, and we can take them for
Can you
face
all hear
value in
Trader
that. But what
TV?
it talks
Just a thumbs
less
up as
about
long as
is
you
how
can
the
hear
App Store
everything.
profits and margins that they're trying to protect as well. Now, the EU is a tiny market for apps, and estimated
I need
$6
something to
billion
eat. I haven't eaten all
US
day.
in sales last year. Compare that to the nearly $29 billion in sales in the US and $85 billion globally. Now, this tells me Apple is going to fight these kind of regulations country by country instead of just ripping off the Band-Aid and making the changes globally. This is also welcome news for companies like Match Group, Bumble, and Spotify that have been complaining about Apple's fees for years. But it's even more important for gaming companies because, well, that's where all the money is on the app stores. Microsoft and Epic Games would love to sell iPhone games directly to customers, and it takes away a lucrative, high-margin revenue stream from Apple. And Apple may still find ways to charge third parties for access to iOS, so they're not going to lose all the revenue, but they might find other ways to license access to the system. And look, it's going to take years, Carl, for this to fully shake out. And while the EU may not have big App Store sales, U.S. lawmakers here are considering similar legislation that'll have a lot more impact on Apple.
Yeah, certainly a lot at stake here, Steve. Thanks for laying that out for us. It'll be fascinating to follow. Speaking of regulation, the crypto crackdown is here. The Senate Banking Committee holding its own hearing today on FTX's collapse. That is while Sam Bankman-Fried is being held in a correctional facility in the Bahamas after he was denied bail. The former FTX CEO facing numerous criminal and civil charges from the Southern District of New York, the SEC, and also the CFTC. So what does this all mean for Bankman-Fried and the future of crypto regulation? Joining us now, former Commodity Futures Trading Commission Chairman Timothy Massad. Timothy, thanks for being with us this morning. I want to first ask you a little bit about the language in the CFTC's filing yesterday. It said it called Ether and Tether commodities. What do you see as the significance of that designation? And do you think that the agency is trying to position itself as sort of the main regulator of crypto?
No, I wouldn't call it that. I mean, look, when I was chairman, that's when we first declared virtual currencies or commodities. That was back in 2014. That gives the CFTC authority to set standards for the trading of crypto derivatives, crypto futures and swaps.
I am so loving this TTM squeeze. Thank you very much. I've heard of this indicator, and I think at one time I might have even had it on my chart, and I just never went back to it. Oh, but do I like it?
Crypto assets occurs when you go on and you just trade for cash, or you trade a pair of Bitcoin and a stable coin. It can't set standards for that. Now, there have been proposals in Congress to give it that power. It only has the power with respect to that spot market to bring an action for fraud and manipulation, which is why it's brought a complaint against Sam Bankman-Fried. It's kind of like the way to think about this, because people often ask me, well, why is that the case? Why is there that gap? And I say, well, it's like every other commodity. Think about cows. The CFTC has the authority to set the standards for the trading of cattle futures, but it can't tell people how to buy and sell cows. It doesn't have that power. So that's the distinction.
So, Timothy, do you still think that that's the right designation, that cryptocurrencies like Tether and Ether should be considered commodities? And does that mean a lighter touch?
Yeah, I think clearly some are commodities. I think a lot of crypto assets are securities. But look, that issue of whether something is a security or a commodity is what has bogged down the implementation of requirements that would, might have prevented something like FTX, or at least minimize the risk of things like FTX. Meaning, these crypto trading platforms aren't required today to follow basic investor protection standards like protecting customer assets and prohibiting conflicts of interest, meaning you can't have a conflicting business that you're operating, meaning, and standards that say require transparency and governance. And I propose, sorry, go ahead.
Okay, y'all, looks pretty quiet. Looks like we're
Timothy,
consolidating.
are a lot of the issues that have not been resolved, as you correctly state. This is why we don't have the regulation. So should there be one agency in charge? Should it be the CFTC?
290.85. Oh no, she might be on
Those
the
that
low.
argue that
No
its chair was
pop-up
too
this
cozy with
afternoon.
SBF and too lenient on cryptocurrency over the
No,
past few years.
I don't think that's true at all. I mean, the one part of the FTX empire, they did own a crypto derivatives trading platform, LedgerX. They acquired it. It already existed as a derivatives exchange. That part isn't part of the bankruptcy. That part is operating just fine. Customer assets seem to be there. So I think this is nonsense about the chairman being too cozy. But we shouldn't be trying to remake the regulatory framework. We have a fragmented system. The SEC will still have a role in this. The CFTC will still have a role in this. That's why Jay Clayton, the former SEC chair, and I have said, look, what needs to happen in the short run to get better investor protection standards is the two agencies should get together, come up with some basic standards, because the standards we want are the same in large part, whether what you're trading is a security or a commodity. And they should basically demand that these trading platforms implement those standards and say, we won't shut you down if you implement those standards while we sort out these classification questions or while we wait for Congress to, reshape this.
There's been calls for them to work together to better regulate the industry for years, Timothy. Why hasn't that happened, and why do you think there's a better chance that happens now?
Well, obviously the FTX collapse or implosion is a big motivator. I don't know that there's been calls along the lines of what we're suggesting, because we're suggesting something a little bit different, which is they actually write joint standards.
I'm gonna grab something to eat.
We're not gonna, we want you to follow
and I'm
these
right here in the kitchen
regardless
with
of
y'all. I'm
these
watching
classification
QQQ.
questions. What people have said to date is they should get together and sort out which crypto
Do this
asset
hoppy
is a
hoppy
security
thing that she
and which
does.
is a commodity. That's like an incredibly difficult thing to go through 20,000 tokens and decide that. So we're saying skip over that. Let's not worry about which bucket it falls into right now. We need better investor protection. So, come up with these standards and basically force the industry to abide by them.
Timothy, great to get your insights. Timothy Message.
Thank you.
Let's check in on the market sphere. All the major averages fractionally higher, and almost exactly the same fraction. About 2/3 of a percent would translate into 230-ish points on the Dow. Still the top of the tech world's got a new viral toy. Mentioned it before, not the metaverse, more on the AI tool Morgan Stanley is calling.
If QQQ makes a move, I'll be back. But let's see what time it is. I'm thinking she's gonna finish consolidating and play right between 290, 50. Unless she make a move. And 291. I'd be surprised if she pops up above 290. Whoa, so you just don't, well, you want to be surprised. So you see that 80. Okay, wait. Let's see. Maybe she's gonna finish her afternoon, her morning rendezvous. Let's see, 3 minutes. 38. Hmm. 37. Uh-oh. Let's see what you do. Maybe you can get above 291. 38. 291. Mm. 92.
Welcome back. Let's talk Chat GPT. We mentioned it at the start of the show, and you may have heard of it already. It has gone viral here in the Bay Area in particular and in tech circles over the past few weeks. It is an AI assistant that uses natural language processing to offer answers and questions, and to offer answers to questions and commands that are read like they're coming from an actual human. It can answer essay questions, write songs, give you a more complete travel itinerary, recipe ideas, all without searching through pages of search results. Now, what you give up in that time, though, you do give up in accuracy. The results are impressive, though still far from perfect. It was launched by OpenAI, a startup co-founded by Sam Altman and Elon Musk and backed by Microsoft. And it caught the eye of Wall Street this week. Morgan Stanley asking if it represents a structural threat to Google. Still a long way from that, though, the note allows. Google has scale 1 and 2, is already a leader in artificial intelligence, machine learning research. But internally at Google, employees, they are questioning whether ChatGPT's viral moment represents a missed opportunity for the company. Our .com reporter, Jen Elias, got access to that all-hands meeting and reports that CEO Sundar Pichai responded that they do have a lot planned in the space in 2023, but they have to move responsibly. I'm sure, guys, that you have had a chance to play around with it. Whether it lives up to the hype is a big question. So I did ask it to write an example of how ChatGPT is overrated. Here's what it spat out. It said ChatGPT is not as intelligent as it's made out to be. It is simply a text-based chatbot that is programmed to respond to certain keywords and phrases. This means it can't actually understand the context of conversations or think for itself. And Julia, that is kind of the big complaint, is that it sounds really intelligent, but when you go through the details, it's not there, it's not accurate or not as useful.
Yeah, I would also say it's not very funny. I asked it to tell me a funny story, and the punchline just didn't make any sense. And maybe that is a failure of artificial intelligence. I mean, one thing that's so interesting here, Deirdre, is what you mentioned about this impression of accuracy. It sounds like it's a human talking to you. It sounds very accurate, but you don't actually have the
I'm just watching to see if QQQ can stay up above 291.
So when I signed up, I thought it was really important to note that they flag some
And if it's going to, because we just have a little crossover here. And there's a crossover starting here. So close to oversold, so I don't know. Just watch. She might be getting restless as noon. Maybe she wants to pop up, pop off.
Which is fine. This is a very
So I'll just be watching. Y'all let me know if she pops off. Somebody holler or scream if QQQ pops off. Hey, Bumpy.
Taking some travel advice.
I'm gonna dip off over here and enjoy some of this jerk chicken and some of these rice and peas. And I got my eye on QQQ. I'm watching with you guys. I'm trying to see if she's gonna jump off. This the afternoon jump off. We're gonna see. Oh, she at 216. This could be 1, 2, 3. Let me look down on the one.
machinery.
Heavy machinery, exactly. Like I don't
She
want
could
to
be
get
getting ready for her
lessons from
afternoon
ChatGPT.
act
It'll
up.
make you drowsy though. It's interesting enough to keep you awake.
But I seldom want, and here's I guess sort of the shoot down case on ChatGPT in the near term being a disruptor to some things. When I'm doing a search online, I seldom want an essay as an answer to anything I'm searching for, and I often do, Julia, as you mentioned, want references. I want to know, how do you know this answer is correct? And algorithms don't always have reputations to protect and expertise in particular subject areas that they can project. So how do you know? If you ask it for a recipe, how do you know it's coming from a good chef as opposed to the average of all the chicken parm recipes that it could search online before giving you the answer? I don't know.
I mean, sometimes you want an
Let's see
average
what she
chicken
got
parm
in the
recipe,
leg
right?
that she
So
can
I think
go.
it's really about more the use cases. And I think what's so interesting here is this question about the risks. And I think the fact that Google has not gone down this road is entirely because of those risks. You also have to wonder what the business model is going to be here and whether maybe this is more of a threat. This actual technology is more of a threat to something like Facebook Messenger, which is trying to use chatbots to replace humans.
No, if she can get above it, we'll
Chatbots to
see.
replace humans when it comes to customer service. Is it more going to be a great tool for that than it is for replacing search functionality? Because if I say I want travel advice, I want to actually be able to click to learn more to maybe book something.
Right, all valid points, but we have to remember that this is really the first iteration, and it is the possibility of what it could do in the future is what has people excited, and that we're really getting a glimpse of now. And in terms of sheer computing power, right, there's implications across the chip space, which Morgan Stanley identifies NVIDIA, AMD, Marvell, Intel, Broadcom could all benefit if this kind of technology continues to evolve, which we know it will. ChatGPT is only the first version. There's another version coming from OpenAI, and we'll see what Google has in 2023, Carl.
Yeah, Morgan Stanley even uses that example. They say, ask it what airlines have the cheapest flights to Paris. Gives you a series of answers and then context about how to best search for those fares. And by the way, Morgan Stanley doesn't argue this needs to be flawless, just effective enough to, in their words, disrupt Google's position as the entry point for people on the internet. It's going to be fascinating, and it's such early days. Meantime, SoFi shares are headed higher this morning after news that Anthony Noto bought more than 1 million shares in the past couple days. Trying to do the math, a little more than $5 million worth. And with shares down almost 70% since January, he's getting a discount. Tech Check is back after this. Deutsche out with some top chip picks for the new year. And a new note they're calling bottom fishing. They say buy Marvell and Qualcomm as the firm calls their estimates and valuations de-risked. And stocks with underappreciated stability like Broadcom in their view. More market actions coming up after the break. Don't go away. Cloud is definitely top of mind for investors this week on the heels of stellar results from Oracle, a big take-private deal between Coupa and Thoma Bravo, and Cloudflare kicking off its Impact Week. Here with more is our Frank Holland alongside a special guest. Hey, Frank.
Hey, Carl. Thank you very much. Right now joined by the co-founder and CEO of Cloudflare, Matthew Prince. Matthew, thank you so much for being here.
Thanks for having me on, Frank.
So as we mentioned, this is what Cloudflare calls its Impact Week. A number of announcements, including that the company has received a certification to do work with the federal government for cloud computing. Of course, just last week, we saw that big $9 billion deal with the Pentagon for cloud computing. Where do you see the opportunities? Is it cybersecurity, networking? Where are the opportunities for Cloudflare with the federal government?
Yeah, we're proud of having achieved FedRAMP certification. The federal government has long time been a customer of the FBI, DHS, State Department, Library of Congress, all longtime Cloudflare customers. But with this certification, we think we can further penetrate the public sector and, importantly, make sure that our customers who are serving the public sector have the certifications they need in order to make sure that the federal government and any state and local agencies are safe and secure, whatever they're doing online.
So Callan actually recently called Cloudflare one of their best ideas for 2023, a very bullish note. They said in part that Cloudflare is positioned to disrupt the networking, security, and telco markets, and opportunities such as serverless compute, IoT, and 5G could enable additional growth. The analyst also said you have a total addressable market of about $115 billion. But I have to ask you, just a few days ago, you actually raised prices for the first time in 12 years. What are you hearing from your customers as far as demand and price sensitivity?
Yeah, what we did was we really introduced an annual plan that allows people to keep the same price but pay us up front. And that helps us from a cash flow perspective make sure that we can continue to fund innovation, continue to fund the incredible rate of growth that Cloudflare's had. And what we've heard from customers is, thank you so much. We wanted to pay you more.
especially at our low end. And even though that's a very small part of our market, I think it shows that we are really without peer in this space. We are really doing work that customers value, and we've seen very little shift away from paying for our services. And so I think, anytime you raise prices, you always want to make sure that you do it very carefully and very thoughtfully. And it's the first time we've done it in 12 years. But I think we have established ourselves as innovative. And what you get for the $20 a month that you paid for Cloudflare today is certainly a lot more than when we launched, years and years and years ago.
Hey, Matthew, it's Deirdre. Good to see you. As we look to 2023, some chief security officers, they may be perhaps nervous about how to handle security breaches. This year, we saw the first criminal prosecution of a company executive over a data breach. That was Joe Sullivan when he was at Uber. He was also at Cloudflare after that. What kind of precedent does that set, and how could that affect cybersecurity in 23?
Well, so Joe worked at Cloudflare, and nothing involved in the case was anything that he did while he was at Cloudflare. He was an incredibly honorable employee. And what I worry about, and what I've heard from other CISOs, is that if the responsibility of the CISO is higher than the responsibility of the CEO, because there is, in the case of Uber, every decision that Joe made was run by the CEO, signed off by the CEO, and the prosecution completely agreed with that fact. And yet the person who is potentially found guilty for those decisions is the CISO and not the CEO. I think that's an incredibly dangerous decision, which has been set. It's a dangerous precedent. It's new law that, again, was decided by effectively 12 random people picked from a jury pool in San Francisco. And if that's the standard that we want to set, then I think that's something that we should be looking at in Congress and making sure that we're really thinking through what all of the implications are. And I'm hopeful that as the judge decides sentencing in Joe's case, they look to the fact that he's an incredibly honorable person, a former federal prosecutor, someone who's probably done more to put child predators in jail than almost anyone else in the world. And I'm really disappointed by the jury verdict.
So Matthew, we want to pivot back to your business and just the general cloud computing sector. Those stocks, obviously, including yours, under a lot of pressure. Your shares down about more than 60% off their high currently. What's your take on the current M&A environment? We mentioned Coupa. I actually spoke to Wedbush. They have a number of other companies that are similar to your business, including Rapid7, Varonis, and Tenable, that they believe are on the M&A list for either a take-private deal or another bigger company to buy.
Yeah, I think that we are looking out at the environment. We're very biased against M&A. I think we believe internal development is the right thing. So we have a very high hurdle for any M&A we do. But we're seeing more and more companies, especially in the private space, that are starting to see that the valuations that they raised aren't tenable, and they're having trouble raising their next round. So I think there are going to be opportunities out there for us to pick up really great companies. We bought a company earlier this year called Area One, the email security space, and we've seen incredible success with that and that team. And so I think as we see interesting opportunities, we're definitely in a position to potentially take advantage of those. But again, our hurdle rate for these is extremely, extremely high.
Matthew, quick question, just a yes or no. Would you consider a take-private deal or acquisition by a larger company?
No.
All right, simple answer. Matthew Prince, co-founder and CEO of Cloudflare. Thank you for being here. John?
Frank, thank you for bringing us that. And a quick programming note as we have to break. Just a few moments away from CNBC's Small Business Playbook Virtual Summit kicking off at noon today. We have actionable advice on how to navigate the rocky road ahead for your business. Sign up now while you still can. It's a QR code down there. Be up there for a few more seconds. It might help. Go to cnbc.com for that. Check it back in a moment. on Peacock. One more thing before we go. Wings clipped. Twitter suspending an account from the platform that was dedicated to tracking Elon Musk's private jet. @ElonJet was an account used to track the billionaire's location using publicly available flight data run by 20-year-old Florida college student Jack Sweeney. The account had amassed more than 500,000 followers since it launched. Just 6 weeks ago, Musk said he would not ban the account, tweeting, "My commitment to free speech extends even to not banning the account following my plane, even though that is a direct personal safety risk." Sweeney's other accounts tracking private flights for Bill Gates and Mark Zuckerberg remain active, Carl. So here's one way that Elon Musk wants less attention.
Indeed. Although hashtag AVGeek is a pretty active aviation community on Twitter. Hard to imagine somebody's not going to try to recreate that content.
I was just going to say it takes publicly available flight tracking data. So it could be whack-a-mole for Elon Musk if he is, in fact, shutting those down or suspending them.
Just a couple hours now from the Fed statement and presser. Judges in the House, let's get to the half. Carl, thank you very much. Welcome, everybody, to the halftime report. I'm Scott Walker here at Post 9. Front and center this hour, countdown to the Fed. What must happen today for your money to rally? Simple question, complicated answer. We'll debate that with the investment committee.
Why don't we
Joining me
just
for
sell
the
what
hour
comes?
right here today at the Stock Exchange, Joe Terranova, Terry Firestone, and Jim Lebenthal. Let's check the markets. Got a pretty decent day going, so we're trying to rally again.
Hey,
Dow's good for
Bumpy.
0.5%.
I just went to lunch. I'm back.
4,000.
I had to eat something, y'all, so I could be human for the rest of the day.
The Nasdaq good for 0.5%
I am
as
back,
well. Russell
and it
good
looks
today.
like QQQ maybe
Is
maybe
the yield
it's
on the
going
10-year note, and that's likely to be
take a
closely
little
watched as
walk
we
down
progress
south.
towards, and then during and after the Fed meeting, of course. So, Joe, I asked
Hey,
you the
Bumpy.
question I asked at the top. It's a
Okay,
simple question.
so we're going through. Now we're under
On the Fed,
the 9 to 13
I think the press conference
and the 50.
on the chairman needs to not be over.
So
And it's as simple as that. I think not having the type
maybe
of
we'll do a 9
hawkish
to
rhetoric
13 to the 200. That's a nice little drop.
FOMC press conference will allow the market to rally. The market's in a position
That's
to rally.
about
It's
a
above the
dollar
200-day
drop.
moving average. The dollar is on the retreat once again.
Okay.
We're
I'm
10%
not gonna
lower
bite.
from the peak. You've
I
got
want a
mega
big. I
caps,
don't know.
X,
I
Tesla,
don't
all
know.
behaving accordingly.
But everything looks
I think the
good, you
market
guys. Look
wants
at
to rally. Let's see if the
the
trend allows it.
bars.
When you
They're red.
say not overtly hawkish,
We got a
what
little
kind of
trend coming
language
in. Ain't the
too
strongest
much
I've
for the
ever
market to
seen.
bear?
Got a
Suggesting that the
crossover.
market,
RSI
the
pointing
patient,
down,
the
going
stress
down.
test, the time on
RSI
the
is going
treadmill
lower and lower.
is going to be infinitely longer than the market expects. He's going to put the market through that stress test. He's going to maybe lower the
It's
speed on
definitely
the
dropping.
treadmill, but he's not letting
But will
the
it
patient or
stay?
market
Cause see, I
get
think
off
it's
the
gonna
treadmill.
play
So,
right
Carrie, do
around
we get
there.
any clarity on the
I'm surprised it
terminal
got that
rate,
low
right? That's
though.
what matters most. How high are they going to go?
So
Do we
maybe to
get
bounce
clarity
off of
on
this
how high
and
they're going
bounce
to
right
go
back
and for how
up.
long they're going to stay there? Do
This
we
is
need those
this is
questions
my
answered today
50s.
to mount a
I wish I
rally
could.
into the
Well,
end of the year, if
let me
not
see if I
beyond?
move this TV over for
I
just a
don't think he's
second. Can
going
I
to say
see? Okay,
anything
so my 9
specifically
is the
about the
yellow,
terminal
my
rate or
blue
how many rate
is the
hikes we're going
13.
to have. I do think we
I'm
need
pretty
him
sure
to
the
say
50 is this
that inflation
purple,
is going in the
the
right
50-day
direction,
moving average, and
and
I'm sure
that
the
the
200
concern he has
is
had
this
about
green one
labor
here.
costs and wages
So I'm
being
just
very
looking to
sticky
see
and being one of the primary factors in inflation that
290,
needs to be addressed is a
40.
lagging type of process, and that we would expect him, we hope that he says that we are
48.
seeing the effect of our rate hikes across
I'm
the
gonna see if
economy
it
and not
holds
singling out
at the
places
50
where there
day
has been no effect
or
and
if it
he
cuts
feels
through.
particularly concerned about that.
And if I look
Don't
down
want to
on the
hear great
1,
concern
because
about
I'm nosy.
pockets where too much stickiness, inflation is persistent, we really need to keep going. That would be
Yeah.
a detriment to the
We're not
market.
going to talk about that, though, right?
Well,
Why they
see,
have to stay the course? Because inflation
Yes.
I
is still
like this
too
new
high. They
indicator, Bumpy.
absolutely
We got a
hear
new
those
indicator
words.
today.
Jim Lebenthal,
It's
what
called
are
the
you looking for
TTM
today as
squeeze. You
somebody
should
who
add it.
probably
It's cute.
needs
I mean, you know,
a more
it's more
dovish
information, but personally for me, it's more
message than
color, and
most,
you know,
given what your outlook is?
who doesn't welcome more
This may
color
surprise you.
in their
I
life?
actually care much less than
More
usual
color.
about this Fed meeting. I'll
Okay,
tip
so
and
this
say I
thing
don't
is
care at
coming
all. That's
down.
too
So let me go
provocative.
back and look on
I'm
the
thinking
3
about what Carrie and Joe
and
just
pull
said.
out.
Joe saying that, it doesn't have to be, or it shouldn't be overtly hawkish. Let's dance with this for a second. Let's say he comes out hell-bent for leather and I'm raising rates. That would be so out of step, out of tune with what the data is saying that I don't think at this point the market would believe it.
There's been a heck of a lot of chest pounding this year, whether it's
just
Mr.
how far
Powell,
can it
whether
go?
it's Mr. Bullard. And I think it's grown long in the tooth. I think people are now, I got what I needed yesterday, Scott. Got what I needed, that CPI report coming in better than expected for the second month in a row. If I look at the granular data, whether it's used car prices, gasoline, rent, it tells me that trend is going to continue. That's what I need.
And you thought you had what you needed. The market went up 700. You're like, this is great. This is the start of something. I told you people. I told you. Now this shows it. And then the rally fizzled.
I think there's still some grudging acceptance to come. I don't think I'm being provocative in saying that the majority consensus for the last few months is, to use the same expression, the Fed's hell-bent for leather on raising rates. We're going to get a recession. Earnings are going to come down. The market's going further into bear markets. It's not unanimous, but I do think it's been the consensus. And I think it's taking time, but it's happening. And we're seeing it a little bit today for people to come to grips with. The worst is over.
I know. I'm glad you used the word coming to grips.
Trying to see what's going to happen right here. One of the reasons why we go through or bounce back up.
After the CPI is the fact that we
bounce back up. I really am. I'm okay if she just continues to consolidate right on up until this man says whatever he says. Because if he says that they're going to go full speed ahead,
of what they've already done, and lower
I'm gonna
inflation
put loaded up. If he says they're gonna pump the brakes, oh my God, this thing is going to the moon. I want to be here for either way. So I'm holding my little horsey until we can find a direction. Is anybody else? Yeah, that TTM squeeze. Oh, come on. It's this bottom indicator, bumpy. You see the very bottom indicator? It's this one right here. It says TTM squeeze. And the way you get it is you go up to studies, and studies is this beaker. And once you tap on that beaker, the drop down menu comes in. Just type in TTM squeeze and double tap it, and it'll jump in, hit apply and come on out. I don't know. Are you using TT? Are you using Thinkorswim yet, Bumpy? It's overall looking bearish or bullish today because I'm starting to feel very bearish. Hey, we don't care. We just wanted to take a direction and take it and go fast in that direction in really clear way. That's what I want. Give me some clear signs, some clear signals. That's what we're working with. Because that morning, oh my goodness, it was clear, but I wasn't going in. I stay away from the morning. But that was a perfect play. It just was, it jumped off crazy. And but this might have been a place after consolidated a little bit. Once I saw it, see it keep going. After it took that little break, I know what that is. So, looks like it was like two moves, really. One hop, two hops. So now that's information for me. I know how she does. She'll hop one, she'll take a little break. Yep, that's exactly what she did. Hop, took a little break, got on over here and consolidated. Just like Frank was saying, he doesn't understand the rhythm of QQQ. This is QQQ's rhythm. She's active in the morning, and she takes a show-enough nap in the afternoon, and then somewhere after 12 o'clock, somewhere between 12 and 4, usually maybe closer to 1, she'll start doing whatever it is she's going to do for the afternoon. Somebody said the bankers and the brokers are at lunch. So they probably take it, I'm sure that's about 11, 11 o'clock. No, they took an early lunch today. They went to lunch at 10:30. But this I thought was interesting too. That look, all these people who made money, maybe some of these people took some profits. And maybe somebody took some profits here. And then for sure, by this time it's fully consolidating. I would imagine that some of these people are people who are taking profits. Because they made their money for the day. And then, then they out. By 11 o'clock, they gone. 11 o'clock, this right here may have been people taking their profits from this morning. Or some part of it. Makes sense to me. I don't know that for certain, but that makes sense.
Essentially flat for the coming year. So if
you on Webull? Okay. Webull might have a TTM squeeze. I don't know what. Maybe that's what the indicator's called because it's got a MACD and an RSI. So check your Webull to see if it has this blue indicator. The one down at the bottom, this very last one. I'm sure it does. because it's probably a very, widely used indicator, just like RSI, MACD. Oh, this is my RSI crossover with my MACD.
Where the market is now. Listen to what he said, and we'll discuss on the other
one.
side.
But anyway, I like my
the
MACD
market is
like
undervalued.
this.
I think when the Fed gets it, and they will get it next year.
Oh, but I was trying to, I noticed something, and like you can see where she's consolidating, and you see how the RSI kind of stays like in these middle values while it's consolidating. That's a good sign because that gives her room to move. I'm glad. I like that. She consolidated, and then this RSI is kind of like right hanging in the middle. So she's got room to move up or move down. Like when the RSI is oversold like that, eventually, it's only so long you can stay up there. I've seen it stay up there a long time, but eventually it has to come down. What I like is like we're waiting in the middle of the day, consolidating, good, just chill, lady. And then this RSI is just kind of chilling right in the middle too. I'm glad it's not like hanging down like really low near oversold or overbought, because it can't stay there long, and it doesn't give you a lot more room. So if she stays in the middle like this and picks a direction one way or the other, maybe more room for us to make some pennies, some coins. Although look at her trying to turn down slowly. 290.31.
You're buying a lot of stuff because there are a lot of stocks that don't even fall into the category you say to avoid. So I'm bullish with muted expectations. I think Jeremy's right. I think you get 10% out of the market on the upside. Do I think you get 25 or 30% in 2023? I don't. I think this is a year that's going to be met with a lot of volatility. Let's throw the 200-day moving average out. Let's say it doesn't matter. It's a useless figure. What's more relevant is the fact of how overwhelmingly bearish the sentiment and positioning is as you turn the calendar into January. Now, I know you have Jeffrey Gunlock on overtime this afternoon. I'm not going to steal his thought, but he's right. Once you turn the calendar to January, all that tax loss selling, you're going to see some buying coming back into the marketplace that is going to lift markets.
So we wait for the announcement like everybody else.
Yeah,
the one thing I did see, and I noticed that now it's looking like it's underneath this, the 9 and the 13 was clearly above. They were spread all out, far like fingers reaching to the sky. And now look how they're closing in on each other. They're not pointing up to the sky. And, this is all tangled up. It's coming down. They're coming together. This looks like it's taking a downturn.
Very top of the show, we posed the question.
Even our new indicator, everything, even our RSIs, just chilling right there in the middle.
Is going to
so
react.
I don't know.
Says, well, what do you need to pay attention to most? The statement. We don't agree with that.
41.
Well, there's been some speculation by Fed watchers over when the
y'all.
FOMC
I'm just
modifies
waiting
the
like everybody else.
ongoing increases language
to
further or some further increases. Most of them think that doesn't happen today. So that goes to your point, Terry, that what happens if he doesn't allude to, look, we got a pause on our mind?
I think he's going to allude to something that's positive, meaning he's going to tell everyone that we see that inflation is coming down and that we are having an effect. And, people will go through every single word he states very, very carefully. And if there's positives and then he doesn't put all of the positives in, people will read that as a dovishness. So, he doesn't have to give us everything. He has to give us something. It's going to be 50. That 75 was off the table, days ago when he looked at the wagers on it. And the 50 and now 25 for the next has really come up in the betting. And
of course it does, but it all depends on how many 25s are after the 50, right?
Yeah.
Right? It's not
Don't
just
forget to like,
Bumpy,
hit the like button.
That it's not 125 and then pause. Then, Houston, we have a problem.
Yeah, but that's dovish in and of itself, right? When you go to 25.
Yeah, but not if you go 25 and then another 25 and 25 and 25. So you keep going, it pushes the terminal rate to a degree that makes the market uncomfortable. Someone who's not uncomfortable to lay out his view on what stocks are going to do next year is our next guest. He is our headliner today, Tom Lee, head of research at Fundstrat Global Advisors. It's good to see you. I have your notes of your strategy outlook, in which it's titled Less Crisis, More Opportunity. It's like 63 pages long, Tom.
I mean, if you need 63 pages to tell me why next year is going to be good, maybe you're trying too hard.
Well, we figure if it takes you a year to go through it, you'll be into 2024.
You just forget about next year. I hear you.
Yes, Marilyn, go enjoy lunch and meeting. Go, go, go. That's a part of retired life. All the discounts, all the soirees we can attend. Are you kidding me? Go enjoy, enjoy.
Because
enjoy. We'll see you back here. We'll be here chill until 2:30. I'm hoping something breaks free, y'all. See you in a little bit, sister.
In just the past few months, and is annualizing at 4%. This is before we've really seen the bite of the monetary hikes. On top of that,
we'll be here. We'll keep the lights
next year
on.
Than expected, because things like the PMI, the dollar, and supply chains are actually supports for earnings next year. And
Bumpy, you trading anything today? Paper trading,
is two other things.
real trading, anything?
Declines. In fact, in a year after a decline like this, and you say, well, earnings have to be good for stocks to have double-digit gains, that's not true. Out of the 21 instances stocks had declines in a single year, the following year, 18 were positive years. 7 of those had negative earnings growth. So stocks can do quite well next year as long as we're talking about this crisis on inflation ending. And I don't know. I mean, I just think today's FOMC.
You trading anything today, Bumpy? You doing any paper trading? I'm going back to paper trading. I'm starting Monday. But today might be a big day, so I didn't want to, not be in the house while Jerome Powell was making announcements. So, and then Friday could be, still a reactionary. We'll see.
To me, this is a Fed that has a little bit less work to do.
Okay, you coming on down? Shit, this might be the move, y'all. This might be the afternoon move. Maybe we just don't slowly trickle all the way down. Maybe they know something we don't know.
What don't you want to hear?
Ooh, Lord.
Well, I think the biggest risk is if the Fed says, well, we've had progress on inflation, and it's visible. Because remember, last FOMC, and several Fed members said there hasn't been any visible progress on inflation. We've had 2 months now of
we in
soft
straight up
inflation.
stair step mode
3 month
now, y'all.
inflation's down to 4%, been cut in half. But if the Fed
It's
says
just a
that
matter
doesn't
of
matter because we don't trust
290,
forecasts,
89,
and all we
that's
care
a dollar
about is wage
move.
inflation, well, that would be quite hawkish. But that would be something I think the bond market would challenge. I mean, the 2-year yield is telling us the Fed has one hike, and that's it.
If it gets under 290 and stays under
It's going to
290.
be below Fed funds rates. And I think to me, that's why they would have to be quite hawkish to shock markets. And there's a possibility that markets would just challenge the Fed on a view like that.
Maybe, I mean, it's time for, Jack Nicholson and a few good men. You can't handle the truth. Because if he says, well, we've had progress, but wage inflation is still too high, that's the truth. They believe that. That is in part why they are as
Anybody else watching what I'm watching?
And why some think they'll be higher for longer.
Okay, you're not going
because
to
wages have become pretty sticky.
sit back and kind of watch how things are going
Point,
because
Scott. I'm just saying the bond market.
It's not
Well,
I'm looking at this because this is going down, and we're let me see. Look at one. I just don't know how long. So that's looking pretty good. What you about to do? If this turns red, yeah, I'm gonna go ahead on and buy a. Whoa, no, I'm not either. Hold tight. Right, whoa.
As many of your guests have pointed out, if you look at interest rates, only the 2-year and 3 month. Actually, only the 2 years above 4% right now.
Okay, we're
So
going
the
cut
rest
to
of the
the
bond
200
market is
too.
below Fed funds rates.
Jim Leventhal has a question for you, a fellow bull. Yes. Hi, Tom. Won't call you Farmer Tom, but Scott said something. Said something at the beginning of the show that regardless of what the Fed's going to do, there's a heck of a lot of tightening that they've already done, and the effects are just now being felt. Here's my question to you. Let's dance with that. Let's say there is a slowdown in the first half of next year, the lagged effect, maybe earnings growth, maybe even goes negative this quarter or next. Isn't it quite likely that the second half of next year you get a re-acceleration in earnings, assuming the Fed doesn't go higher than 5%, key assumption, and that the market
This candle turns red and stays and finishes red. I think that's a definite go. Even if it turns red and it stays, I know, struggling at 290. It's no shot. 290. It has to stay under 291 for me to know. that it's gonna be going
if we do
down
have
for
a
real, for
valley of
real.
earnings in the middle of 2023, well, since 1920, the stock market has bottomed.
Nanos, okay. That's what we're waiting on. We're waiting on the Fed announcement so we can, you know, really capitalize. And it's taking some discipline, Bumpy, because you know I want to get in the game. Put me in the game, coach. But we're waiting. We wait. And I'm glad because look at this big old green candle. We wait.
Believe it or not, at a 3.5% 10-year, since 1930, the median PE is close to 20 times. So it would imply that we'd be exiting 2023 at a 5,000 level for the S&P, and that's above our target for 2023.
So, Tom, you have a fair value on the S&P for next year of 47.50, 17% higher than where we are now. Joe told me yesterday, I mean, he's obviously sitting right next to me now, but he said in overtime yesterday, and I think the exact words were, I'm worried about Apple. So if Joe's worried about Apple and the market itself seems to be worried about mega cap tech falling out of favor, can you get anywhere close to that target if mega cap tech doesn't participate?
That's $1 more.
It'd be tough because it's collectively the tech sort of juggernaut is close to 40% of the S&P. But I would say I think there's tailwinds, and we talk about our report for tech in 2023. But most importantly, if yields are flat, that's PE support. And when companies and households want to find their way out of a wage inflation problem, which is what we have today, there's only 3 solutions. One of them is invest in technology to replace labor. That's tech top line. Or it's policy changes that either try to get immigration higher or improve participation rate. But the easiest path is actually technology spend to replace wage inflation. That's bullish for tech.
Yeah, look, I mean, the street is out in force today defending Apple, specifically Evercore, Morgan Stanley, UBS, Loop, everybody reiterating either top pick, outperform, or buy. No big shock. I mentioned Joe. He has a question for you on something he's thinking about, which might be stimulating for stocks, or perhaps not. But I'll let him ask it. Hi, Tom. So the last couple of years, clearly buybacks a tailwind for markets. Understanding the economic environment being a difficult one in 2023, you're going to lose buyback growth. Can we still reach your S&P target without buybacks?
It's a good question. I mean, the buyback.
No, Bumpy, look, she did that whole little up move and she ain't doing nothing but consolidate. So I'm just waiting to see, is it going to break down? Is it going to break up? Because I can't see them making an announcement and it just consolidate on out the rest of the day. I don't know about that. I don't know. I got a feeling I think people in the market, they want to hear good news sort of go up. And I think, it may not go that way.
Debt is termed out 7 years, so they're not reflecting higher interest rates for another 5 or 6 years. And that by that time, the Fed could be cutting. So I think in a way, companies are going to still benefit from this higher cost of money, even if they do fewer buybacks.
Hey, Tom, I appreciate it very much. It's a big day. Great to add your voice to this conversation. That's Tom Lee of Fundstrat joining us. Last word, Carrie, to you real quick, because we're talking about tech. And I want you to be quick. Adobe's after the bell, right? You own it?
We own it.
Keyspace software, thinking about what's going on, stock's down 44% over 12 months.
Exactly. Well, they reiterated their guidance for the fourth quarter and next year a month ago. So things have deteriorated significantly since then. We'll hear about it. We don't think so. We think they'll start to show some improvement, both on margins, cutting costs, and the dollar being weaker is helpful.
Okay. Let's take a quick break. Then straight ahead, Wall Street rolling out their top stocks for 2023. We'll debate several of them in our calls of the day next. Plus, the investment committee is ready to grade your trade. Answer your questions about specific trades that you have made. Send us an email. AskHalftime@cnbc.com. Tweet us. Halftime is back in just 2 minutes.
Okay, so this thing jumped up $2 in the morning. It's just been raging right here between 290 and 291. Just back and forth between that little range, in that little dollar range. Yeah, we're gonna wait. Let's wait. 290.17. It's been between 290 and 291. So as long as it stays in there, anything outside of that range, I'm going to be looking at closely. Anything outside of 290, if it goes under 290 and it stays under 290 and it starts to dip below 290, like we're playing around that 290 mark. But if it breaks down past, definitely if it cuts through these last two moving averages, then that's something to discuss. It looks like this 50-day is holding it up. I'm pretty sure that's my 50 to 200. I can find out. Let me just go to my studies and find out which one is the 50, which one is my 200. You can just check the color. Okay, so my 50 is purple. And my 200 is green. So maybe I'll make my 50 pink. And make that other one green. Okay, 50 and it's the 200.
Those are our calls of the day. Tesla, named top pick. Morgan Stanley, that's Adam Jonas. Overweight target 330.
Okay, 289.
The pandemic revealed Tesla as the clear EV leader. The stock has been in an absolute free fall. Joe, you ordered the Joe T.
What's been in a free fall?
Well, I mean,
okay, let's
you
talk
call
about
it Joe
Tesla.
T, right? It's comprised of quality and momentum.
Okay,
You have to take this on question of quality right
maybe
now.
we
The
doing
momentum is going
something.
obviously the opposite direction. Yeah. Why does it turn around?
You have to take the good with the bad. I'll be on overtime on Tuesday, January 31st. I will tell you at that time what we decide to do with Tesla.
The rebalance.
The rebalance is on a quarterly basis, so we have the distinctive advantage of doing something.
That's like deeper than the deepest teeth.
Okay, but look, without question, the stock has lost its momentum. It's 497 billion in market cap. The valuation is still a little bit rich. You've mostly owned this stock based on momentum. And strategically, if you're hoping for some form of fundamental turnaround in the company from Elon Musk, you're not getting it. Why? Because he's blaming the Federal Reserve and he's blaming the economy for the troubles of Tesla. There's obviously something more that's going on than just the economy and the Federal Reserve. But as far as positioning, we'll address it at the end of January.
I mean, Goldman, they like Tesla. They cut the price target, though, to 235 from 305. Which is interesting. They call it because of softer supply demand, which is a question given what's going on in China, supply chain, et cetera, et cetera. All right, Exxon named the top 2023 pick at Morgan Stanley. Overweight, 114 is the target. Jimmy,
I'm tempted to go back to Tesla, but that would really tick you off. I'll just say it's a car company and leave it at that. ExxonMobil. So there's a supply-demand imbalance here. And it's going to continue. Why? Because we've turned down the Strategic Petroleum Reserve here in the U.S. massively. We need to rebuild that. That's going to be more on the demand side. What happens when China picks up after this post-COVID shutdown? Russian oil sanctions. I mean, I could go on and on, piling on here. It's a simple story that the supply-demand imbalance is going to continue. Massive share buyback in place, nice dividend yield. This is the place to be.
By the way, Mr. GM, with that side comment, Adam Jonas would agree with you. I mean, he says Tesla's gap can widen with the competition, and the pandemic revealed it as the clear EV leader. So you want to just deal with that since you went back? Let's do it.
Yeah, look, I make this simple. People, the bulls, and I'm not talking about Joe, right? The bulls on GM are going to say, look, this is an EV company. That Mary Barra and company have done a great job of building out profitability in the EV space in the next 12 to 20. Scott, it is an EV company.
GM?
You're
holding
an
EV company?
Yeah. That's where the growth in this business is coming from. That's where it's coming from. Wouldn't Ford be considered more of an EV company? So this is a yes, but here's the thing. What Ford did, strategy, okay, they said, let's flood the marketplace with EV models. We'll worry about profitability later. There's some genius to that. What GM is saying is, let's get one unified chassis, the Ultium chassis. Let's get that right, and then roll out all the models so that we get the profitability quicker by having a unified chassis.
The point is, GM wants to be an EV company. Tesla's
I know I'm being a little provocative. I know. I'm speaking about the future, but not the future 5 years from now. I'm talking to the future 1 year from now.
Some might say glib. You say provocative.
Some might say glib. Some might say a little glib. But look, this is a stock that is trading 6-7 times forward earnings. I think there's upside. I mean, I think you take that to 10 times, you get a pretty nice return on this. Tesla's trading at 28 times forward earnings. I don't mean to bash Tesla. I mean to say if you trade GM like the EV company that it's becoming, this is massively undervalued.
Okay. Terry, Schwab at UBS, top pick there. $90 is the price target. You own that, yeah?
Yeah, I like that. I'd say 100 is the price target. It's below a market multiple. The stock really benefits from the cash they have on hand with all the deposits in their bank. It also doesn't face the kind of competition from Robinhood and all the startups that people thought was going to be a big problem for Schwab or Fidelity and the bigger players. And so we think that it's a very good financial right here and attractively priced.
Okay. Let's get the headlines now with Bertha Coombs. Hi, Bertha.
God, here's what's happening at this hour. President Biden says the country should have societal guilt for taking too long to address gun violence and that the nation needs to do more to prevent future tragedy. Biden's statements comes on the 10-year anniversary of the Sandy Hook Elementary School shooting. Since Sandy Hook, there have been at least 54 school shootings involving active shooters, according to an NBC News count.
54 shootings.
U.S. soccer journalist Grant Wall died of an
Crazy.
aortic
That's
aneurysm
insane.
while covering the World Cup in Qatar, his wife said this morning. Wall's wife, Dr. Celine Gunder, said an autopsy was performed in New York and that there was nothing nefarious about his death. Wall collapsed while covering a match last Friday and had said on his website that he had been feeling ill. And a Florida pastor and his son have been arrested and charged with an alleged $8 million COVID scam. Investigators have been looking into the pair for some time after they allegedly secured a fraudulent PPP loan for a family ministry and tried to use the money to buy a house. Money was seized over a year ago. Halftime will be back in just 2 minutes.
NYSE.
And welcome to the ETF Edge portion of Halftime Report. I'm Bob Pisani. Estimates for the stock market in 2023, they're all over the map. With the fundamentals cloudy, many are looking at technical and trend following analysis. And there is an ETF for that. CNBC contributor Katie Stockton is the founder and managing partner of Fairlead Strategies and portfolio manager for the Fairlead Tactical Sector ETF. The symbol is TAC, but you didn't know Katie has an ETF. You started it in March. It's been successful. You got some money involved here. It uses a sector rotation strategy. You go between equity sectors, treasuries, gold. How does this work? What's invested in it right now?
So it's both sector rotation and also asset allocation. And importantly, it's driven by technical analysis, which is, of course, what you know me for. So charting the markets, which we focus primarily for the TAC ETF on long-term momentum. So we want to make sure that we're in areas of the market that have that long-term momentum. Of course, in a bear market cycle, we don't have a lot of that on the sector front. So right now, TAC actually only holds one sector, which is energy.
Yeah, essentially, I'm very light on the equity exposure here. Now, this is rebalanced on a monthly basis, so this really is tactical here. So you see here, essentially, you've only got exposure to energy and nothing else here. So what conditions would need to exist for you to flip all of a sudden from owning treasuries and gold to owning more equities? What would have to happen?
That's right. So it's very highly risk off is what we call it right now, with a big position in short-term treasuries, long-term treasuries, and gold via GLD, another ETF. And that positioning is appropriate for a bear market cycle. Now, when we come out of that, which I do think we will, perhaps by the middle of next year, so not too far down the road.
Welcome, everybody. I think everybody here is family, but if you are new, please like, subscribe, and share. My name is Sandra, and my channel is From Lack to Legacy. And we're a community of beginning traders that get together and support each other. We share information, we support each other through trades, we encourage each other to keep getting educated. We point each other in the direction of resources. So if that sounds like something you're interested in, welcome. Please don't forget to hit the like button. I think there's 16 of us watching. Don't forget to hit the subscribe button. If you're new, subscribe, share the channel. We want everybody trading. We want everybody making money. So we're trying to make some today too. Trying to catch another move, but I'm telling you, this slow creep down looks like a move. It looks like we may have waited all day for Jerome Powell, and the move might have happened right under our nose. 369, 12, 15, 10%. That was at 291, 289.
Set our sights on the
Now
next
it's about $1.25. There ain't nothing to sneeze at. That's $1.25 move.
Overall.
Most strategies are more bullish on the second half than the first half.
That's
right. We're going to have much more with Katie on how her TAC ETF works and the outlook for 2023 coming up on ETF Edge at 1 p.m. Eastern Time. She'll be joined by Ben Levine. He's the Chief Financial Officer of 3DL Capital Management. ETFedge.cnbc.com. Halftime report returns right after this.
Yeah, that's 200 days. Oh, that's the 50. It's holding. Holding. It's good. Yeah. So QQQ is just chilling. You know, doggone well, they don't care about gun violence as long as the majority of it can be contained in urban areas. Yep, it's no big thing. Just lip service. Been lip service for the last how many years? They said that was the 10-year anniversary of Sandy Hook. Come on. In 10 years, how many presidents have cycled through? Shoot. The last of Obama, one Trump administration, and then now a part of this. So that's 3 administrations have had their hands on that. I don't know. No political will on that one. 289.92. Okay, so this thing is still ranging between 290 and 291. It's 289.87. Same thing. About $1. Let's see, about $1.15. Move right there. Oh, I didn't get in on it. I think I'm going outside to play today, y'all. I need to find me a beach club, a rooftop, something. It's sweet too. Let's see what I got over here. Some water. 70. Mm. 80. That number lip service. You sure said it. So true. I'm back up to 290.
We're hanging on to gains. Hour 20 before the Fed. It's time now for Grade My Trade. First up, Gary, for you, you are the grader. It's from Jack in Minnesota. I bought 50 shares of PayPal and have a stop loss at 68. Looking for a 12 to 18% pop before I sell. What do you think of the trade?
I like the trade, Jack, and PayPal, which has come down significantly, like 75% from its peak. It's been one of those battered COVID darlings. If it goes up 15%, it'll be 85. That's still down, 70% from where it was. The stock trades for under 16 times next year's earnings. So we think that's a reasonable buy, and I hope you don't get to your loss stop.
Okay. Blair says, this is a trade for Farmer Jim. I bought shares of Qualcomm back in the fall at 170. It's now trading at 122. We can pull up shares to see exactly where they are today. So 170 is where Blair got in. Now Blair's wondering, what should I do? Because it seems like a loser.
Hold on.
Well, Blair, I think you're going to make money on this, and I think you should stick with it. I am. Let's talk about what's happened. Basically, earnings this year have come down on the back of what's been going on in the smartphone world, which is basically a demand decline. China has a lot to do with that. But the main point I'm driving at is that is temporary. And it's not just smartphones that you're buying Qualcomm for. It's the automotive application. It's the industrial application. So this, over the coming 12 months, should earn about $12 a share. Right now, it's trading at about 10 times those earnings. I would say that this easily deserves about 15 times based on the high cash flows that come from those earnings. And basically, 15 times gets you up towards 180. I think you're going higher from there. So stick with it, Blair.
But I mean, let's be honest here, okay? You can be bullish about Qualcomm, but he bought it at 170.
Yeah.
170. 170.
You got to give Blair
It's
a
at
stop.
124.
Yeah.
Just hold on, and I think you're gonna make money in it. Hold on for what? Dear life? And
No.
but
Look,
I mean,
can we
the
put a
stock's
stop
down a lot.
That's
Blair's
where
got a lot of company out there too,
Question.
from viewers who bought stocks higher and are sitting there lower, wondering what to do.
taking everything that you and Blair are saying 100% seriously, okay? You are supposed to hang on to this stock right now. I'm not happy either that it's gone from 170 to 122. I'm in it with you. I'm not selling a share. I do think this is undervalued here, and I don't think this is waiting for Godot or waiting until your old age. I think this is in the next year, in the next 12 months. You are well above that 170 buy price, but right now it's 122. If you sell it here, the question is, where are you going to? Where are you going to get a better return? Not where you bought it at. Where are you going to get a better return from this 122? I see a pretty good return over the next 12 months from this.
Maybe you think that you should average down. He or she. I'm not sure if female.
I do. I own a ton of this, which is the only reason I'm not buying more. I own a ton of it. I do think
So you'd
you're supposed to
average
buy. I would. I want to stop. Got to put a stop in. Sorry, Jim. You got to put a stop. You don't have to apologize. What's your stop? I don't own the stock.
120.
All right. But you said in the next 12 months, the stock's going to be a lot higher than what it is now. I mean,
This year caught me by
170.
surprise. This year caught me by surprise. I mean, going into this year, I did not expect a smartphone decline. It happened. There's a lot of reasons why. Now it's behind us. You got to look forward.
All right. So, Joe, lastly to you from Patrick, I bought Lilly at around 295.
Should I sell it now, collecting my gains after their recent report, or hold on due to their development of their weight loss drug? You own it in the Joe T.
It's in Joe T,
which is why you're grading.
We have an overweight to healthcare, so Lily's going to be a part of that. Patrick, anytime you ask the question, should I sell something? The answer to that is sell half right now, because subconsciously you're telling yourself you want to sell based on a risk management strategy. Sell half. I do think if you want to redeploy the cash, you could put it in a name like Merck. I think on a valuation basis, geographic revenue distribution basis, the dividend yield, all of it, Merck is a little bit of a better company.
Okay. Please keep your trades coming in. Again, you can email us, email us at askhalftime@cnbc.com. You can tweet us as well. Please do. A lot of you are, which we greatly appreciate, and we're having a good go at it, grading them for you too. We're counting down to the Fed decision. You know that. We're a little more than an hour away. About 75 minutes or so. Chair Powell's news conference to follow that. Mike Santoli joining us next with his midday word.
Anybody else see how these are all caught up here in this tangle web of simple moving averages and some more consolidating over? I guess the market don't wait. We just don't wait for Mr. Powell to say what he has to say. I don't know what this one else I could be doing. Still nothing. All right, folks. So we just gonna be sitting here chatting with each other.
Our senior markets commentator, Mike Santoli, has made his way, of course, to Post 9. I asked the question to everybody at the top: what does the market need to hear today? Do you have a sense of what
the market needs to hear? Go take a nap.
I think an acknowledgement by Powell of progress made to some degree. He did lay out in his Brookings talk, the sort of three legs of the stool for what he's requiring to gauge progress. And we're seeing some of that stuff kick in, right? So the services outside of rent, inflation coming down, those types of things. I think it's always just a pure Rorschach test, though, in terms of where the market's positioned ahead of time. Right now, the S&P 500 is the definition of staying neutral, in balance, on the way. It's in the middle of yesterday's range. It's at the 200-day average. And I think the reason you get the gyrations after the press conference, or even before the press conference, is because by definition, 40% of people are either surprised or unhappy, and then nobody has conviction in how the market's going to react. Right? Think about it. If there was a way to game it today, right now, and say this is how the market's going to react to what we know is going to happen, it wouldn't whipsaw like the way it does. So I think broadly speaking, the market has it right in the sense that the moment of peak panic on inflation is past, and we see maximum Fed. If they really jack the terminal rate up well above 5%, maybe that's an excuse for the market to back off a little bit.
Do you think Do you think they would let us know that today?
Yeah, it'll be in the outlook, in the dot plot. Yeah,
and we'll have a good idea.
And supposedly, people are trying to actually talk about when does that get submitted, right? Apparently, the committee puts it in on Friday, and they don't usually alter it after the CPI report. So we'll see.
I don't know if that's going to be, good enough. If the dot plot's going to be the story. If it's more, Jim.
I'm gonna be patient because this thing feels like a slow grind down. It's what it's looking like. It's what it's shaping up to be. Except for this volume is not.
Something came out that was just out of sync with the data, and you pushed back, and it was very reasonable. And I think the market will push back, is pushing back, right, with where the 2-year is, and saying if you guys come out hawkish, nobody's going to believe.
You know what, Kashkari, though, since you brought him up, he said, "I'll see your pushback, but I'll raise you services inflation."
Sure.
And the core, which is not in the headlines, it's not at the gas pump, but it's what is the stickiest of all, and why we're doing what we're doing, and why even he who is dovish suggests they need to be.
No, that's fine, but the market is also going to say, look, outside of rent, if you look at real-time rent, we know where inflation's going. So if that's the premise, it's much more about if Powell continues to say we need a long period of below-trend growth to get this thing done, to be confident about it, and that's going to involve more pain on employment and wages than you are now handicapping. That could be the area. Look, a lot of times the market just wants it to be done with, and we're past it, and then we see where we are. I think the market's pretty hedged up going into it, right? Been a lot of put buying recently. I doubt it all got flushed away in yesterday's morning rally, so we'll see.
We've learned our lesson, too, on reacting after the decision and then reacting a different way after the statement.
Sometimes even the next morning is when you have to wait till.
We'll see in a few hours. Maybe we will have some good reaction to talk about. That's Mike Santoli. He'll join us for our last word in overtime. Up next, been one of the hottest trades over the past 2 years. Now a new bullish call. Says the gains are just getting started. We revealed that trade. Discuss how the committee is playing it next.
It's going straight for 289. It's going straight for this 200-day moving average. It's just going to give back everything because this morning opened up at 288 and change. Is an inverted hammer a reversal candle? I'll go find out. Because maybe that inverted hammer is in bullish or bearish.
All right, Goldman's Jeffrey Curry today making a very strong case for commodities in 2023. Says the best asset class 2 years running, likely to be again in 23. Joe, he's bullish oil. You got China reopening, travel demand. I could go on for the reasons there. He likes gold. This means growth concerns can outweigh the impact of tightening. Gold should continue its current positive momentum higher. He's bullish on industrial metals. Figure the weaker dollar is going to help this out as well if it stays that way. What's your view here for somebody who owns Archer Daniels, Deere, EOG, Freeport, Pioneer?
Yep, and Valero. I agree with the call. I think agriculture is a critical component to have in your commodity portfolio, and I really like the copper trade. The world is short in terms of supply. Freeport-McMoran's a trade there.
He likes copper as well. Jim Cliffs, Kinder. We talked about Exxon. Do you believe in, what sure sounds like the renewed super cycle, if you will, for commodities, at least in his mind, because almost every single contingent of that he likes?
Yeah, I think there's a lot of building about to go on, not just here in the U.S., but around the world. And at some point, we're going to rebuild Ukraine at some point. But that's all of this is going to require steel, cement, energy. And, oh, by the way, as Joe just pointed out, agriculture is going to participate too, because we need more planting. We need more harvests. Benefits Deere, amongst others.
All right, quick break. Final trades are next.
Slow grind down. I like it. I like this indicator. I do. It's another piece of information. And I like some color, so it's nice to be able to see a visual representation of, how the trend is going and how strong it is. Yeah, I like it. I think I had it at one time, but yeah, I'm digging it. I like it a lot. How do you like it, Frank? Have you put it on yours? I'm okay with it. What is this? 66, 72. That was a dollar move. I just wouldn't take it. That's just too. Frank, is an inverted hammer, or Bumpy, you might know this, is an inverted hammer a reversal candle? Is an inverted hammer a reversal candle? Is an inverted hammer a reversal candle? Inverted hammer are bearish reversal patterns that indicate selling pressure.
Eastern, Jeffrey Gundlach once again on Fed Day, his first reaction to the decision and the news conference.
But they form
the best investments he sees,
the market may
given what happens today. He'll let you know, of course, with us exclusively today once again. Josh Brown's going to be there too. So I hope you're joining us. We'll give you his outlook for stocks
or this inverted hammer. Let me make sure I got the picture right.
Alaska Airlines. Scott, I think everybody knows how I feel about the economy, that we're not headed for recession. Even within the airlines, this is the best of the bunch. And I say that based on their release yesterday that they're going to start share repurchases in early 2023. They're amongst the first. They may be the first to do that in the airline industry. Reflects their strong balance sheet and their projections for strong financial performance in 2023.
Okay. Better than Delta. You own Delta too, right?
A little bit of Delta, but
Bastion was pretty bullish. I mean, Kirby was bullish from United. No big shock. It's a good time to be, operating an airline, I guess. The question is whether it's a good time to be an investor in those stocks. They haven't always worked together.
If you think there's a recession,
it does say that an inverted hammer.
Okay, Terry, what do you got?
is a
Align Technology. So they're the maker
candle
of the Invisalign dental liners.
indicating
Did
maybe
great
a
during
bearish
COVID. Been in its own type of recession. Stocks down from 700 to below 200. Sells at about 22 times next year. Positive is that China's reopening. That's a big market for them, and the weaker dollar will help.
Joe T. Home Depot, great quarter, even better technical formation.
potential bullish
W bottom.
reversal.
Stock continues to move
The
higher. Tom,
inverted
we're about an
hammer
hour away from the
candle
Fed. Of course, Gunlock
is a
joining me in
candlestick that
OT. I'll
appears
see
on
y'all
the chart
then. The
when there's
exchange
pressure
begins
from
now.
buyers to push an asset price up.
And welcome to the exchange, everybody. I'm Kelly Evans, and it is eerily quiet here on Fed Day. We're just an hour away from the decision on rates, and you can feel the market holding its breath. We're expecting a half-point hike. But will it seal the deal on a recession, or will the Fed send us a dovish surprise? And what will Chair Powell say about the Fed's next move? Remember, that's at the presser at 2:30 Eastern. Stocks are higher. Dow's up 167 ahead of the decision. Let's get Dom Chu with the setup. Dom.
All right, it's pretty quiet as well over here in the markets, but generally positive. So the wait and see that we normally see with kind of hovering around mild gains and losses are actually substantively fractional, if you want to look at it that way. The Dow Industrials are up 165 points, about a half of 1%. That's pretty good for a wait and see kind of day. The S&P 500 now, 4,036, up about 17 points. At the highs of the day, we were up 31, so even more so than we are now. At the lows of the day, we were just about down 4 points. Net on balance up about 0.5%, similar to the Dow, and similar percentage advance, about 1/3 of 1% for the NASDAQ Composite, 11,291. So yes, wait and see, but generally tilting towards the positive side of things. One other place you are seeing positivity is in the oil markets. On the macro big picture side of things, you have both OPEC, the oil cartel, as well as the International Energy Agency, both offering forecasts for oil demand in 2023 that implies some kind of a demand recovery. For that reason, you're seeing a bit of a bid to oil prices this morning. WTI crude U.S. benchmark prices up $2.28, 3% gain there to $77.67. But of course, we always like to put the 1-year chart up there to just show you that in the context of the grander scheme of things, this is still very much a downtrend in place right now. We'll see if it stays that way for crude oil prices. And then the, I guess, move that you want to watch right now is what's happening with Bitcoin prices. In the wake of what happened with FTX and its bankruptcy and Sam Bankman-Fried getting arrested, there has been a steady relief rally, if you want to call it that, for Bitcoin prices, currently above 18,000. 18,090 the last trade. They're up about nearly 2%. That's $332. If you look at the way things have shaped up, it doesn't seem like a lot, but this is the first time that we've seen Bitcoin back above 18,000 since November 10th. So again, broader moves in context. We've lost about 62% of Bitcoin's value in the last year, but it's up above 18,000. We'll continue to watch and see if that near-term momentum has any legs, Kel. I'll send things back over.
Pretty resilient, given everything that's happened. Dom, thanks. All right, the big question for next hour is, will Jay Powell lean against the markets? He could do that in one of two ways, either more hawkish than investors are expecting or much more dovish. Steve Leisman is already down at the Fed getting ready, and he's got that story. Hi, Steve.
Hey, Kelly, yeah, the Federal Reserve is expected to announce a 50 basis point interest rate hike within the hour, following up 4 straight 75 basis point hikes. But the Fed is going to be reducing the rate of increase while still trying to convince markets that it's going to be higher and remaining at a restrictive rate for some time. Take a look here, along with sharp declines in the 10-year and the 2-year since that better than inflation report yesterday. The expected peak funds rate fell from 4.99 before the inflation report to 4.81 right now for the May 23 contract. And there's increasing betting that the Fed could be done as soon as March of 2023. The broader question, as you say, if the Fed and Fed Chair Jay Powell are comfortable with this dovish drift in the outlook envisioned in the rates, and that's loosened financial conditions since the last meeting. Taking a look at how much they've loosened, the 10-year Treasury down 60 basis points since that November meeting. Junk bonds and 30-year mortgages down 75. The Dow +7. Dom Chu just told you half of that percent was just from today. Average hourly earnings, however, are up 0.6%. So if the Fed didn't intend for financial conditions to loosen and has a problem with market levels, the Fed chair today could attempt to lean against it with hawkish forward guidance. Another problem for Powell, the market sees the Fed hiking to 482, but then easing by 50 basis points through the year next year. That's at odds with a Fed that's probably going to update its economic projections today to show the median funds rate at around 5% for 2023. plus or minus, creating a conflict between the Fed and the market's rate outlook.
There was a lot in there, Steve, and I'm glad that you pointed out about financial conditions easing, but will the easing matter if the curves are still inverted? You know what I'm saying?
I think so, but I do think the easing matters because Powell needs the markets to restrict financial conditions to bring down inflation. At least that's the story he's been telling.
All right. Steve Leisman, we will see you soon. Thank you very much. Let's turn to Rick Leisman now. Rick Santelli, sorry, Rick. Rates are on the move ahead of the Fed decision. You're shaking your head. Yeah, he's having a heart attack. Rick Santelli is out at the CME with more. How's the setup, Rick?
You know, if you want to know what the Fed's next move is, I'm not the guy to listen to. If you want to know what the market's next move is, maybe I'm your guy. And if we harken back to early November, we're talking about the same issue. What do you want to predict? What the Fed's going to do or how the market's going to react? I say the market reaction's been pretty darn clear. All these charts are from the last Fed meeting. Look at 2-year note yields. Basically, we've gone from a zone of 470 to 420. We've shaved 50 basis points off, and right now we're hovering at 3-month low yield closes. And if we look at 10-year, the range, well, we've shaved it from 420-ish to 350, about 70 basis points. And if you look at 3 months to 10s, the yield curve, okay, a couple days ago, it closed at the most inverted in 21 years. It's only up a couple of basis points from that at minus 83. And it really is telling us that the way the markets are set up, most likely there may be a recession at the end of this. But traders don't trade for 16 months out. A lot of traders don't even trade for 12 weeks out. They trade for basically the here and now and maybe add 3 to 4 weeks. And if there's a recession, they'll make adjustments. They're not playing for that. They're playing for the bullish move in treasury yield. And if we look at what's going on with respect to the dollar index, same thing. Since the last Fed meeting, it's basically gone from a 112 area to now 104 area. These are huge moves. And even though, just like inflation, the dollar may be weak, it's historically high. And finally, the HYG. Nothing tells you how investors are feeling about interest rates or nervousness in the markets of interest rates than an HYG high-yield ETF. And it's been steadily climbing. As a matter of fact, yesterday closed at a 3.5-month high. Kelly, back to you.
Rick, what are you most going to be watching? The dots, you know, their rate projections. We've obviously got the language from the Fed chair himself. It's always, you know, kind of more impactful. Just the market reaction. I mean, what is going to be key, do you think?
I'm going to count how many times we see the word longer. We're going to be, you know, higher for longer. Longer is going to be the new term we should key on. But what I'm really going to pay most attention to is if the chairman gives the market some credit. Okay, they've been trying to talk yields up and equities down. They've only had mild success.
And what do you mean by longer, Rick? Explain that for a second.
Well, I think that Steve Leisman's had it right for the last 3 meetings. The issue, and I think the markets have focused on it, is the Fed's heavy lifting, according to the markets, is done. Inflation and a peak is in the rearview mirror, although it's still much too high. But ultimately, keeping rates at a higher level longer is most likely going to be something that the Treasury market will be able to live with, along with the equities depending on earnings. And remember, traders don't trade for 12 to 14 months out.
No, they don't. Rick, thank you. We appreciate it, Rick Santelli. Now, a half-point hike does look baked in right now, but could yesterday's cooler CPI number impact where the Fed goes after today? Here to discuss, Subhaja Rajappa is head of U.S. rate strategy for Societe Generale, and Kim Forrest is the CIO of Boca Capital Partners. It's great to see you both. Kim, I'm struck by the fact, before we kind of dive into inflation and all the rest of it, that it, in quite simple terms, is the problem or opportunity right now that for the first time in years, there is an alternative to the U.S. stock market. Some of the yields you can get, forget even, you know, in financial markets, in a savings, savings account these days are pretty good. We're talking about 4%. It's going to go even higher after today's Fed rate hike. So what is the net impact of all of that, do you think?
Sure. Well, I think the headline looks really great for interest rates, right? If you're somebody that wants to lend money somehow, if that's through a CD or if it's through buying a bond. So no doubt you're getting better rates. But here's the flip side of this. Inflation's really high. And if you're looking to grow your money, not just get return for some shorter period of time, bonds generally are not the way to do that. You have to be an owner of stocks to be able to get money over time. And that's just the way it works.
So in other words, yes, they're high in nominal terms, but they're still low in real terms. And who knows? I mean, but Subhadra, I guess if inflation's cresting, then maybe you pick up those yields while you can, and you don't have to worry about the stock market collapsing in the case of a recession.
Absolutely. And I think it's also a very good hedge, right? If you're looking towards potentially a meaningful slowdown in the economy or a recession, we could see some volatility in the equity market and risky assets heading into a recession. But bonds are going to be your safe bet. When you buy a 2-year note or even a treasury bill, you're locking in that interest rate for the period of time that you are long that bond. So to me, it feels like it's a good time to not just be focused on risky assets, which is what we've done over the last several decades, but also offset some of that with some real returns in the bond market. And if you look at the whole spectrum in the bond market, treasuries look attractive in the front end, but beyond that, corporate bonds and other riskier bonds, where the default rates are still very low, look quite attractive to us.
Kim, what would you say about that? And where do you sit when you look at the investing landscape right now?
Sure. Well, once an equity analyst, always an equity analyst. So I'm going to, steal my own thunder there. But to be sure, you may want to move into bonds, but for goodness sake, stay on the short end of those bonds. Don't buy anything way out in time, because again, you have got to have these assets not just returning cash to you through dividends and yield, but you also have to have it grow. And again, if you're going to play the trading game, you might not come out on top, because as rates as rates rise, the prices fall. Mm-hmm. So do be aware of that if you're going to trade.
Subhadra, let's just talk about the landscape. What are markets telling us right now about the possibility of Fed errors being committed here when they're about to raise the benchmark overnight rate over 4%, and basically nothing else in the curve, save on the very short end, is even yielding that?
They are focused on inflation, so raising rates is the right way to go to try to curb inflation. The question is where the end point is and what's a good time to look at perhaps going long bonds when the Fed is done. So for our view is that the Fed raises rates by 50 basis points today and then delivers at least another 75 basis points of rate hikes next year. So when they get to the terminal Fed funds rate, which might be as early as March or May of next year, they're going to keep rates steady for the remainder of next year until we really start entering into a recession. We have a recession penciled in for early 2024. So, for a good portion of next year, yields could remain relatively high in the front end. So I see an opportunity in the bond market under these circumstances. Yes, on an inflation adjusted basis, right now it doesn't look so attractive. But as we progress through next year, inflation is going to gradually decline and the returns on bonds are going to look even more attractive.
What would you like to see them do, Kim, from a practitioner's point of view? You're in the markets, you're looking at these companies, you don't want to see a recession. What would the Fed's best move be here then in order to kind of try to get this one right?
Well, I think that they need to go very, very slowly now. I really think the inflation that we're seeing was not caused by anything that the Fed did other than in asset prices. We all know that. But in money supply. And the money supply is dropping precipitously now. And I think they know that. So I think being measured and looking for more data about where inflation is actually going is what I want to see the Fed do it. And oh, by the way, tell us a lot. Yeah. I think Powell has been really great about being transparent about what he's doing.
And you want to see even more candor about, hey, these are the exact variables we're looking at. Here's what they define success as. Yeah. We'll see. Yep. If he tiptoes in that direction, wouldn't it be nice? We have a big press conference coming up where he might be able to do that. Kim and Subhadra, thank you. Kim Forrest, Subhadra Rajappa, as we await that big decision in about 45 minutes' time. Coming up, Delta Airlines expecting to nearly double next year thanks to robust travel demand. Phil LeBeau will be here on set with what's driving their optimism on earnings. But first, the banks have really underperformed the market just over the past month. Will that worsen after today's Fed decision? We'll debate. And as we head to break, here's a quick check on the market landscape ahead of that call. We have the Dow leading the way with about a 2/3 of gain. S&P's up 0.5%. 10-year yield right on the nose there, right around 3.5%. The exchange is back after this.
This is The Exchange on CNBC.
Thinking at.
Welcome back. With the Federal Reserve raising rates at the fastest pace in 4 decades, the financial stocks were supposed to be a major beneficiary, but it hasn't happened. Even as the funds rate is about to crack 4%, both the regional and the bank ETFs are tracking below the S&P, on pace for their worst year since the 2018 taper tantrum. For more on the disconnect and whether now's a good time to get in, let's ask Anton Schutz. He's Menden Capital Advisors President and CIO. Anton, welcome. It's good to see you again. And before I sort of ask about your recommendations, what were the bright spots in the investing landscape so far this year? Who did benefit from this environment?
Well, I mean, at the end of the day, you've really had a lot of sectors hurt. Energy was the biggest beneficiary earlier in the year, and they've been hurt a lot lately as the price of oil has come down. So it's really been a tough year for investors, for stock pickers. I think some of the biggest winners have been, the guys who've been trading large moves, trend followers. There have been some big trends, particularly earlier in the year. You've had firms like Bridgewater have really big swings in returns as well. So been a tough year for most people.
It has. So what about the banks? Why haven't they benefited from higher net interest income, in some cases record highs?
Yeah, you can't have your cake on any of the reasons people have been trying to figure out why banks are good. But the one thing that has happened is earnings have actually done quite well for regional banks. They have benefited from rates being above zero, which is really not a good thing for the banking space. But people are worried about a recession engineered by the Fed. So they're worried about credit. Now they're worried about the top of their interest rate margin cycle. It's just they want to keep worrying. But what's happened is a lot of these companies are 7, 8, 9 times forward earnings with big dividend yields and lots of capital. And I think I've said this for quite a while, but banks are not part of the problem. It's the lending outside the banking space that's riskier. right? The cracks in the credit that we've seen out there have been companies that have, targeted subprime consumers, the lower tier, and obviously that's hurt a lot. Right?
Yeah.
The Fed rate increases hurt a tremendous amount. Inflation is hurt tremendous amount. Those people are having a harder time paying their bills.
Yeah.
Banks tend not to bank those types of customers.
Yeah.
The other big fear is commercial real estate. Oh my gosh, people have not come back to work. Our lease is going to get canceled. And again, if you really sort of think about the big commercial real estate, it's gone into the pension plans, it's gone into large life companies. Banks typically don't have those very large buildings in major cities, other than a short-term basis during construction.
So
I think
I was just going to say that valuation-wise, basically, it's a good time to get in, broadly speaking. You also, like you say, the self-help stories. What would a couple examples of those be?
Sure. So New York Community Bank, it's interesting I'm talking about the Northeast because you've heard me talk about tax advantage states.
Yes.
So New York Community Bank has just closed a merger, and the company they bought, Flagstar, is actually a large mortgage company. They have quite good commercial lending products. I think the combination of the companies will lead to better deposits, better products, and they'll use a lot of technology to help drive efficiencies in Flagstar. So I think the company will continue to pay its 8% dividend yield, which is great yield of weight, and will also eventually be able to buy back stock. I think earnings estimates are actually too low on this company. I think there's a lot of commercial real estate. They lend a lot to multifamily real estate, and particularly rent controlled. And so if you think about that rent controlled, no one's leaving New York City rent controlled apartment.
So before I let you go, am I hearing you sound pretty bullish and upbeat on the prospects of the Northeast, Anton? What is happening?
Well,
How can this be? How can this be?
I'm being bullish on New York Community, and actually Provident Bank, which is in New Jersey primarily. Some New York, some Pennsylvania. That merger happened in Lakeland, same thing, right? You're going to get a lot of cost cuts out of it. You've got a really nice dividend yield. You get paid to wait. And these companies are going to invest in a lot of technology to help them improve their efficiency and be better. So, very conservative lending structure. So, yes, I am bullish on some states in the Northeast, particularly the banks benefiting.
All right, Anton, we'll see how this plays out next year with recession risks and all the rest headed our way. For now, thank you very, very much. Anton Schutz with Menden Capital Advisors. Coming up, do wages lag inflation or do they lead to it? That's the question plaguing the Fed and investors right now. We'll try to answer with Jefferies' chief financial economist ahead. But first, Apple is set to close out its worst year since the Great Recession. And now a new law in the EU is putting some of its profits in peril. We'll look at what's at stake for the world's most valuable company. As we go to break, another look at the Dow heat map. Only 3 stocks are negative pre-Fed. And those are Goldman, Verizon, and Amgen. While Merck, Microsoft, and Home Depot are leading the way. Stay with us.
Home Depot killing the game.
now.
Welcome back, everybody. At the highs, we were up 256 points as we head into the Fed decision. Dow is close to those levels right now. The S&P is up half a percent, just a little bit shy of that for the NASDAQ. Now, Apple's worst year since the Great Recession could still get even uglier thanks to some big changes in Europe. Here's the stock. It's up a 10% today, down 18% year to date. Steve Kovac is here to explain.
Yeah, so this is all about the Digital Markets Act, or the DMA. That's a law passed in the EU this spring, and it's targeting the power of big tech companies. But let's talk specifically how it's targeting Apple. Now, Apple, under this law, will be required to allow third-party app stores to open up other parts of the phone to third parties as well. Now, a Bloomberg report yesterday says Apple is working on a new version of iOS that complies with the law for when it goes into enforcement, but that's not until 2024. But here's the interesting bit from that report, Kelly. Only the EU will have the third-party app stores. The rest of the world won't. And so we're seeing Apple talk about this. They're fighting about it in the name of privacy and security for their users, and that's all good. But what it talks less about is the App Store profits and margins they're trying to protect as well. But it's a good thing this is starting in the EU, at least in Apple's view, because the EU is actually a tiny market for apps. They estimated only $6 billion in sales last year. Compare that to the $29 billion in sales for the App Store in the US and $85 billion globally. So what this tells me is Apple is going to fight this country by country instead of just ripping off the Band-Aid and making these changes globally instead. And they still may be able to find ways to charge these third parties for access to iOS. But look, Kelly, it's going to take years for this to fully shake out. And while the EU may not have big app store sales, U.S. lawmakers are considering similar legislation here that'll have much more impact on Apple's revenue.
Do we have any examples of these third-party app stores yet, or we just have to assume that once they're allowed to proliferate, that you could go to something other than literally what's called the App Store to download? And would that download of an app be cheaper because there's not a 30% cut? But even those third parties have to make money somehow,
Exactly.
right? Who are they?
So potentially it could happen the way you just described. Right now, obviously, there's some third-party app stores on Android. They're small, nothing close to the Google Store, nothing close to the Apple App Store. But what could happen here is gaming is going to be a really big thing, Kelly. This is where most of the money is made. And the Fortnite maker Epic Games, which is going through a legal process with Apple right now, they would love to have their own video game store on the iPhone and sell that directly to customers. The real question here is, how does Apple find a way to take a slice of those transactions still, even if Epic offers more, or any other third-party app store offers more favorable economics to the developer? They still may have to be paying Apple in some form or fashion.
It is fascinating that it's so much smaller. It's EU App Store revenue. Why is that? Is gaming just not as big in Europe, or why?
It's where all the money's spent. Android is also way bigger in Europe, so a lot of that money goes there. But look, iPhone customers spend the most money. iPhone is the dominant market share here in the US. That's why that number is so high. And then the China numbers, which we don't have estimates for right now, but those are big too. So if similar regulation, as we're seeing with this Digital Markets Act in the EU, comes to the US and goes into enforcement as well, it's going to be a much bigger impact than what we're going to see in a couple years.
Great point. For now, Steve, thanks.
Thanks.
Our Steve Kovac. Let's get to Frank Holland now for a CNBC News update. Frank?
Hey there, Kelly. Here's what's happening at this hour. Peru's new government has declared a national emergency that will last 30 days. The decision follows days of violent protests after the impeachment and the ouster of former President Castillo. 6 people have died in clashes with police. Demonstrators are calling for Castillo's immediate release and new national elections. Prosecutors are seeking an initial 18 months of detention for Castillo after he was charged with rebellion and conspiracy. Twitter has suspended an account that tracked the movements of Elon Musk's private plane. Twitter notes unspecified rule violations for the suspension. Twitter's new owner had previously said he would leave the account alone due to his commitment to free speech. Musk has not responded to CNBC requests for comments. Similar Musk tracking accounts, they remain active, including ones on Instagram and as well as on Telegram. And Pope Francis is calling for a more humble Christmas this year. He's urging people to reduce spending on gifts and donate to
Hashtag 29050, what?
They have a tendency with the pilots to basically give a 34% raise over the next 4 years. Keep in mind, I've heard from a lot of people who are like, 34% is ridiculous. They didn't have a contract for the previous 4 years. That 34%, if you look at it over the course of 8 years, is not outrageous. Question is, do they get it finalized by the rank and file? That's a completely separate question. We'll see that play out over the next quarter, 2 quarters.
But as you've said, maybe the last 48 hours illustrates the difference between the outlooks for these airlines, and we can't keep lumping them all together. It's not as simple as just shut down for COVID reopening. I mean, for
there is a reason why when you read the analyst notes, they will say, here is our pick. And many of them are picking Delta because it's a very well-run company. They've got their ducks in a row. And that's not to say that other airlines are a basket case, but it is to say that the analysts are specific when they say, here's why we like this company. And in this case, Delta is the pick for many analysts. We think it's the best run airline right now.
All right. So on the management note, let's turn and talk about what's going on over at Tesla. Shareholders are increasingly concerned that Elon Musk is too focused on Twitter. Now, Tesla shares are hovering near a 52-week low. We've talked about the massive valuation reset, Phil, but you see calls on Twitter where there's a lot of Tesla fans, and even they are saying, we need a new CEO. We need, someone who's going to be a Tim Cook to the Steve Jobs, to draw the Apple analogy. We need a PR or an IR department. We need all of these mature corporate things to help this company, and the shares maybe reflect the reality of where they think they should be.
I don't think they're going to get any of those things. Look, Elon Musk created the company. This is how he runs the company. for better or for worse. And for a long time, what gave the oxygen to this stock was either a new product being revealed, a sales report, or Elon Musk himself. Well, he's occupied right now, for the most part, on what's going on with Twitter. And as the stock moves lower here, you have to keep in mind there is a difference between Tesla, the automaker, and Tesla, the momentum-driven stock. Adam Jonas from Morgan Stanley out today saying, we are staying overweight. It's our top pick for 2023 for a variety of reasons. They have more manufacturing capacity than other automakers as they go into EVs. And then also when you look at it, there is this macroeconomic drag on EV stocks. Take a look at what Elon Musk tweeted out last night. Now, this is not going to be the type of tweet that's going to make people say, yeah, I got to go buy my Tesla shares. He said Tesla will be great long term, but doesn't control macroeconomic tides, which is true. As the interest rates have gone up, all tech stocks have been under pressure, but look at the EV stocks. And by the way, Tesla is the best performing, which isn't saying a whole lot of the EV stocks, though it lags the traditional automakers, whether it's Toyota, Volkswagen, General Motors.
Right, but it does look more better capitalized, we could say, in a higher yield, higher risk environment than what its competitors have been doing. And obviously this kerfuffle over whether they did or didn't stop production in Shanghai, there's no one to answer to. No one can get a handle on those estimates.
Nor have we ever been able to.
And it comes at a time when the brand question in the U.S. is also being questioned. Do we have any hard data that says Tesla is becoming, less of a status symbol and more of a political statement to its detriment?
There's nothing that says that is the reason why you will see Tesla lose market share. Tesla's going to lose market share because there are going to be more EVs from a broader array of automakers that are available, whether it's GM, Ford, or the upstarts like a Rivian or a Fisker. You just have more choices. So people who in the past would have said, I'll go with Tesla, they are going to go to other automakers as well. But don't confuse that with this being a company that is not well run in terms of EV manufacturing, gross auto margins, and EV capacity. They are still king of the hill. And I know that's not what people want to hear when they see the stock going lower. But remember, the stock is driven on so many things separate from the fundamentals of
Tesla. What you just said is why the bulls are losing their minds, because they think now it's being held back. Instead of having the Elon Musk halo effect, it's now kind of running in reverse. All right, Phil, thank you. Good to see you. Phil LeBeau. Still ahead, inflation has cooled over the past few months as the Fed rate hikes begin to do their job, but one economist argues there's a very real inflationary threat still looming on the horizon. What it is and the potential impact on Powell's messaging. That's next. welcome back to the exchange. We're 20 minutes away from the Fed's rate decision. And while a half-point hike to over 4% is widely expected today, what happens next is a little murkier. My next guest says the Fed will have to keep hiking next year because there's a very real inflationary threat looming that isn't getting enough attention. Joining us now is Annetta Markowska, the chief financial economist at Jefferies. Annetta, it's great to see you, and you see wages going up. Is that right?
That's right. So, I think the message from Powell today is going to be that, look, we're certainly, winning the inflation battle on several fronts. We're winning on the supply chain front, commodity front, housing not quite yet, but we can point to something, that suggests in the future housing will slow. But there is that last remaining piece of inflation, which is services ex housing. And Powell reminded us last week that that's 50% of the core PCE basket. And that's very closely tied to the labor market and to wages. And thus far, we haven't seen any improvement on that front. If anything, wages seem to be moving in the wrong direction again.
And when you say wrong direction, everyone else goes, well, what's wrong? If we're talking about 5, 6, 7, 8%, wage gains in some cases. And is the argument, Annetta, that is ultimately going to push inflation higher? And if so, when?
So it doesn't necessarily push it higher, but it sort of embeds that last, say, 3.5, 4 percentage points of inflation and makes it very, very difficult to break through that barrier. So I'm fully on board with the idea that inflation will slow to about 4%. I'm skeptical that without sort of breaking labor demand and reducing it substantially, break that 4% inflation floor. So at some point, as it plateaus, I think it might become clear that, that again, the labor market is sort of creating that floor. And speaking of wages, obviously we've seen some increases last month, plus upward revisions. Those wage increases were corroborated by some other data sources, the Atlanta Wage Tracker. If you look at the New York Fed's expectations of household income, they actually accelerated sharply in the last 2 months to new cycle highs. And that's partly driven by the coming Social Security COLA adjustment, but there's some upward drift in wage expectations as well. And I think as we get into January, which is typically when companies make those year-end comp adjustments and cost of living adjustments, there's a very good chance that we see further upward pressure on wages.
And it's fascinating the way that the COLA is now kind of the new wage price spiral that we might have seen, from organized labor back in the 70s. Putting all that to the side, though, and looking at the wage piece, is it possible that the Fed goes, you know what, we'll take 4% CPI and we'll take 6% wages because that sounds better than, hitting our 2% target and triggering a recession as a result?
I could see some on the FOMC arguing that. I doubt Powell will be on board with that because obviously he's worried about his legacy. And we know, we've seen this movie before. We know how it ended when the Fed sort of was willingly tolerating higher inflation. And if the market sniffs this out, right, that the Fed sort of implicitly says we're okay with 3 or 4% inflation, then we have to reprice break evens. And that means that we could de-anchor the long end of the Treasury curve. So I just don't think that's a risk worth taking. It certainly wouldn't be productive in any way. I think it could actually be counterproductive to their objectives.
And if that's the case, then right now you think the market, what do you think the market is saying, that we are going to go back down to 2%? Because I'm seeing forecasts now easily of 2-3% inflation numbers in the back half of next year. Is that doable?
I think it's difficult. I think, a lot of folks still in the market sort of view this inflationary episode as a supply shock that just took a little bit longer to resolve than initially expected. And certainly if you believe in the supply side sort of, drivers of this shock, then it makes sense to conclude that inflation will normalize. I think demand played a very significant role. It's clearly still well above pre-pandemic levels in goods and services and even in the labor market. And so it's just hard to envision kind of how we restore the demand supply balance
right now
in the labor market in particular without actually putting some downward pressure on demand. And again, haven't seen much signs of that yet.
I got
so if you're right, are we going from hiking over 4% today to having to go to over 5% still, which is more hawkish than what the market is expecting? And what's the impact going to be on stocks, on bonds, if you're right from that?
Drop. I know it's
I don't necessarily think we need to go way above 5. I think it's a question of how long we stay there. And I think that's what Powell needs to, or will probably push against today, this idea that, as soon as inflation peaks and starts to come down, they can start cutting rates. I'm certainly, middle of next year, I think the employment market will.
Yeah, I entered one call only because I don't want to miss this afternoon little run up right there. Who knows what it's going to be, you know, or maybe they're foreshadowing. Maybe these people know something that I don't know. So I bought one call, but you know, we'll see. It don't look like it's doing much. Can you see? Okay, let y'all can see. Let me see. Yeah, it's holding right now. I'm down $5. So that's a safe place to enter, you know, right around one of those strong. And so if you have a strong support and you're entering a call, that's a good place to enter a call because you kind of know it's going to hold. That's why I picked that place. So it's up to 27, 29. We'll see. We'll see what happens. We'll see. I need to look at it on the 3-minute. 26, 27. Maybe, who knows? Maybe she'll get up there. 28. This doesn't feel like a good contract though, because it's not very responsive to this price. So let's see. It's not very responsive to price change. But then the price hasn't changed a lot either. I'm studying, I'm looking. So you see the price is holding 291. That 291, 291.25, those are, it's a strong, well, 291 is going to be a strong support anyway. So they're just chilling. It's just hanging up there. I don't know. Let's see. But I won't let myself get down much. If this thing doesn't pop or do something, then I won't let it. Mm. 291.11. 29.86. That could have been a little run right there, but.
One, stay with us.
Just so y'all can see what I'm looking at, I'm just studying QQQ. Studying QQQ.
Hi, everybody. Welcome to Power Lunch. I'm Kelly Evans along with Dom Chu. Welcome.
It's good to be here.
It's going to be a quite busy afternoon.
Is there a Fed decision today?
There is. We are just about 5 minutes away from the Fed's decision on interest rates.
And these people wanted to be doing so bad. Look at them. They're trying to rev up.
Those projections. They're going to offer us clues on how much further policymakers expect rates to go.
Now, stocks are near session highs right now, so much for wait and see. The Dow, the S&P, and the NASDAQ, as you can kind of see there, moving higher to the tune of around maybe of 0.5% or so at this stage here. We've got a big Fed panel today. JP Morgan Asset Management's David Kelly, Mona Mahajan with Edward Jones, also John Bellows with Western Asset Management Company, WAMCO as we used to call it back in the day. Thanks everyone for being here as part of this program. Let's start perhaps, Mona Mahajan, with you, with just the expectations that you have from an investment strategy standpoint on whether people need to do anything with their money in the wake of what we're going to get from the Fed today.
Yeah, look, it's a great point. I don't think necessarily we need to move money before or after this Fed meeting, but what we will be watching for, of course, is that dot plot. And really what we're looking for is to see if the markets and the Fed are converging towards the same terminal rate. So right now, markets are expecting this 5.25% terminal rate. If the Fed kind of implicitly blesses that level, we see a dot plot that also leads to a 5.25% terminal rate. That, in fact, may provide the market a bit of comfort that we are closer to the end of this Fed tightening cycle, but also perhaps after that, we'll get this pause. And then what will be really interesting to see is if they start putting in any sort of rate cuts for 2024 and beyond. And we think the markets
we'll really look forward to when the Fed may not only pause but move rates lower once again, and that will really stimulate the market rebound. But generally speaking, we think we're towards the end of potentially this bear market. Any volatility in the months ahead will provide that opportunity to position for what we think will be a better market backdrop and potential recovery in 2024.
John, the market right now is pricing in a certain expectation, and we got a little bit of a movement, if you will, in some of those Fed fund futures and the interest rate markets, given what we saw with the consumer price index, softer than expected this past week here, just yesterday. I wonder, do you, in your mind, feel as though the markets are appropriately positioned? In other words, are the expectations correct for that so-called ending of the Fed cycle with a terminal or ending rate in that kind of, we'll call it 4 3/4% at this stage?
So let's see. Keep going.
I think you're right. CPI yesterday was important. And I think it's important for two reasons. The first is that I think the Fed is moving towards a more forward-looking policy. Over the summer and through the early fall, they were just reacting. CPI was too high, and they were constantly on their back foot and reacting to those numbers. Reactive policy is problematic. Looking in the rearview mirror is not the best way to do policy, and the Fed is very happy to finally be more forward-looking. So I think CPI yesterday and also the month before, it's going to allow them to be more forward-looking in their policy. I think you're going to hear that from Powell today, and I think that's generally a very positive thing. I think the other thing that's important about CPI yesterday is after today's hike, it'll be the case that the policy rate will likely be higher than the run rate for core inflation. That's the first time all year that's been true. And I think the Fed is going to look at that and have a little bit more confidence that policy is restrictive. CPI may still be too high, although I think that's debatable. But with a policy rate that's now higher than the run rate of core inflation, it becomes just a matter of time before inflation starts coming down. I think that's another big development. So I think generally speaking, CPI yesterday was a big deal because it kind of enforces both those points. The Fed can be more forward-looking, and now after today's hike, we have the policy rate above the inflation rate, and that's a big development and important for forward-looking expectations.
All right, and David, we've just got a few moments here left before the decision comes out. You've seen a lot of these decisions before. This year, the numbers suggest that there's been a lot more volatility around Fed rate decisions with the markets. Do you expect that today?
Not really. I think people are priced in 50 basis points. I think the dot plot will go up 25 basis points, but still a terminal rate of 4.75 to 5%. I think Jay Powell will actually smile during this press conference because there is better news on inflation. I think you'll have to admit it. That opens the window a little wider for soft landing. So I think we're in a good place here, and I think market expectations and the Fed's view are converging here. I think that's positive.
All right, there's the 10-year yield, 3.51%. Let's call it ahead of the Fed decision. With WTI oil at 2.5%, the S&P up about 0.75%. Let's get to Steve Leisman with the Fed decisions.
The Federal Reserve raising interest rates by 50 basis points to a new range of 4.25% to 4.5% as expected. The Fed saying ongoing rate hikes will be appropriate. The Fed also raising the 2023 median forecast of Fed officials went up to 5.1%. It had been at 4.6%. This is higher than market expectations for a peak funds rate. It is, by the way, right in line with the Fed survey at 5.15. 17 of the 19 officials are now above 5% in their forecast for the 2023 funds rate. None were above 5 in the September forecast. 7 officials, in fact, are at 5.40, and there's one person who's at 5.63 for all the way through 2025. The funds rate eventually going down to 4.1% in 2024, 3.1 in 2025, with a long run rate eventually being reached of 2.5%. The Fed repeats it will take account of the cumulative effect of rate hikes and lags in setting policy. This is again from the statement. It will continue to reduce the balance sheet by $95 billion a month. It says growth has been modest, inflation elevated, unemployment low, and job gains robust. So it still sees that tight job market out there. It raised the GDP this year to 0.5 from 0.2. That's because of the strength we've seen in the fourth quarter. But it lowered it to just 0.5 point for next year from 1.2. Ratcheted up a bit. The unemployment rate to 4.6 from 4.4 for next year. It stays there for 2 years, by the way. And it sees inflation gradually declining to 2% by 2025. So 50 basis points, Kelly, but pretty hawkish when it comes to the outlook, and good unanimity, by the way. The statement, the policy decision was unanimous. Good unanimity also, at least by the board right now, on where rates are headed, and that is above 5%.
Hawkish, Steve, is the conclusion from markets where we've seen stocks lose all of their gains, in some cases turn negative, and the 10-year yield up about 3.5 basis points. Again, this is the first reaction. It's going to be a long afternoon. We have maybe 2 hours until we're done hearing from Powell. That said, what's the most hawkish thing about this to you? Is it those rate hike projections, the dots as we call them, especially into next year in 2024?
So there's a discussion that I think we can have, Kelly, maybe in one of your regular terrific 1 o'clock shows, not the special, about whether the Fed is now using the dots as more of a policy tool. And I think the Fed sending a message here that while the market has taken all this very dovishly, loosened up financial conditions, that part of this is a message, hey, we're going above 5%. We intend to be very tough here when it comes to inflation. So that 5.1%, not just by itself, but the number of people, the change from the September survey, none of them were above 5% before, and many of them now being above, what did I say here? 17 officials now above 5. 7 officials are at 540 or higher. So there was a pretty hawkish, sizably hawkish contingent on the Federal Reserve right now.
It sure sounds like the consensus, so to speak, is changing around that, Steve. All right, so stick around, please. We're going to talk with you a lot more, I'm sure, about this. Let's bring in our panel as well. Again, we've got a lot of folks out there, and let's bring in and introduce Bob Pisani as well. Also, Rick Santelli joins the conversation. So this group, as you can see in front of you here, has a lot of expertise, and maybe we'll send it out to Rick first with some of the reaction on the interest rate and macro side of things. It wasn't for sure, Rick. It was definitely movement in the marketplace, but it was nothing that was, I would characterize as being unexpected or out of the ordinary. Markets did move, but not by a whole heck of a lot.
No, and when you set the table for interest rates, to give some context, they have been moving rather dramatically lower considering the Fed's path. And today we see that 2-year notes spiked up. They spiked up towards 426-ish, and they're coming back down a bit, but they're a little more sticky than 10s, which popped up to right under 355, came back down a bit. These are not huge moves, and in the context of the fact that we're even near 350 after having a 4.25 high yield close for 10s, or 470 high yield close for 2-year, and now hovering at what, 422, 423? These rates are low, and when you look at dot plots and how far out they're predicting inflation is going to be stubborn, something isn't squaring here, and it's going to be interesting to hear the Q&A, because the markets have definitely become very opinionated, and investors are pushing back more in the treasuries than they are in equities. Yes, the equity knee-jerk reaction was down, but it wasn't huge. And if you look at the spreads, 2s to 10s inverted a several basis points more, and the dollar index improved a bit. That latter, I think the dollar index will be a good tell during the Q&A.
And we go to Bob Pisani for more on these stock moves that we're seeing. Bob, what do you make of it?
Well, I think Don's got it right. We were down about 300 points peak to trough in the few minutes after the Fed announcement came back, and we're now flattish essentially on the Dow. So the market has been looking to break out of 4,100 on the S&P. Why? Because that would break the downtrend, this pattern of lower lows and lower highs we've had all year. But we've had a lot of resistance there. We failed several times. We had a strong PPI last week. We went to 3,900. So the hope here is you either break out above 4,100 or you grind around at 3,900 or so, because that seems to be where there's a lot of support. And it looks like grinding around might be the thing to do at this point. The real problem here is Wall Street is dramatically lowering the earnings estimates for 2023 because inflation is a 2022 story. Recession is the 2023 story. What side of the recession debate are you on? And most major strategists now
I'm just watching QQQ go through the motions. It said 287. I needed to go under 287.
Strategists on Wall Street. The average is
287, like 45.
So this is the problem. How do you argue for higher stock prices from here when you're in the middle of what Wall Street thinks is going to be a fairly mild earnings recession? Let's put it this way. Down 5% on earnings would be a mild earnings recession. Down 20% would be a harder landing in terms of recession. But how do you argue the S&P should be higher 6 months from now or even 8 months from now when you're potentially down 6 to 10% on earnings in the 286? That's a hard case to make right now. You have to argue for a multiple expansion, and Dom knows
If she
perfectly
keeps
well.
going
That's a pretty
down,
thing to
we're in
argue.
good
Pretty hard
shape.
thing to argue in a downward trending
Come
economic
on,
environment.
keep going
You know, Bob,
down.
it's an excellent point, and one that many
86.
traders have been talking about for maybe weeks now at this point, is to see whether there is that kind of a breakout. This data, this Fed rate decision did not do anything to change anything from that trend standpoint. David Kelly, I'd like to bring you and the rest of the panel back into the discussion here. David, the markets are reacting, no doubt about it, and equities are softer. They've moved to the downside. We've seen rates spike
Puts.
higher.
Hallelujah.
But all
3
in the
puts is
context of
paying,
where we've
y'all.
been over the last several weeks, seems as though the markets were kind of anticipating
We're
this.
down under, if we
What
get
does
under
this stat say
286, it's a
about
good day.
the way that the landscape sets up for the early part of
We're in
2023,
285.
and whether the
Hallelujah.
Fed will continue its
Oh,
rate
Lord
hike campaign,
Jesus. I never been so
perhaps
happy
at a
to see
slower
some.
pace, or for a
Oh,
little
Lord.
bit
Thank you,
longer than it did,
Jesus.
but with smaller
Okay.
increments.
So the 3 puts that I
Well, I think
purchased
the market was anticipating
are
something
certainly
more dovish in the
positive,
dots than we've got here.
and
Because if you look at the Fed
they're
funds futures
still
market as of this
gaining.
morning, it
Hallelujah.
was
I don't know if
terminal
anybody
rate
else
between
jumped in
4.75
on
and
that,
5,
but
not between 5 and
the
5 and a quarter.
puts was the way to
But what I
go
think is
because
really
everything
interesting
sure
is,
hit the ground.
in
It's
some ways, the Fed is more
285,
hawkish than that, because what they're saying is
34,
that
and I'm
by the
hoping that
end
it
of the
keeps going.
year,
Please
they'll
just
still
go
be
down to
between 5 and 5 and a
284.
quarter at the end of
Just go down to
2023. And
284.
as of this morning, futures markets were pricing in the idea
284. Come on.
that the Fed is already
not
going
up
too
there.
far and will have to cut rates twice at the end of this year. So I think there's going to be a major argument here, sort of between the Fed and the markets, where the
Come on,
markets are
get
saying
your
you're
butt down
overdoing it,
there.
you're going to put this economy into recession here, and that's why you're going to end up having to
286.
reverse course. So I do think I think this is a mistake. I think the
285.
Fed is trying to be hawkish to show how resolute they are against inflation, but inflation's fading anyway, and it's not worth putting the economy into recession just to hit your inflation target. A year earlier than you thought you were going to. Inflation's coming down anyway, so I'm disappointed by this, but I think this is more hawkish than markets expected.
Although John Bellows, let's remember how dovish the dots turned out to be coming into this year, and how wildly they underestimated the actual trajectory of inflation and rate hikes. So could we live through an episode like that again, to David's point, where the Fed does come around to the markets? If anything, the dots are one of the most lagging indicators that we have.
Yeah, I think you're on a good point. There certainly is a little bit of a dissonance between the dots and the market, but the thing I would emphasize is that the degree of that is much smaller than it has been, and certainly much smaller than the volatility that we've realized in the market over the last 9 months. So we've been in a market where the surprises have been very large, and the Fed surprises have been even larger, and that's been really challenging. It's been challenging for equities, it's been challenging for bonds.
So anything
And
under
as we
285 is good for
progress,
me,
we're
because
getting
under
closer to the point where there is a
285.69,
convergence. There is a
that's
little bit more
good. So
clarity on
let's
the outlook. I
go
think Powell in his press conference will talk a lot about kind of his forward-looking expectations. And we're going to see less volatility as a consequence. And I think that's generally a good thing. So the thing I would emphasize here is there's a little bit of dissonance left, but it's a degree smaller, multiple degrees smaller than the volatility we've experienced. And that's a big transition.
I've never seen the price jump like this, so y'all forgive me. You watching me watch this price. I've never seen it jump like this.
Some resolution of the uncertainty.
So I'm just looking for a place to get out of this trade. Anything under 285 when it gets back down there. If it does, then I'm gonna come out.
For you guys right now, those listening on Sirius XM,
And maybe I'll get back in after
markets
the
are at session
announcement.
lows. The Nasdaq Composite is off almost 100 points. The S&P is down about 2720 in handles. Call it that just kind of, so to speak. Yeah, I'm checking it right now. Now about 20. So half of 1% declines. The Dow is now down 165, 170 some points. Mona, this is a good time to bring you back into the conversation here as well. We started you off with kind of the macro picture and what the expectations were. The way that the markets are shaping up right now seems to indicate, at least, that the initial part of next year could be a little bit more, say, biased to the downside, but maybe not as volatilely so as it's been. If you stack things up with the data that we've seen today from the Fed and the CPIs and the PPIs and everything else, does this then still mean that the path of least resistance for stocks is lower? Do we test the lows? Do we set new ones here in early 2023?
Yeah, it's a great point. And look, I think to John's point earlier, we are headed towards a 5% plus terminal rate according to today's dot plot, but really the market wasn't too far off of that. And so 5% or so means probably 2 more 25 basis point rate hikes. Maybe the Fed is giving itself some room in case inflation does become more volatile. But I also agree with David that inflation is starting to show signs of rolling over. And there are several leading indicators that we follow that do indicate that inflation will probably continue to move in this downward direction. Interestingly, I do think the Fed is being a bit conservative, so they have 3.5% core inflation by the end of 2023. I think there have been so many calls that the Fed has been wrong on inflation to the upside that now they wanted to be a little bit more cautious to the downside, and perhaps the same way they're giving themselves a little bit of room in the Fed funds rate. Now, to your point on do we retest the lows, certainly we think there's a period of volatility ahead of us as we get through not only an economics downgrade, but the earnings downgrade that was mentioned earlier. But that being said, this is what we are calling the worst kept secret on Wall Street. You know, this recession or this period of economic downturn is well known and established by not only Wall Street, but a lot of people are talking about it already. We do think we enter a period of volatility. It could potentially be short-lived in that they will start very quickly then looking towards this period of recovery ahead. Sure. And keep in mind, when you do look at history, the analysis shows us that markets actually start recovering anywhere from 3 to 6 months before a recession ends. And so these forward-looking markets, we think, continue in 2023 for sure. And really, we start transitioning from defensive portfolios to more recovery portfolios.
All right, let's turn back, get a kind of quick comment as we start to turn our attention to the Fed conference at 2:30. We hear from the chair himself. Rick, what will you be listening for?
You know, I would be listening for the notion that higher for longer, and I believe even if we start to show more dramatically heading towards a recession, I think the key to this move by the Fed, this whole tightening cycle, is that they're going to be much tougher to actually reverse and turn corners and lower rates. I think that's what you want to concentrate on. And if you look at May Fed fund futures, and I've been looking at May, that's been roughly the fulcrum between April, May, June, but it had a dramatic break. A very dramatic break. And my phone was going off because many of my sources that trade were telling me that changed the way they traded 2s, 10s, 30s in the stock market after watching the dramatic 10 basis point drop in May Fed fund futures.
All right, Steve Leisman, we're going to give the last word to you here as we wrap up this panel. The takeaway and what you will be listening for and asking Fed Chair Jay Powell during this press conference.
Here's the thing. There is now the need for a daily Leisman-Santelli show. Market said what? Fed said what? I don't agree that we're heading for a period of lower volatility. I think there's more volatility because I think, you know, Rick is very focused on what the market is saying. My job is to report to you in detail what the Fed is saying. That gap grew today. Rick is right. We did have a strong move in that May 2023 contract up to 492 from 482, but it's still below where the Fed is. And more so when you look out the curve to the January 24, as I think Dave Kelly said earlier, the Federal Reserve sees itself ending the year at that 5 1/8 number, and the market thinks they're going to end in the 440 range. So there's 60, 70 basis points of difference between the markets. I think we have some discussions that have to be had, some explaining that has to be done about where the market is priced and where the Fed thinks we're going. And somebody's going to have to give something here. I don't necessarily think Kelly Evans was wrong earlier when she pointed out how wrong the Fed has been, but somebody's got to turn tail here, either the markets or the Fed. And this is going to be a very interesting story from here. I look forward to continued discussions with my colleagues in Chicago, Rick Santel.
All right. One of the best panels around to break down
just
Fed
watching
decisions
PPP.
and economic data.
I'm waiting for it to
Thanks
go
to our
back
panel,
down. I
John
want to get out of
Bellows,
the
Mara
trade.
Mahajan, David Kelly,
I don't know what
as
the
well as,
Fed
of
is
course,
gonna
Steve Leisman, Bob
say,
Pisani, and Rick Santelli as
but
well.
So it gets
it
even
keeps
more
going
interesting
up
from
and down.
here on
So I'm
out.
just
Coming
waiting
up,
for it to
former Fed
break down
Governor
under
Frederick Mitchell will tell us
287.
how high he thinks
And we
rates
just
should go
see
and
it.
for how long. Our
So
analysis
maybe
of the
we'll.
central bank decision continues with the press conference starting in less than 15 minutes time. This often ends up being the real mover of financial markets. Don't go anywhere. We're back in just a moment.
Anybody else following this chart? I'm looking. 3 minutes. Yep, come on down, baby. That's what I need.
As 3 weeks.
All right, stocks drop, yields pop following the Fed's decision to raise interest rates by a 0.5 percentage point to its highest level in 15 years. Let's now bring in former Federal Reserve Board Governor Frederick Mishkin. He is also a CNBC contributor. Thank you very much, sir, for joining us this afternoon. I wonder, you've had a few moments now to digest kind of what's happened. We're obviously all looking forward to this press conference. What exactly stood out to you, sir?
Well, I think the issue here is that the Fed is indicating that it has to raise rates. An issue I think that's very important is that they've slowed down the speed of raising rates. I'm not sure how critical that is in one sense, but it's important in another, in that, as Jay Powell has emphasized, the real issue is how high they have to go. I actually would have preferred to actually keep on the 75 basis point cycle for one more time, because I think that actually that they have to go to higher rates than the market's anticipating, and also that the dot plots are indicating as well. So I actually also like to be more preemptive. Again, this has to do with the fact that they dropped preemption, which is a huge mistake. So I think that they have to get back to indicate they really are going to be ahead of the curve, and they're going to be serious about not pivoting. That there are now calls for people to say, gee, the Fed should not pause. Not too far in the distant future. I think they've got to do their job and indicate that's what they're going to do to keep inflation under control. And that there is risk that, in fact, they could go too far, but it's worse to have risk that, in fact, inflation doesn't get back under control.
So you would have gone 75 here. That's interesting. I wonder what you make of the more forward-looking market indicators, the deeply inverted yield curves, especially the 10s ones, which has more or less a perfect track record. The fact that they've hiked now the Fed funds rate to well over where the rest of the curve really even is, except for at the very short term. Even something like prices paid of the ISM, right? The way that that's collapsed to levels consistent with 2% PCE inflation. Do those forward-looking indicators of inflation not tell you they're perhaps already too restrictive with policy here?
Well, I certainly don't think they're too restrictive, that's for sure. Because what you have to think about is it's not the actual federal funds rate that's important. It's what we call the real federal funds rate, the federal funds rate that's adjusted for inflation. And even now, that's still not very high, because at least for the next couple of years, it's very likely that inflation is going to be not getting down below the 3% level, and that it's going to take a while longer than that. And so right now, they've only gone to sort of moderate tightening. It's not really, in fact, they've just really gotten to neutral just fairly recently. So from that perspective, I think that
but that's using current inflation. And inflation, as you know, is a lagging indicator. I mean, the inflation we're experiencing now is from monetary policy that was set into place 18 months ago.
Absolutely. But in terms of actually the kind of numbers that we see in terms of looking forward to what we think inflation is going to be, we don't really see numbers below 3% for a while. Now, we might get lucky, and in fact, inflation would go below that. But I think expectations are really that inflation is still well above the Fed's target. And from that viewpoint, for quite a period of time, I'd like to see
I'm just looking for a place to get out of the trade. I want to see how positive I can get.
So this is actually a judgment call. I think really what's more
but it's really jumping.
Fed,
it gets under 286 and it jumps up again. So I want under 286.
To pause too early. That's what I really worry about.
I don't want to hang around too long until that Fed announcement, but I want to give it a chance to get down some more too.
And that, do they actually are willing to actually say that the risks that are more dangerous right now are not getting inflation under control rather than having the economy go into recession? And that's always a balance. But I think that there are a lot of people saying, gee, we're going to have a recession. Isn't that terrible? But in fact, in order to get inflation under control, That's what the Fed is going to have to do. You can look at past episodes that you always get a slowing in the economy when you're actually trying to get them control.
Breaking down,
That's even more true when you've actually gotten a little bit behind the curve, as the Fed has.
All right, so we've got just about maybe a minute or so left here, Frederick. Before we let you go, is there a case to be made? A lot of folks, economists, are talking about this idea that interest rate policy has a long and variable lag. I've heard that term a lot now these days. Is there a case to be made that these days, this decade, that long and variable lag has become shorter, that we see policy impacts in as little as 3 to 6 to 9 months as opposed to 18, like Kelly pointed out before?
I really don't think so. I think that the lags are pretty long. And that's one of the reasons why it's not easy to be a central banker, that you've got to call the shots and sort of call the shots now for what you think is going to happen a year, 2 years from now. So I think that's the age-old problem that central banks have, which is that they have to try to anticipate the future. It's not easy to do so. You can make some big mistakes that the Fed actually did make in this recent cycle. But that's just the job. It's part of what you have to do. And in fact, this is also an indication that you're operating under uncertainty, that sometimes you have to actually ask which of the balance of risks that you think are much more dangerous. And in this particular episode, not getting inflation under control right now is actually quite dangerous.
Sure.
So that's what I really worry about. And also the political pressures that are going to get much worse on the Fed. There are also people talking about raising the inflation target, which I think is not the right time to do so.
Okay. All right. Perfect. Great thoughts. Frederick Mishkin, former Fed governor, thank you very much. We appreciate it, sir.
And the press conference is next. Don't go anywhere.
Come on, hit those 40s. 286 40s, not up, down. Hey everybody, hey. Yep, everything went down. We're just waiting on the feds to make the announcement. That's all. I'm just waiting. And I got these 3 puts cooking and they're positive, but if I get under 286 is even more money. So that's what I'm hoping for, under 286. Under 286. And it keeps, bouncing up and down. So that's what I'm watching so intensely, y'all. That's what y'all worry about. That's what y'all wondering about. That's what I'm watching. I'm just trying to find a spot to jump out. Come on, go down, go down, go down, go down. I'm going to sell before that announcement starts because I don't know what kind of volatility to expect. And I don't want to be around in it. I'd rather jump in it than be in it. So as soon as I can find a spot to dump or to sell these, it's like a time game. Sell these puts.
Yeah.
Welcome back. Let's get the lay of the land as we wait the Fed Chair's news conference. It starts in just a couple of minutes' time. We saw stocks. We'll talk to Mike Santoli down at the New York Stock Exchange. Mike, we saw stocks immediately sell off and yields pop a little bit on the decision. Everyone seems to think if Powell were to lead one way, hawkish would be that way. But there's still a risk he could open the door to, use some language about needing to soften the pace depending on how the data comes in or something to that effect?
Without a doubt, Kelly. I mean, he can certainly acknowledge progress in various inflation, those that he laid out not too long ago in that speech that the market took heart in. So yes, I do think there is that opening. I think what the market is initially reacting to is not just the higher projected Fed funds rate where it's going to get to next year, but also in combination with the economic and inflation forecast that the committee put together, right? So they're saying growth is going to be worse than we thought 3 months ago, 0.5% GDP growth. That's as close as the Fed's going to get to predicting recession. And meanwhile, core inflation higher than we thought just 3 months ago. So that combination is unsettling. If they think inflation is going to be even higher while growth slows down, unemployment has to go up into the mid fours, is what they're saying. And even with that, they're going to keep Fed funds above 5%. Now, all that is subject to the markets disagreeing with it and deciding to take the other side.
Is anybody else
pointing
trading, or
out,
is it just
and I think
me?
it's in all investors' heads, that
As
1
we
year
go
ago,
today,
the market, the
and
Fed was very
boom,
wide of the mark with
overall.
what the outlook was going to be and what they were going to have to do.
Like,
So at
that's
some
worse.
point,
Yes.
you can fight
This
the Fed if you
cliffhanger
feel
is
as
a
if their
piece of
premises
work.
are not necessarily
36.
realistic.
But Mike, you can fight the Fed, but you're not going to do it from a career long or short perspective if you don't have more data, right? I mean, is there anything that we're going to see between now and say the early part of January, February, as we head into the next part of the interest rate cycle in the early part of next year, that breaks the market
got my
out of any
clothes
part
in
of the
order
range that we've
ready.
already seen for the past
Okay.
2 or 3 months?
Well, I think what you can see, Dom, is first of all, the PCE inflation numbers, as people are trying to put them together in advance, they're going to show decelerating core inflation. So people are maybe going to be able to gain some comfort that inflation does have some downside momentum, and therefore, the Fed may not have to go as far as they thought, or maybe growth can be more resilient. So I think that every data point is going to be filtered through, this set of expectations that the Fed committee has put out there. And look, we've absorbed a lot. The stock market's in the same place it was when the Fed funds rate was at 0.75% back in the spring. So it's not as if every tick in what the Fed funds rate does immediately takes value out of the market. It's all about how we're getting there and how much longer we have to wait till the end.
And we've just got a couple seconds left. What's the one thing you'd be watching for in the press conference, Mike?
I would say if he's going to say we're not done, he's going to talk about higher for longer. And he did say, and see if he actually gives a nod to the CPI data we got yesterday and is willing to exclude the rent calculations from inflation expectations. In other words, to try and say, maybe now finally it's time for a more nuanced view of inflation. Whereas earlier this year he said, we can't do that.
Let's get a quick look at the market as we wait to hear from the Fed chair. The Nasdaq's down about 0.8%, as you can see right now. The Dow less than that, interestingly, down about 0.4%. And crude oil still hanging on to its gains with WTI up about 2.5%. We saw a pop in bond yields, Dom, as well. Immediately after the decision came out, up about 3.5 basis points on the 10-year. And there we still are, sitting right around those levels, around 354.
All right, and what we have right now, you can see right there on your screen, Fed Chair Jay Powell approaching the podium right now, so we'll take you to his comments live right now.
Good afternoon.
I got my clothes in order, y'all.
Before I go into the details of today's meeting, I'd like to underscore for the American people that we understand the hardship that high inflation is causing, and that we are strongly committed to bringing inflation back down to our 2% goal. Over the course of the year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 0.5 percentage point. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we're continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive policy stance for some time. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed significantly from last year's rapid pace. Although real GDP rose at a pace of 2.9% last quarter, it is roughly unchanged through the 3 quarters of this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions.
Yes, Jesus, drop to the floor. That's what I need to see. Yep, QQQ is going down. It's under 285.
Higher interest rates and slower output
but
growth
it's right there at
also appear to be weighing
285,
on business
285.72. Yes. Yes.
As shown in our summary of
Puts
economic
for the
projections,
day.
the median
Puts for everybody.
projection for real
285
GDP
is
growth
tanking to the
stands at
ground.
just
That's what I needed to hear.
0.5%
So
this year,
let's just save this
well
little
below the median
order.
estimate of the longer run
And
global
let's
growth
see
rate.
what kind of money we're making, y'all. We
Despite
made
the
money
slowdown in
today.
growth, the labor
We
market
made money
remains
today.
extremely
We
tight,
made money
with
today.
the
We're making
unemployment
money
rate near a
today.
50-year low.
Just so y'all
Job
know,
vacancy is still very high.
it's still
and wage growth
dropping.
elevated.
Oh, Lord.
Job
Let me
gains have
get
been
this
robust,
closing
with
order ready.
employment rising
It's down
by
to
an average of
284, and it's still
272,000 jobs
tanking,
per month
y'all.
over the last 3
It was
months.
a good day. Frank,
Although
if you
job
didn't get some
vacancies have
puts, I
moved
hope you
below their
got
highs,
some.
and the pace of job gains
It's
has
down under
slowed from earlier in
283.
the year.
Jesus,
The
keep
labor
me
market
near the
continues
cross.
to be out of balance, with
That's a
demand
good day. I need
substantially
all my
exceeding
money
the
back,
supply of
y'all.
available
So it was a
workers.
good day. It's under 283. It's still dropping.
The labor force participation rate has
Phew!
little changed since the
I will
beginning of
tell
the
you
year.
this. Those 3
FOMC
puts
participants expect supply and
earn
demand conditions in the
over
labor market to come into
$1,000.
better balance over time,
So
easing upward pressures on
283.72, it just keeps
wages
going.
and prices.
283.68,
The median projection
56,
in the SEP for the unemployment rate rises to 4.6% at the end of next year.
283.70, 39. Sheets.
Inflation remains well
If
above
it gets
our
down to
longer run goal of 2%.
282,
Over the
I'm
12
going to
months
start
ending in
shaving
October,
off.
total PCE prices
It's
rose 6%.
284,
Excluding the volatile food
34,
and energy categories, core
283,
PCE prices rose 5%. In November, the 12-month change in the SEP was 7.1%, and the change in the core CPI was 6%.
284. We stuck around
The inflation
284.
data received so far for October and November show a
283.91,
welcome reduction in the monthly
283.85,
pace of price increases.
283.77.
But it will take substantially more evidence to give confidence that inflation
I'm just going
is
to
on a
peek at this
sustained
chart.
downward path.
Ooh, that is
Price
ugly.
pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has contributed to upward pressure on inflation.
284.18.
The median projection in the SEP for total PCE inflation is 5.6% this year and falls to 3.1% next year, 2.5% in 2024,
284.13.
and 2.1%
Let's see if it goes under
in
284.
2025.
It's stuck around
Participants
284. There it
continue to
is,
see risks to
283.
inflation as weighted to the upside.
Let's see if it can get through down
Despite
under
elevated inflation,
283.
longer-term inflation expectations
It's
appear to remain
stuck.
well anchored,
284.01,
as reflected in a broad range of surveys of
284.12,
households, businesses, and forecasters, as well as
283.96.
measures from financial markets. But that
I'm
is
gonna
not
go
grounds
on
for
and get up
complacency.
out of here.
The longer the current bout of high
283.
inflation
I'm gonna
continues,
sell
the greater
2
the chance that expectations of higher inflation will
because
become
it just
entrenched.
makes sense to
The
sell
Fed's monetary
2.
policy actions are guided by our
And
mandate
take
to
those
promote maximum
profits. So I'm
employment
selling
and stable
2 of
prices
the
for the American
puts,
people. My
and
colleagues
I'm
and I
holding
are
on
acutely
to
aware
1.
that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation.
I'm just waiting to see how far under 283 we
We are
go.
highly attentive to the risks that high inflation poses to both sides of our mandate, and
283.
we are strongly committed to returning
I hope
inflation
somebody
to our
got in
2%
on that
objective.
with me. 280.
At today's meeting, the committee
We're
raised the
stuck
target
around
range for the federal funds rate
284.
by a half percentage point, bringing the
So
target range to 4.25% to 4.5%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.25 percentage points this year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate.
I'm gonna hold on to this
attain a
last
stance of
one.
monetary policy
As long as it
that is
doesn't go up
sufficiently
above
restrictive to return inflation to
285,
2%
I'll hold
over
on
time.
to it. It's
Over the course of the year,
284.37. It's
financial
stuck
conditions
around
have tightened significantly in
284.50.
response to our policy actions.
284.30,
Financial conditions
284. It's
fluctuate in the short
vacillating.
term in response to many factors. But it is important that over
284.50
time
it seems
they
to be
reflect
stuck. But I'm gonna wait.
the
I'm gonna
policy
watch this
restraint that we're
chart.
putting in place to return inflation to 2%. We're seeing this on demand in the most interest-sensitive sectors of the economy, such as housing.
Watch this.
It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation.
Today was a good day.
In light of the cumulative tightening of monetary policy
284.91.
and the
See,
lags with
that's a
which
little
monetary
too much
policy
for me.
affects economic activity and inflation,
285.04.
the committee decided to
I don't
raise interest
know.
rates by 50 basis points today, a step down from the 75 basis
284.
point pace seen over the previous 4 meetings.
67.
Of course, 50 basis points is still a historically large increase, and we still have some ways to go. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 5.1% at the end of next year, a half percentage point higher than projected in September. The median projection is 4.1% at the end of 2024 and 3.1% at the end of 2025.
It might break
Still
down a little
above the
more.
median
When
estimate
it hits
of
those
its longer
60s and
run value.
50s,
Of course,
but
these
it's not.
projections
It's
do not
bouncing
represent
all
a
over the
committee
place.
decision or plan,
284,
and no one knows with any certainty where the
285. I don't want
economy
to give
will be
too much
a year or
back.
more from now.
284.88, but this thing is wild.
Our
It's
decisions will
jumping. It's
depend on the
crazy.
totality of
So I'm gonna
incoming
hold
data
on.
and their implications for the outlook for economic activity and inflation.
284.
And we will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. We're taking forceful steps to moderate demand so that it comes into better alignment with supply.
284.
Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term
I only
inflation
have
expectations
one
well anchored.
put still.
Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability
Okay,
is essential
hold
to
on.
set the stage for achieving maximum employment and stable prices over the long run.
It's going back down, y'all. Hold tight.
The historical record cautions strongly against
284,
prematurely loosening policy.
56,
We will stay
33.
the
Yeah,
course
so we go
until
down
the
under
job is done.
284. That would be so sweet.
To conclude, we understand that our actions affect communities, families, and businesses
284,
across the country. Everything we do is in
47.
service
I
to
need
our
to see some
public mission.
284.30s.
We at the Fed will do everything we can to
284.
achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
284.38.
Steve Leisman,
31.
CNBC. Thanks for taking my question, Mr. Chairman. You just talked about the importance of market conditions reflecting the policy restraint you put in place. Since the November meeting, the 10-year has declined by 60 basis points. Mortgage rates have come down. High-yield credit spreads have come in. The economy has accelerated, and the stock market's up 6%. Is this loosening of financial conditions a problem for the Fed in its effort and its fight against inflation? And if so, do you need to do something about that? And how would you do something about
I'm
that?
about to sell this last put.
So, as I mentioned, it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place to bring inflation down to 2%. We think that financial conditions have tightened significantly in the past year, but our policy actions work through financial conditions, and those in turn affect economic activity, the labor market, and inflation. So what we control is our policy moves and the communications that we make. Financial conditions both anticipate and react to our actions. I would add that our focus is not on short-term moves, but on persistent moves. And many things, of course, move financial conditions over time. I would say it's our judgment today that we're not at a sufficiently restrictive policy stance yet, which is why we say that we would expect that ongoing hikes will be appropriate. And I would point you to the SEP again for our current assessment of what that peak level will be. As you will have seen, 19 people filled out the SEP this time, and 17 of those 19 wrote down a peak rate of 5% or more in the fives. So that's our best assessment today for what we think the peak rate will be. You will also know that at each subsequent SEP during the course of this year, we've actually increased our estimate of what that peak rate will be. And today, the SEP that we're published shows again that overwhelmingly FOMC participants believe that inflation risks are to the upside. So I can't tell you confidently that we won't move up our estimate of the peak rate again at the next SEP. I don't know what we'll do. It will depend on future data. What we're writing down today is our best estimate of what we think that peak rate will be based on what we know. Obviously, if the inflation data come in worse, that could move up, and it could move down if inflation data are soft.
Jean Smiley, New York Times. Thanks for taking our questions. The SEP, like you mentioned, suggests that the Fed will be making another 3/4 percentage points worth of rate increases in 2023. I wonder if you would foresee that being in 25 basis point increments, 50 basis point increments, sort of how you see the speed playing out going forward. And then I wonder what you're looking at as you determine when to stop.
Yep, I'm selling the last one because I gotta
as
go.
I've been saying,
Oh Lord,
as we've gone through the course of this year,
this order cancels your open.
as we lifted off and got into the course of the year, and we saw
okay, so
how
I'm
strong
out.
inflation was now persistent, it was very important to move quickly.
That was beautiful.
The speed, the pace with which we were moving was the most important.
That was a good one.
I think now that we're coming to the end of this year, we've raised 425 basis points this year, and we're into restrictive territory. It's now not so important how fast we go. It's far more important.
Did anybody get in on the trade?
What is the ultimate level? And then at a certain point, the question will become, how long do we remain restricted?
I stepped away for you, but didn't review.
I would say the most important question now is no longer the speed.
Last week.
So, and that applies to February.
Yep, we did it.
So I think we'll make the February decision based on the incoming data and where we see
I
financial
went in,
conditions,
got
where
the
we see
3
the economy.
puts, and let me see if I can show you the
for that
chart.
decision. But ultimately, that question about how high to raise rates is going to be one that we make looking at our progress on inflation, looking at what financial conditions are, and making an assessment of whether policy is restrictive enough. I've told you today we have an assessment that we're not at a restrictive enough stance, even with today's move. And we've laid out our individual assessments of what we would need to do to get there.
Sorry, y'all. I was MIA. I had to go in and get them pennies. Sorry.
And then the question will be, how long do we stay there? And
I had to go in and get that change.
The strong view on the committee is
nobody went in. I did.
Until we're really confident.
And those puts paid nicely. I'm gonna keep watching because it's at 285. If it goes under 285, I might get one more, but I don't think it's gonna do anything else. 285.44. Yeah, that thing is jumpy. Oh, I've never seen the price jump like that. It was a little nerve-wracking for sure, because it's jumping all over the place. Let me look at it at the 5 minutes. I don't even know what that looks like, but
then you go to housing services. We know the story there is that housing services inflation has been very, very high and will continue to go up actually as rents
so that's what it looked like,
have to be renewed. They can be renewed into a market where rates are higher than they were when the original leases were signed.
Here, I have to look at it and see. So I got
the rate for new
this.
leases is coming down. So once we work our way through that backlog,
It was good. That's all I can say.
inflation
We'll
will
look
come
at it.
down sometime next year.
285,
The third piece, which is something like 55% of the index, PCE, core inflation index, is non-housing related core services. And that's really a function of the labor market largely. The biggest cost by far in that sector is labor. And we do see a very, very strong labor market. One where we haven't seen much softening, where job growth is very high, where wages are very high, vacancies are quite elevated, and really there's an imbalance in the labor market between supply and demand. So that part of it, which is the biggest part, is likely to take a substantial period to get down. The goods inflation has turned pretty quickly now, after not turning at all for a year and a half. Now it seems to be turning, but there's an expectation really that the services inflation will not move down so quickly, so that we'll have to stay at it. So we may have to raise
Frank,
rates
did you
higher
get some?
to get to where we
All
wanna
the
go.
stocks
That's
I
really
watched
why
fell
we're
at the
writing down those high
announcement and
rates,
are
and why
coming
we're
back
expecting that they'll have to remain
to where they were before the announcement. Hey, family, what's the latest? Anyone got the coins? I did.
Thanks for taking
I
the
got
question.
in.
You
I
described
dropped. I did
GDP growth in the
3.
SEPs
I had 3
as
calls at
moderate,
first. Y'all heard me.
modest, I
Frank
believe.
heard it. It wasn't 3. It was
Yet
one
it's
call.
really approaching
And
stall
that
speed.
one
Half a
call got
percentage
caught
point
in
is
that
not
first
much.
black that
You
first big
described
red candle.
labor market,
So I had to
unemployment
sell
rate
it
as
because I wasn't
representing some
expecting.
softening.
I don't know, it was doing a little uppy thing. And suddenly out of nowhere it dropped. So I sold that one call and then I purchased the three puts I had queued up. And so the QQQ3 puts, I rolled through that little bit of consolidation, got that last little bump, and got out on that green candle. So yes, I got it. And when it drops fast like that, the money adds up really fast. So let's see, it's at 284. Oh Lord, 284.68. I don't know, maybe some more. But it's just so volatile. It's too jumpy to be trying to figure out a way in. Because I'm telling you, that number is jumpy. It's 284. It's down almost $1. Just, I don't know. I'm happy with what I have. I don't know. I don't know how to read it. I can't read it. Because the numbers, you see how the price is jumping all over the place?
If you look,
I think it's better to just stay out. Unless it starts to form a pattern, and I don't see it. So I just got lucky. Well, I wasn't lucky at first because I had a call on that first red candle, and whew, that thing hit so fast, I couldn't get out of there fast enough. And then I purchased the call, the puts. So the 3 puts put me over the top. It cleared up the deficit from that red candle, and then gave me all the gains on this moving forward. So it was worth waiting for.
None of that is guaranteed.
But see, now look at the price already back up to 286. It was just 284.68. Now it's 285.81. No, this is way too volatile. It is jumping like nobody's business. And so if I wasn't, I think all of that crazy is. It was a perfect time to get out of there when I got out of there.
Largely before the past 2 CPI reports showed inflation decelerating.
That wasn't what I was expecting at all. That's not what I was expecting. I wish I had got in on that red candle. I wish I had just did those puts. That would have been twice. That would have really been a nice payday. But to be honest with you, it was still nice catching that last red candle. It was really, that was still nice. So we did it. Frank knows the sound. Frank heard when I bought that first call. Frank's like, "What you doing? What you doing?" Because it makes, that sound. It goes bleep when the order fills. So I was really just gonna buy the one call to see because it was doing a little step up thing. I was trying to get in and out before the Fed announcement. That big red candle came in early. Let's see what time did that candle? That thing started. It started at exactly 2 o'clock. I wasn't ready for that. I thought I was gonna catch those little up moves. I said, okay, we got a half hour. I'll catch this little up and then be ready and get out. No. This thing started dropping at 2 o'clock. So it dropped from 291 to 280, like 287. That was I was lucky to get my butt out of there when I got out. And then I got in, purchased the puts. So yeah, and I don't know what this is doing the rest of the day, but I don't need to know either.
No,
I'm just happy I got in and got out.
Just a matter of practice.
So I think we need to learn spreads. I think we do. Of course we do. We need to learn all of it. But before I learn the spread, I need to learn how to put these during the meeting. I think we just gonna have to have like a Zoom call or something. Is anybody else stuck with putting your? I want to know everything about how to place stops, not just a stop, but I want to know how to place that OCO thing. I want to learn how to do all of that. Is anybody else suffering like me?
Hi, Chair Powell, Rachel Siegel.
Because that's where I'm stuck. I feel stuck there the way I was stuck with placing the first order, just not sure and afraid because I never did it before. And maybe I should just practice it. Maybe we could practice that in paper trading, how to set all the stops and all of that other stuff.
No, it's not about the strength of the labor market. The labor market is clearly very strong. It is more just that.
Yeah, would spreads help us? Elle says she thinks we need to learn spreads. Elle says I think we need to learn spreads.
That's why
yeah, I need to learn it all. Elle, I need to learn I'm telling you, I am stuck. I'm mentally stuck. I must learn how to put on stops. I must learn how to place these closing orders. Like when you make your order, I want to say, stop me out at this amount of profit. Stop me out. I think then I could call myself a trader.
Tighter policy, probably higher
Right now, I'm
rates,
just a
probably
trader in
help for
training
longer,
wheels, y'all.
just to
I
get
got
to
straight
where you
training
the kind of
wheels because I don't know how to do some
restriction
key
that
things.
you need to get
But look at
inflation
this,
down to 2%.
284.90. So this thing is stuck around 285. It got as low as 283. I got out somewhere around there,
It's very hard to say.
284. But now it's at
You know, you can look at
285.24.
history, right? And history would
So,
would say that
woo, that
in a
wasn't
situation
even
like
nearly
this,
as bad as I thought it was
declines in
going to be.
unemployment would be
I
more
wonder if it's
meaningful,
going to be
I
a
think,
sell-off, though, at
than
the
what
end
you
of
see
the
written
day.
down
I
there.
don't know.
Why do we think that is the case? So I'll give you a few reasons. First, just is that there's this huge
I am
overhang
stuck
of
on how,
vacancies,
when to
meaning
use
that
all the
vacancies can
indicators
come down a fair
and
amount. And we're
analysis.
hearing from many
Elle, do
companies
you
that
know
they
how
don't
to
want
put
to lay
on the
people off
stops and stuff?
so
Because
that they'll
look,
keep people
I
because it's
feel
been so
like
hard.
I
And I think
understand these
it feels like we have a
indicators. I
structural
do.
labor shortage
And
out there.
I
There are,
think,
4 million
you
fewer
know,
people, a
I
little more
kind
than
of
4
think
million
I'm pretty
who
decent
are
at
in
some
the
technical
workforce and available
analysis
to work,
too.
then there's demand
But
for
I can't do
workforce. So
any of
the fact that there's
those,
a strong labor market,
like
you
that
know,
stop
means
thing.
that
It does
that
not compute
companies
to
will
me
hold
because I
on
don't know what
workers,
these
and it means
numbers
that
are, the
it may take
pluses and the
longer, but it also
minuses.
means that
I
the
need a
costs are gonna be
class.
maybe less.
Needed
Again,
to set
we're
order
gonna find out
template all
empirically,
with
but I
closing
think
percentages. I
that's
know
that's a
C-bar,
reasonably
but when I get in
possible
there,
outcome. And
I'm
you
telling
hear
you what happens. Because I've
many
never done it
labor
and I've
economists
never
believe
had like
that
the
it is.
teacher
So
look over my shoulder
we'll
and
see.
tell me, go give me a gold star. I'm sorry, I'm that kid. I need to know. I need somebody to walk me through because I watched the doggone video. Barb did a video. Y'all know who Barb is from TD Ameritrade. Let me
Does that
turn this
not then
volume
suggest
down.
that the policy rate currently forecasted for
But
next year should
it was,
actually
I
be
just,
higher
I
than the
heard it,
5.1 median
it
estimate?
didn't
So then,
register. And that's the second or third time I've watched her. Okay, at 285.77. Yeah. Oh, we got out there just in time. But see, a smart trader, well, no, I wouldn't fool with this. Because when I tell y'all those numbers are bouncing around, this bananas, I've never seen it bounce around like that. It was scary. I was holding on in there for dear life. I'm not gonna kid. Doing that through that consolidation stuff, that was crazy. So I had to wait for this candle. When that one hit, it hit so quick that you know how that goes. When the money, it hit so fast. That's a 3-minute candle. So it went down from 286.59 to 283. It dropped $3 in 3 minutes. That's good momentum. That's how you get paid. You catch one of them big old red candles going down. That's how you get paid. So it's momentum, you know, the price is moving fast. That's how options work. I think you get paid more the faster it drops, you know. I don't know how it works. I don't know what they're doing behind the curtain. But C-bar, I'll tell you, you sent a video suggestion today that demonstrates advanced closings. Okay. What video? Where did you send it? No clue on how to set order templates with closing percentages. I know. I can set up the order. Like I can do the template. And Frank even showed me where to go. I know how to pull it up, but it's when you get to clicking on those things and setting the percent that you want. I need somebody to tell me I've done it right. And let me tell you why I'm scarred. Because I did one by myself and it closed out my order ahead of time. It closed out and sold my Oxy stock. And I wasn't ready to sell because I was practicing. And I guess I should have probably practiced with paper money. It's in the chat from this morning. Perfect. Is it this one, C-bar? Because you know, it was another one up. It wasn't the it was this one in this chat because this is like the second broadcast I tried to put up. I tried to put up one real early when me and Marilyn were in there talking at 3 o'clock in the morning. I thought that one would still hold up because I had put everything up. I was ready. When I got up, the doggone thing had closed out, so I had to set up another stream. So it's in this chat, and it's a video. Hallelujah. I'm scrolling back through the chat to look for C-bar's video recommendation. Yeah, we need to learn all of this stuff. So what is the next step for us, you all? Do we need to do like Zoom classes or something where we focus on a particular skill? Because what's hard here is it's hard for all of us to talk together. But if I host a Zoom, then we could all maybe do like a study session or something. Will anybody be willing to do a Zoom study session? where we all get together and we can work on one particular thing. Because C-Bar, you got it. C-Bar, you will probably have to be there to help us get through the stuff. But if you all are willing, I'll host a Zoom. I think I can. I forgot. I think I have an unlimited thing, so I can host as many or 25 people or something like that. So if you all want to, I'll do. Okay, we can take the survey right here. If you guys want to do a Zoom, just write Zoom in the chat. And then, because I want to do a Zoom, I'm telling you right now, I want one. My answer is Zoom. I would love to do a Zoom call, and we can tackle one thing and stay on that Zoom call till we all get it. Like, okay, so me and Marilyn, Lucille, anybody else? Put Zoom so I know, so just so I really know. I know Lucille says I would, so I'm assuming that's a Zoom too. So you all drop in there what you want the first. I know Lucille's like Zoom, 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 Zoom. Lucille, you know a thing or two. Zoom, Zoom, Zoom. Miss Vice, me too. I need to talk. I need to chat. This is great. This is great for us watching the market together. I like it. I love it. This is a great way to watch the market with somebody, see somebody. I promise y'all, if I did, okay, maybe in our private Zoom, I'll disclose more numbers. But out here on the internet, y'all, I don't know who was in here with us. Seriously, I don't. Anybody could be dropping in, dropping by. And so I don't reveal numbers. But if we do like our private Zoom, then I can be more forthcoming with, you know, how that trade went. It was profitable. But what I have to work on, you guys, is being positioned to take all profit. Because just like I bought that one call and it got negative real quick, when my puts, they started out positive. Did they start out positive? Yeah, when I bought those puts, I want to say, I don't know, they got positive quick. They set through a little consolidation, but they got positive quick. But I had to overcome that negative from that call. So I probably should have just sat myself still and waited for the announcement. But, you know, greedy, eyes too big for you, something, all of that stuff. Okay, so it looks like we need to do a Zoom call. Okay, so now you guys, for me, it has to be a Saturday or a Sunday. Y'all could just, do you want me to do a poll under the community tab? Would that be easier, or is it easier to do the poll and finish everything right here? Because we could, I know, Marilyn, patience, I know. Because the truth is, that could have been all profit. It could have been all profit. Could have been. I could have waited, and I didn't. But now you all see what not to do. Be patient. Marilyn said it. Because what could have been all profit should have been all profit. I've done that many times. I did that the other day with the 3 calls. I'm sorry, I always say calls. Those 3 puts that we've had 3. I've had 3 great trading days. 3. Y'all saw those. Back in the stream. All right, and let's see. Marilyn, thank you, because you helped me so much, really reminding me patience, accountability, all of those things. I'm back in here, you guys. I was getting ready to do something. Well, I was getting ready to pull up the Think Through Swim again so we can see it. But it is doing anything. It's going up, as a matter of fact. It's going back up. So let's see if I can pull that back up. Share the screen. And, I think I figured out the key to it is that I think Think Through Swim has to be open. And this has to be on a smaller window. I think. Let's see. Oh, wait. I know. I'm just trying to share. It's gone. I don't know. I thought I figured it out. Okay. So C-Bar says, need to set up several examples in advance so that we can walk through several closing scenarios. Okay, so first things first, we're gonna do a Zoom. And how do you guys feel about a Saturday or a Sunday? You can just drop it in the chat if you want Saturday, if you want Sunday, and then we'll try to come to some conclusion. It doesn't matter to me, Saturday or Sunday. I'm free to host. And then we just need topics. So I personally know I need to work on closing orders. Yep, for sure. It just doesn't make sense. So Sunday, okay, Maryland, it doesn't matter. So we got 1 vote for Sunday, 2 for Sunday. L says Sunday, Maryland doesn't matter. It doesn't matter to me. C-Bar, your Sunday. Who else is in here with us? Ms. Vice, does the day matter to you? Saturday or Sunday? I think Ms. Vice is still with us. And I'll ask Tara and I'll ask Bumpy when I talk to them. Okay, so it looks like Sunday works for everybody. Sunday it is. And if everybody can't make it this Sunday, then next time we'll do Saturday. So Sunday it is. How about you guys toss out a time? I'm free. I got nothing to do. Y'all have lives. Some people have lives, children, jobs, all kinds of things. You all tell me what time. Okay, yes, and Kathy. Let me make a note. So we need Kathy. I need to talk to Tara. I need to talk to Frank and Bumpy. And I'll see if Tracy, she may, Tracy might be interested in sitting in too. Okay, so we're doing a Zoom call. We got that down. I'll schedule it. We're doing Sunday. You guys want to jump in? We might as well. Want to do it this Sunday coming up? Today is what? Wednesday? Okay, so we'll do Sunday. I'll ask Kathy. The people I'll reach out to, I'll just send everybody the invite. I'll email everybody. I'll roll through the chat. I think I can reach out to just about well, oh yeah. Hey, you guys, I'm gonna need your email addresses. So, hey, I have an email. I have a from Lack to Legacy email address. So let me put it in here. It's from lacktalegacy@gmail.com. So just email me your email addresses, and then that way I will send you guys the Zoom link from Lack to Legacy @gmail.com. The Gmail. Okay. So there is my email address. It's from Lack to Legacy, so that's easy. Just email me you guys' email addresses, and I will email everybody the link for the Zoom. So we're talking about Zoom on Sunday. I know everybody says afternoon, of course. Oh, Bumpy, you just got back. We're doing a Zoom meeting to work on some skills. Oh, look at this thing shooting up back to 287. Oh, we from 283 to 287. I'm just saying, I just pulled it back up. That would have been a great little move. I'm just happy to get in and get out. Let's just focus on what we're doing. My email address, you guys, is from lacktalegacy@gmail.com. So I'm trying to get all of the stuff aligned. So my Instagram is from Lack to Legacy. YouTube is from Lack to Legacy. And now my email address is from Lack to Legacy. And I'm working on a website. Sonia was helping me. So I have to see if the website is up too. But the website might be another way. But I like that we're all right here. We're right here on YouTube. Everybody kind of knows how to get me YouTube or Instagram. And now you have my email address. So I'm going to go look at my email right now. See if you guys can, if you're near a computer, just email me like the topic you want to cover. The day, we know it's going to be a Zoom. Most people said Sunday, but just send me an email with that information in it. And that'll be a way I can test this because it's a new email address too. So let me go here. Okay. I think everybody got it. Good, Marilyn, you just emailed me, and I'm gonna keep my eye over here on QQQ, only because it just is that thing is amazing to me, you all. It's amazing that we can make money like that, y'all. I'm telling you, I want us to get together in a small group because I do want you all to have some sense of what that move. Anybody, first of all, y'all traded, y'all know what that move was. That was a nice little move. Okay, so I'm getting ready to go over to Gmail and see what we got. Okay. Legacy. And then I'll tell you whose email I got. Okay, I got Marilyn's email already. And I just got Elle's email. Anybody else? Let's see. Bumpy. We're going to have a study group on Sunday. If you want to attend, I need your email address so I can send you the link. So, yep, we're doing it Sunday, the 17th. Let's see, Sunday, December 17th. And then you guys can toss out some topics too. I know I definitely want to do the closing orders. So maybe for Sunday, like C-Bar said, we could have several examples set up. Oh, that's so cool. So I'll just set them up on my, actually, C-Bar, would this work? Couldn't I just email everybody maybe a stock, a strike price, and then we could all work together on the same one, maybe while I am, or you or anybody, because we can all share our screens. So whoever wants to show it. Thank you, Lucille. I got yours too. I got Lucille's email. I got Elle and Marilyn. So if I gave us so that we all doing the same thing, so maybe we could all work on forward. Because that's easy to get in. Everybody can get in and get out. We could practice all together, the same stock. So that way we can kind of help each other and we're not all in a different place. Does that make sense? Just got it. Just emailed you. Yes. Okay. And I will reach out because I've got Kathy's email. I've got Tracy, Tara. I think I got Frank too. Bumpy is the only person I don't have an email address for. But I can send that to Bumpy through Messenger or something, just so that I have a way to reach out to you. You suggested everyone create orders so that we can walk through during the Zoom. Yes. So, C-Bar, I'm even suggesting one further that we all at least work on one or two that are the same. So we'll know, you know what I'm saying? Does that make sense? But I like the idea, certainly, that we are all doing it together. And that I'll make it so that we can all share, we can all talk. That makes so much more sense, y'all. Don't get me wrong, YouTube is great. And I need to keep doing this. I really do, because I need to keep building this channel. And so this time that we spend together is helpful. It's helpful since I got to sit here and watch the market all day. It's so nice to have people drop in and drop out. We got to find some other fun stuff to do too, y'all, because when the market is down, we should be playing games or something. I don't know. We should be doing something, because this QQQ for sure takes a nap from 10:30, 11 o'clock to 1 o'clock, 2 o'clock. She definitely taking a little snooze. So everybody else, you all have my email address. Lock it in, and I will pull this Zoom meeting together for Sunday. Let's see. I heard afternoon. So how about, what are you guys thinking? Maybe 2 o'clock? Is 2 o'clock too late, too early? What do y'all think about 2 o'clock? Yes, that makes sense. closing somewhat different for stocks, options, and spreads. Okay, so yeah, yes, it would be helpful. We all do the same. I think so too. Okay, so then I will, once I set the Zoom up, and I send it out to you, or we can agree right now, guys, that we could just do a forward stock with a strike price of $13, and we could do a call and a put with the same strike price of $13. So 2 Eastern Standard Time, and y'all have to sync with me because I think I'm on Eastern, Eastern Standard Time. I think. I don't know. We'll see. Okay, and Lucille, you're rescheduling your one-on-one? Perfect. I'll look for it. Lucille, what did you schedule through Calendly? If so, you can go in and reschedule yourself. Okay, 2 p.m. Eastern Standard Time works for everybody? Perfect. So Sunday, okay, so let me just put it in the chat. Zoom meeting or Zoom class, Zoom study group. Zoom study group, Sunday, December 17th, 2 o'clock p.m. Eastern Standard Time. And the stock that we're going to look at is Ford. We'll look at, and if y'all want to look at something else, just say it. I promise I couldn't care less. I don't care what we look at. But I think everybody, this is an easy one. We can start with at least this one. Ford, $13 strike price. And we'll do calls. We'll do a call and a put. Just to start. So somebody, we could even practice. I mean, hey, if you come already all the way to the class and you already have done it, that's a beautiful thing too. So here's what I wrote in the chat. Zoom study group Sunday, December 17th, 2 p.m. Eastern Standard Time. And the stock that we'll look at is Ford with a $13 strike price. And we'll do a call and a put, and we're going to like put in the stops. We're gonna do the whole shebangity boodle. It's Lisa. Don't clown me, because I still use AOL. You know what? I will not. Listen, you laughing. I got an MSN. My email address is MSN. We're laughing about email address. I'm so old school, y'all. Please. Okay, December. Sunday is, wait a minute, is Sunday the 17th or the 18th? Okay, so Sunday is the 18th. Okay, so let me fix it because I don't want anybody getting it wrong, y'all. So let me fix that. Sunday is the 18th. Okay, so I'm going to do it again. It's Sunday, December. I better change that for me. December 18th. 2 o'clock p.m. Eastern Standard Time. And does everybody agree with Ford? We'll do Ford at $13 strike price. We will we'll do a call and a put. And that's how we rolling. That's how we gonna roll. Hey, Miss Vice. Okay, I got your email. We are doing a Zoom call on Sunday, the 18th at 2 o'clock p.m. I just need everybody's email address so I can send you out the Zoom invite. And you guys need to drop here today a chart or another topic, because we'll spend some of the time, or maybe most of the time, with closing, getting our closing orders and stuff together. And Ford works for everybody. That's an easy one. We can get in and get out of there. Anybody need anything else besides closing? I tell you one thing I do want to, and I don't want to overwhelm us, because closings, we don't want to be there forever either. Because I think if we don't want to turn into that group where you meet every 2 weeks You wear people out. I think we want to get in and get out. Yes. It's December the 18th on Sunday, 2:00 p.m. Eastern Standard Time. And I'm just gonna peek over here and see what QQQ is doing. So she got on up there. Hey, QQQ has something for everybody today, y'all. Look, if you got in the morning, you got a nice little run up. Nobody should be mad at QQQ today. If you missed the morning run, you got that afternoon nonsense with the Fed chair. And even if you missed that, it was down. The low was 283. It's gone up $4 from the low. From that low, it went right up $4. So nobody should be mad at QQQ. Actually, it's going up $5. So, close to it. You could have made some money. Anybody could have made money with QQQ today, man. It wasn't easy. I didn't make the prettiest money, but it happened. That afterwards is even easier. And it's still 45 minutes left in the day. I don't know what this thing's gonna do, but I'm out. I'm not going back in. Okay. Any particular expiration date? Yeah, let's pick the expiration date. Want to do one like what would we typically do? We would typically do one a week or so out. Let me pull it up. I can tell you because I got my thing here. Matter of fact, I'll just go look at it right now. We said forward. And how about we do one for the expiration date December 30th? We'll use the December 30th expiration date. Is that okay, everybody? Expiration date. December 30th, 2022. And the strike price is $13. And we'll do a call and a put. Yes, I think we'll all be paper trading. We have to because it'll be on a Saturday or Sunday. So we'll all be working in our paper trade accounts. Is there anybody who doesn't have their paper trade? Anybody doesn't have Think Through Swim or some way to trade? Need to buy to open and sell to open. Click on bid and ask to create 2 orders. Okay. Oh, let me put that up on the screen. Need to buy to open, yep, and sell to close. Click on bid and ask to create 2 orders. Frank showed me that. And once I get there, I just don't know what to do, C-Bar. He showed me how to get there. I know how to get there, and I know, and correct me if I'm wrong, C-Bar does a green strip open first for the sell, and directly underneath it, I think it's almost 2 lines of red for the close. I think that's what I saw. So let me go back over here. I don't know. Let me see if I can share it because I will show you. But I still can't share this screen. Nope, I don't know what happened. Let me try it again. I don't know. That's weird. Sometimes I can, sometimes I can't. I don't. That's why I need to reschedule my one-on-one. Okay. But Lucille, that's great. Lucille, do you have your account? Do you have a TD Ameritrade account open already? I just need to know because at least if you have your account open, then maybe Saturday we could schedule your one-on-one and I can get you all set up so you'll be ready for Sunday. So I just need to know, do you, Lucille, do you have TD Ameritrade already? That I need to know. Are we to set up these trades prior to our meeting? No. We're going to do it together. But if you want to, feel free. If you want to practice, go ahead. Yeah, red is to sell and green is to buy. So when I click on that C-bar, I just want to make sure I got this right. When I click on that buy, I have to double tap on my Mac. It opens up. And the way Frank showed me, it's actually 2 at the same time. Normally, I would open up and I would only see the green. But when I open it up, the way you're telling me, am I supposed to see the green and the red together the buy and the sell, they come up together at the same time. Oh, okay. Lucy, I have a Schwab account. I don't think it matters. I don't know. Because Schwab and TD Ameritrade are merging. Schwab purchased TD Ameritrade. So I think in a minute, whatever platform you're using with Schwab is going to be Thinkorswim. I think they're going to merge, but I think they're going to keep the platform Thinkorswim. So I think you'll be okay, Lucille. I want to say yes. And if you're the only one that doesn't have Thinkorswim, I think we can figure it out. I do. I just think we'll be able to help you figure it out, or at least we can walk through it with you. No, we are buying single options to start. Okay. Then you're going to have to help us see, Barshoot. So we're buying spreads. Oh, yeah, no, I ain't buying no spreads, y'all. I'm just trying to master this one trick. Can we just I just need to get single calls and single puts down before I go venturing off. But see, L's been trading for a while. Are we setting these up? Miss Vice? Nope, don't worry. We're just letting you know what it is so that if you want to play with it, you can play with it. But please don't feel any pressure like to come to class with your stuff all set up all nice and neat. This is not that kind of class. It's okay if you don't even have your stuff set up. Maybe you just want to sit and watch. That's fine too. I don't want anybody to not participate because you don't have Thinkorswim or because you haven't done it before. No. We probably have snacks, y'all. This is going to be so, I promise you. If I could have y'all here, we'd have applesauce and graham crackers. No, ma'am, no stress. Just do what you can. Do what you can. Okay, so we're going to keep it simple. Ms. Vice, I will see you hopefully. No, it's, let's see, I'm sorry. Buy is ask, bid is sell. See, Bar, you be giving so much. Okay, and so I'm the poster child. Let me tell y'all, this is why you should not pay for a very expensive class before you have a base. Do you all know I pay for a very expensive class? Wait a minute, this is going to knock y'all down. I still pay them a monthly fee. They get paid a nice little monthly fee for me to be a part of their Discord, which I really don't use because I don't necessarily always feel so welcome there in that space. I don't feel free to ask questions, but I still pay. I didn't even know that buy is ask and bid is sell. I said what I said. Nobody ever told me that. Buy is ask, bid is sell. Y'all, don't be me. Let's get all this rudimentary learning. I downloaded the Thinkorswim. Good, Lucille. Okay, long as you downloaded Thinkorswim, we are in great shape. We in good shape. I think maybe we need to get you rescheduled. So Lucille, I'll reach out to you if you can. I'll reach out to you. I'll email you and then we'll do something. It's asking me for all the info again. Yep, don't do it. But here's the deal. I am available Saturday, 9 a.m., but we'll be packing to go to the airport. Okay, so you tell me what day is good for you. Maybe we need to do it in the evening so that you aren't rushed. But Lucille, you and I will chat. So let me see, chat with Lucille. About one-on-one. Yeah. To set up. Think or swim. Okay, so we got Lucille squared away. Let me see. Miss Vice. Come as you are. Whatever you got is what we're gonna work with. I haven't set up. I'm still watching. It's okay. I continue to watch and learn. Nope, that's exactly what this is. Got you. Let's see. Elle says, Sandra, this is one of the reasons that I didn't continue with the first group I was in. They were not welcoming to newbies. I know. It's not fun. They forgot that they were newbies at one point. Yes, I can tell this is my space. This is a safe space. Girl, they treated me very shabbily. and very poorly. I had to say, excuse me, I paid you money. You don't get to talk to me like that. Oh, girl, I got the ageist thing. I got all of it. Oh, gosh. I was like, let me out of here. Okay, so Lucille, you're available anytime. Let me see. But you're going to be on the road, so I need to talk to you before Saturday, ideally. I need to talk to you before Saturday. Okay, so I'll be in touch with you. Actually, they were downright mean. Girl, I feel like you might be a spy because you're telling my story. The second group I was in was great. Girl, yes, they were. We might have been in the same group. We probably need to talk offline, Elle, because I have never been treated so badly in my life. I mean, seriously, it was downright rude. They were actually rude to me. So there it is. I had said I wasn't going to tell. Girl, they were downright rude and nasty. I said, well, do Jesus. This how you treat the paying customers? Ooh. So no, I need to stop that too. I need to stop because I literally still pay them a monthly fee to do nothing. But I do check in on that Discord every now and then. That's why I was asking, does anybody have a Discord? Oh, you purchased the exact same contracts for $12.30? Oh my gosh, this morning. I think I got my spread right. I don't know what y'all doing. Y'all are learning by leaps and bounds. So Tara, can you meet with us on Sunday, December 18th? That's this Sunday at 2:00 Eastern time. We're gonna do a Zoom. Just Tara, I have a new email address. It's from Lack to Legacy, of course, at Gmail. But if not, I just want to make sure if you want to come, I'm going to send the Zoom link to everybody. I think I still have your email address, Tara. But if you could email me at fromlacktolegacy@gmail.com, that would be helpful because then I could just reply to your email with the Zoom link for Sunday. So that's what we're doing. Sunday, you guys, we have, girl, don't have me jump on an auto this weekend. Miss Vice, I'm trying to tell you something. You need to get down here with your pewter so we can get you hooked up. I'm telling you, and you gotta know my dear, dear, dear travel sister, Jackie. Jackie just moved to Merida. I love Jackie. Jackie has so much spirit, y'all. Oh my goodness. Yeah, I don't know that trading is her thing, but she is so full of life. Flexible and open, would like to do it before Sunday's Zoom call. I got you, Lucille. We will get you set up Thinkorswim, and we need to do it before Saturday to prep for a Sunday call. Now listen to this, Lucille. And this won't happen because I'm going to try to link with you either today or tomorrow so that we can do a Zoom and get you set up. Lucille, you have downloaded it though, right? I'm in the process of downloading Thinkorswim desktop on my laptop. Marilyn, please, if you can get it installed and if you can, just kind of play around with it, you'll be ready. You'll be ready. And if you get stuck, hit that link, schedule a one-on-one. I can probably get you in too, to be honest with you. I could probably get you in before Sunday and get it all set up and even walk through the first couple of trades with you too. Okay, so Lucille is all set up. I don't have one set up, but we'll soon. Okay, so Chloe, some of this stuff, I guess you could probably work it I'll let you work on whatever you want to work on, Chloe, because I was going to say, if you have, like a lot of us, I know I have Weibo on my phone. I have, what else? The other one, Robinhood on my phone. So I don't know if you just want to practice something, just placing the order so that you at least, even though it might be different from platform to platform, if you have any of those things, you don't necessarily have to have Think or Swim. That's what we're doing. But if you don't, we could still walk you motions if you have something else that you want to try. And if you don't have anything, still come, if you please. I will make sure that everybody gets, the Zoom link So let me tell you who I know I can communicate with. I can communicate with Elle via email, Marilyn, Lucille, and Lisa. I'm pretty sure I have Tracy's email address, Tara's email address, Frank's email address. I don't know if I have an email address for Kathy. Okay. So anybody who doesn't have Think Through Swim, just whatever application you have, just have it ready for Sunday, because we'll go through the Think or Swim setup once, we'll do that. And then whoever has something else, maybe we can swing through that too. I'm just going to peek over here, QQQ, see what she's doing to finish up the day. Okay, now she's taking a little down walk. Oh, no, that's forward. Sorry. QQQ. She's doing the same thing. 1, 2, 3, 4. Oh, it's the last half hour today. 3, 6, 9, 12. 285. Looks like she might be settling down too. 285. 43. 285. Sorry, y'all. 40. I'm just trying to see. QQQ is doing her thing. 285. 12. Hold tight, folks. Hold tight. She tanking. What the heck? 285. I just want to see what happens at 285. If she blows through 285, oh, it looks like maybe, okay, maybe we're gonna stop at 285, because woo, she was just tumbling from two. Oh my gosh, that happened in minutes. 3, 6, 9, 12. I turned my head. She went from 288 to 285, y'all. That was an easy one right there. We missed that one. I didn't see it. 288 to 285. 3, 6, 9, 12 minutes. I didn't see that little ditty move. That would have been sweet. I don't know if I went and where I would have got in, but that was sweet. 285. 78, 68. Okay, sorry, I got distracted. Okay, I have Robinhood. The way I remember, there's the sell and buy is with acronyms. BOA, buy on ask. Oh, SOB, sell on bid. Oh, good y'all. Somebody better write that down. I love an acronym. BOA, buy on ask. BOA, buy on ask. And SOB, sell on bid. That's incredible. I talk half my class through acronyms because it's an easy way for you to remember. Okay, Tony said, I set up the app and they concealed it yesterday because Kenya is a country on their fraud list. What? Aw. See, I don't know how to work around. That's a workaround. I don't know. I would imagine, I wonder if you do it on your desktop, like the desktop version like we're using with a VPN. Would that help? Would that help you maybe around a VPN on your phone? I don't know if you can do, see, I don't know. I'm dealing with sketchy tech over here in Mexico. My internet is sketchy. It just won't let me be great, because I promise you, I think I could be great if my internet just didn't stand in the way. QQQ2. Lord, 285, it's still going up. 28. I'm gonna leave that alone. I'm just gonna take this little win and mind my business and stay focused. Okay, y'all. I will be in New York for New Year's. Oh, cool. For New Year's Eve? That's going to be a good time. Well, Tony, that's going to be a wonderful time. New York City? All right, folks, do we have any other business? I think we kind of got this straight. We know one thing we're going to be working on are those closings. Is there another topic, though, that you guys want to? Because maybe everybody can bring something, maybe a video or an article or something that you read on any other topics. I'm trying to think, what do I need to work on? Y'all need to work on so much. I really do. I need to work on risk reward ratio. I need to work on I don't even need to work on it. I'm just not disciplined enough with putting my support and resistance up. But anybody else need something that they need to work on? I know I need to work on risk reward. I need to understand that and that analyze tab. So maybe I'll do some more and try to figure out how the heck that analyze tab works. I'll see if I can't pull some more, because not only do we need to have to open and close these, but we need to be picking the best contracts. And how can we analyze? So I think those two things kind of go hand in hand. But I know for a fact, I think it would be just good and wise to do the closing, that closing order. We need to do that. And I'm thinking how to analyze a good trade, before you even set the order up. Those two things make sense. They go hand in hand. So I will pull some things on that analyze tab. Maybe we could watch those videos together, you guys. Maybe somebody can make some sense out of it that I couldn't. I was sleepy, true enough. I told you, like, after we got out of trading that day, I flipped right over, made some calls, handled some stuff, and went right to that analyze tab. I was spent. That thing made no sense. It might as well have been in Greek. Okay, I'll see you in a little bit, Lucille, Chloe, all you guys, because the day is just about done. So we know what we're doing. I'll be getting an email out to everybody. If y'all don't get it today, don't be alarmed. But I'll make sure that everybody has it before the weekend. So that's it. And we'll be talking about one thing for sure. So that it should be sweet. It should be, like short and sweet. We can get in there, get in and get out. Shouldn't be an all-day thing. I'm thinking maybe tops an hour, And then we can look at the Analyze tab, how to analyze a good trade. I'll pull videos or whatever. If you all have something else, drop it in the chat. I'm going to continue to watch QQQ till the closing bell. We got about 20 minutes. Let's see if I can pull it back up. And if I don't see you guys today, I will definitely see you on Friday. So I don't think I'm going live tomorrow. I don't know. You all will know in the morning. If I feel like it, I'll turn the camera on. I'll throw it out there. But if not, then if I don't see you guys tomorrow, I will definitely see you Friday. I will definitely see everybody on Sunday. I cannot thank you enough, family. I cannot thank you enough for the community, for the support, for the love. And once we get together in a small, tiny group, y'all, we could talk numbers. We could talk about how, what's really going on. Thank you, guys. We'll talk again soon. Feel free to hang out. I'm going to still be looking at Thinkorswim. I'm going to be looking at QQQ to the end of the day just because I got nothing else to do. Thank you, Marilyn. I'll look for your email. Take care, Lucille. Bye, Elle. See you Friday. And bye, Chloe. Bye, Tony. Bye, everybody. See you guys either Friday or Sunday or both. Take care, folks. Yeah, I'm going to rest too. Oh, Marilyn, I know. We had a long day already. But I'm going to look at this stuff. And I think after this, I'm going to take a nap too. That's the beauty of it. We could take naps. Bye, y'all.
Cost. That's households down about $1.70 since the summer. It's also true for businesses. We've seen meaningfully declines in the cost of diesel, for example. And so those are, again, some promising signs, but also things that we know are happening real